look at your numbers, they tell you where you're stand, and they'll tell you how they feel about what you're doing at the company and whether you're being helpful. And I'm not saying they'll say, hey, listen, you're dead wood, partner, but I'm saying that your review will not go well. And then if you didn't have reviews, then it would be like, hey, easy come, easy go. But there are reviews, and the reviews are tough. And I've been in those reviews, and if you didn't do a good job, the review goes like this: you did not do a good job. And the people who are not coming in, well, they're per se not doing a good job. But nothing from Solomon, no update. Made it sound like Solomon's going around doing his thing. Oh, yeah, he's not. You got to be in for off. No, there's an expectation there. That said, the larger question, which we have entertained at this desk now for over 2 years, is to what extent has the workplace changed forever in terms of people's willingness to be there? Hybrid is clearly here to stay. Many newer companies don't have an expectation that employees should be in the are re-upping, but they are
Good morning. Morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 23rd of August. I'll be here with you until the closing bell. First 15 minutes, I'm not doing much of anything except taking some profits off the table. If warranted and applicable, don't always have profits to take, but when we're up 30, 40, 50% overnight in options, or 10 or 15% on shares. A lot of times I'll take profits in the first 15 minutes before the opening range high at 10 o'clock. You can see recently with Tesla and NVIDIA why we do that. Both of those hit highs yesterday and then retreated. So if you had been stubborn and thought to yourself, well, I'll just keep swinging it, you probably regretted that decision. So I like to take profits, then reassess the markets, not the other way around. Because most people, most professional traders, if they're up big overnight, they'll just take the profits, limit your losses to 5, 10%, whatever. 5% on shares, maybe 10, 20%, 25% on options. The math is always going to work out in your favor, usually. So the first 15, 20 minutes is when I'm taking profits off. I reassess the markets after 10. I'm looking for sloping VWAP. Sloping VWAP, not flat VWAP like we had yesterday. It was a slight slope downward, but here's the S&P spiders. You can see gradual move lower, but we never really made any kind of foray above the highs of the day. We just continue to stay below a descending VWAP, which is what you would expect in a bearish VWAP. The opposite for a bullish VWAP. So like PayPal yesterday was doing very well. You can see VWAP was up and to the right, so we want to be long. Pretty straightforward strategy. I don't know why people insist on trading flat VWAP. I guess some people like it. I'm looking for a sloping VWAP, either up or down. That way I know there's momentum. I also know traders are paying attention and are trading that particular symbol or asset. So you add relative volume to that. You got, I think we got an upgrade yesterday or two on PayPal, right? We had a lot of option volume. And much of that option volume is still there. From 59 up to 65 is what I'm looking at. The majority of open interest or swing positions are at 61, 62, 61, and 60. So in between 60 and 62 is where the bulk of the swings are. Let's go out to the next week. 2 weeks out, 3 weeks out, the monthlies. Okay, there's a lot of open interest at 60. We got someone swinging 21,000, or there's 21,000 in open interest. In the September 15. All right, so PayPal looks good. So I'm looking for sloping VWAP. I'm also looking for option volume and relative volume. If the stock has two times normal RVOL, we'll see that in the stock by the end of the day, but we want to trade it intraday. So we're watching relative volume. You can see here's PayPal on the daily. MACD is turning. Stochastics is about to fire off. Last time it fired off was over here in late May. It led to a nice rally from 50, let's say 60 up to 76. So even if you caught 80% of this, you made, 10 points, 12 points. The options did very well. Okay, 921 50-day. 921 were rising. We got rejected at the 200-day, so we're watching for another retest of these overhead moving averages, looking at the weekly PayPal. You can see we're still pretty flat, so I'd only trade options at this point. And I would do it with the strikes that other bigger traders, whales, if you will, are trading on PayPal in this case. All right, let's get ready. How much time we got? 5 minutes. Let me make sure Woody's up and running. Welcome to some of the new members that joined us this week. Okay. Let's see. 9:45. We've got S&P Services PMI Flash, S&P Composite, S&P Manufacturing PMI. So at 9:45, we've got PMI Flash, Manufacturing PMI, Composite PMI, new home sales at 10 a.m. Crude oil inventories at 10:30. Gasoline at 10:30. Distillates at 10:30. We got a 20-year bond auction. We got a lot going on today. And after 1 o'clock, there's no more news until NVIDIA earnings after the close. Scheduled for 4:20 p.m. Markets are anticipating a, 9% move in NVIDIA. Options traders are anticipating 9%. You can read a little bit more in the next 3 or 4 minutes before the opening bell. In the Gamma channel, there's a section talking about the implied move on NVIDIA, 9.1%. Implied volatility rank is 100%, highest in over the past year. Previous 2 quarters, traders were looking for 7%. So there's a lot of traders particularly worried about a blowout rip higher. That would be the shorts, obviously. So this is going to be an interesting day. My thoughts are, let's take some profits if the markets rise, if semis continue the strength, take some profits off into strength, maybe keep some on for NVIDIA. I'm planning on trading SMH. I already have some SMH calls, so depending on where SMH is intraday, I'm probably going to take some puts to offset SMH, looking for a big move in SMH in one direction or another. I'm planning on holding about 10 calls and maybe 5 puts. Or maybe I'll even it up, 10 and 10. You could also trade SOXL. That's already leveraged. I don't want to buy shares, so a leverage against the leveraged ETF is always kind of interesting to me. Nasdaq 100. Nasdaq 100 is 80% green. Peloton CEO. I don't know. I'd like to buy one at a discounted price. Gilead. Put it in the home gym. Overlooking the golf course. Let's see. Okay, top 5 on the NASDAQ 100. That would be the Qs. Gilead, Netflix, Vertex, Paychex, and Illumina. Where did PayPal go? PayPal dropping down the list. Looking for PayPal to hit 62 or higher today. Okay, we got less than a minute to go. Less than a minute. Okay, we're open. Okay, give it a few minutes for the markets to settle down. Okay, keep an eye on NVIDIA this morning. NVIDIA looking for it to hustle a bit higher. NVIDIA.
Consumer may be in a little more trouble than we think. And that was not the case when I took the job. Indeed, as we try to get back to 4,400 here at the Open, Jim's point about the consumer is reflected today in this call on Dollar General from Edward.
Apple up almost 1%.
Which means less internet competition, and a lot of the core customer, they argue, can't afford the membership.
Microsoft up 0.7. Watch the pharma stocks. Pharma, Bristol Myers, Merck, AstraZeneca, AbbVie. Watch them today. Let's see what's most active right now. S&P 500. Okay, we'll watch for that. NVIDIA. Okay, watching NVIDIA here. NVIDIA is on the move. NVIDIA on the move. NVIDIA is on the move. Stop 460 on NVIDIA. Let's see. Well, Costco has very little shrink because if you're stealing from yourself. Now, right? Because you're a club member. Hey, I mean, it's like going to the Elks and saying, "Listen, I'm not paying for the beer." You know, when you go to your Elks? No, never been to my Elks. Oh my God, David, we have a rooftop bar that we built at our Elks. Really? Looks like they removed. Looks like they removed Woody from the Financial Juice stream. Okay, so we'll miss that. SPY's moving a bit higher. Okay, BMY on the move. Kohl's had earnings that dipped a bit. Kohl's.
One coda on Peloton. Is there any tie between that and Wegovy? Because today Novo hires Thermo Fisher to be their second contract manufacturer, thanks to the Reuters source. Thermo's way up.
Yeah, well, I have to tell you, Thermo's coming back, which they were had a bad COVID hangover. I will say that everybody's
Just letting the market settle down.
The biggest read-through so far is from food.
NASDAQ 100 is still about 25% red, 75% green. Gilead's number one. Okay, we got a few pharma names and therapeutics and biotechs moving higher. Okay, looks like NVIDIA reversing now. It's a little early. Okay, looks like profit taking.
On the ability to, well, right now it's still a shot, but at some point it will be a pill. To take a pill that lets you lose or more.
ADI. You looking at ADI? Okay, cool. ADI. Analog digital. Looks like a double bottom around 165. There's support. Peloton. Okay, Peloton. Is it oversold to the point of moving back up to the upside? All right, Peloton. Almost tapped 5 there. I think it did pre-market. Yeah, it was down to 475 pre-market.
Now at 9:45 a.m. Eastern Time, get the US S&P manufacturing flash data for all. With a range of get the services PMI flash on the price 6.3 with a range of 54 to 55.5. PMI flash forecast 51.5 prior 52 with a range of 53.1 to 51.5.
You are.
Yeah, we're going to have a conversation about the FTC and other things. But you know, can we come back to Toll Brothers, which we mentioned very briefly at the top of the show?
What's the matter? I got that.
Nothing. Stock's up about 1.4%.
David, they cut some really good numbers.
All right, looking for a SPY to continue pushing higher. Peloton reversing. Peloton.
Okay, so 25% of homes are bought with cash. Those are people who are not really impacted by the higher mortgage rates. And Toll Brothers also said there's $2 million, $2 million houses, and they can't cure it.
Shorts covering Peloton. Down, was down 30 something percent. Oh, that was Foot Locker. Foot Locker. Watching NVIDIA. SPY. SPY looking for the follow through. First few minutes of the trading day, you got algos taking care of imbalances. Pre-market imbalances looking for a follow through at this point.
But those people may have to be in the market. Maybe they can't live with their in-laws anymore. I like my in-laws. I can live with them.
Merck, nice move on Merck.
Yes, we did. Oh, I don't say I said that. That kind of blows my cover. But we have cable out there, which makes it even worse. But David, I do think that when you look at the housing market, you're looking at a market.
All right, Merck is on the move. 111 is a big level on Merck. Merck. 111 is a big level. Okay, if we can get through this level above these key moving averages. Merck is at the 100 period right now. Okay, if Merck can follow through. Yesterday it was up and then got rejected. Okay, so let's see what J&J is doing. Wayfair, looking for a short on Wayfair. To retest the 50-day and rolls over. Watch Wayfair. Retail not doing so hot. Foot Locker. Wow. Foot Locker down 34%. I have never bought a pair of sneakers or shoes at Foot Locker.
Yes, this is all the Fed playing for time and beginning to win. And I think that that's really important. I mean, you're in a situation where I'm talking to people like the job hop. So the job hop to raise how much money you make is just done, David. It's done. Period. Put a fork in it.
And that's something you had been worried about earlier in the year.
Oh my! I mean, like Dutch Bro today, where he actually got an upgrade. I'm very surprised with Piper. I'm not sure about that. But Dutch Bros have been paying. They were posted.
Never been in a Foot. I mean, I've been in a Foot Locker. I've just never shopped there. They need another Michael Jordan.
Well, I don't mean they spend a lot of time focused on their one thing, and you've got a lot going on.
Oh, the Annihilator?
They may say,
Restaurants and liquor. Well,
I'm not going to open that theme park.
No, I'm just saying that it's not like
We've done a little research too.
I didn't pull up a turnip truck.
You did?
No, I lived in my car. That was a brutal period. I learned a lot about retail during that because I was trying to find places to sleep. But they won't take you right out in retail to try to sleep.
You were a young man.
I think most of them kind of nannies. They were open 24 hours. Kids great.
Yeah, delicious. Jim, that said, UPS workers do approve the deal there, 5-year contract.
All right, watch U.S. Steel grinding.
We talked about some of the profits going to come out of that, and I know you're still worried about a strike or what. At least it's Stellantis.
I mean, UPS, the market starts at 180. And market spoke, they think the crowd's going to make it.
U.S. Steel grinding higher.
Yeah, I know that Ford just put out a very expensive car, a coupe. I'm thinking about going to the Vegas.
Okay, traders figuring out right now, not much going on. Got Tesla gapping down after that move yesterday. Okay. Bitcoin hanging out where it was yesterday for the most part. Nvidia at the low. Opening morning low. Not much to do right now. We're just watching price action. Cisco. Okay, NASDAQ 100 is about 35-40% red now, about 60% green. All right, Zoom is moving up the list. Watch Zoom. Zoom might have something going on here. Zoom. All right, it's range bound, but you could see the top of the range at 75 at some point. 70 seems doable. 68, you got to get through the 921. It's above the 9 EMA. 21 days overhead at 68. 50 day just above that, and then the 200 days. So we got a lot of work to do. Zoom, but it's climbing up the list. Google looking pretty good. Google looking pretty decent. Yeah, Google looks good. Scott, I know you're probably listening. Google. TLT. Yeah, let's see what the 10-year. A 10-year, big move on a 10-year. Good job there, Scott.
He had indicated at the time when we spoke with Milken, I think that he was concerned in terms of what that might mean. But that deal as well, apparently, at least according to reports, going to be allowed to go through. All of this taking place.
Yeah, I'm looking for follow-through days. A 10-year yield backing off, 10-year backing off.
And you acknowledge there are two different strategies.
They are, and Jim, I do want to talk a bit more broadly about that, but I do want to point out as well an important case coming up for the FTC, of course, is one we've talked about a lot, which is Amgen.
All right, looks good.
That deal to acquire Horizon for some, what was it, 100 and.
All right, so TLT looking good. Option Hawk talking about that yesterday. Nice gap up on TLT. Netflix, we got 3,000 weekly 425 calls. Elevated action earlier. Yesterday looked pretty good. Netflix looked pretty good yesterday. Okay, Netflix looking really good. Netflix looking good.
Here's a few things I thought were worth sharing from that brief. Plaintiff's case hinges on a theory never before adopted by court that potential future rivals to two Horizon products may potentially be disadvantaged at an unspecified time in the future as a result of Amgen potentially offering payers a form of bundle rebates that has never been used before. And they go on to say, but even if that hypothesized bundling were viable in theory,
okay, nothing on Bitcoin.
Amgen is not going to bundle any of its products for any reason or at any time.
Oh, okay. Tick Strike's finally working here.
47, lower than forecast, 49. Services, 51, 51, lower than forecast, 53 spot 2. Composite at 50 spot 4, 50 spot 4, lower than forecast, 51 spot 5. This is the market there. That's the weekend.
Okay, PMI is out. PMI is out. Markets sound like they're moving higher. Market's going. Okay, PMI is out. Market's moving higher.
If one ever enters, nor is there any reason to predict that such a rival would be harmed by the transaction. They say bundling is not part of the rationale of planning for the transaction. And by the way, none of Amgen's millions of pages of documents produced suggest it would do so or is considered doing so.
Yeah, well, they're basically saying that there is no doctrine behind her thinking. And the staff doesn't believe in that.
I do want to make a quick point because we have talked a lot about Reacon. We've talked a great deal.
Yeah, PMI is out.
They're being aggressive, but they do have a view that antitrust policy for the last 40 or so years has focused almost solely on
PMI lower. Markets seeing shorts covering. Okay, so here we go. Good morning, everyone. I hope you're having a good morning as well. I'm your host, Cousin Benny. I'll be here all day. And I'll be with you for NVIDIA earnings as well, giving you the play-by-play. It is Wednesday the 23rd. Big news today is NVIDIA earnings, and we got Jay Powell speaking on Friday. Eurozone consumer confidence dropped 2%. Previous was 15. Actual 16, minus 16. All right, here goes the S&P going.
Every month but 1 month has been under 50 in the manufacturing. Now, let's go to the services side. 51.0. Less than expected, less than the rear view mirror. That's the lowest level since February. But it is now 7 out of 8 above 50 for services, even though
okay, moving on up. Moving on up.
does represent 7 of 8 above 50 as well. So it's completely the opposite on servicing deposit. They've been mostly above 50. Manufacturing
George
has been
Jefferson.
below 50. Interest rates have been moving down. Definitely
Sneezy, Squeezy. What was her name? Sneezy? Nickname. All right, Zoom is the top of the 100. Zoom. NASDAQ 100. Number 1 is Zoom. Let's see what Zoom's doing here. Oh, Zoom is on the move. I wonder if Kathy is buying Zoom. It's range bound, so you could see a move higher in Zoom. But you get the 50-day, then the 200-day. That's $1, $2 higher. So not my favorite setup. You know I like trending stocks. I like trends. Okay, this is very, very nice. Meta, very nice. Apple, back above the 100 period moving average. Apple. UPS signed the deal with the union. Good job. Thank you, Corey. See, I love the participation in the room. Teamwork. Can't say enough about teamwork in the trading room. Thank you so much for posting. You may think it's not a big deal, but it might alert somebody to something that they weren't paying attention to. Or it might be something the group as a whole wants to trade, like PayPal yesterday, like Nvidia recently, Netflix today as well, Apple. That participation may not seem like a big deal to you, but if you see something we're not paying attention to or I'm not talking about, post it in the trading room. That's what it's for. UPS, that was so yesterday. Yeah. I thought that they were still negotiating. So anyway, that's my point. All right. SOXL on the move, starting to move here. SOXL, what's SMH doing? SMH. There goes NVIDIA starting to reverse. NVIDIA. Okay, how many calls do I have? Okay, I got 10 of the Friday. 10 of the Friday 152s, semis, SMH. What do I want to do here? Buy the low. Take some puts at the high. Probably not a bad idea, right?
S&P back above 4,400, up 20 points. Some of the gainers include Netflix. Oppenheimer today says the market is not appreciating some of the multiple drivers, arguing we've only seen 2% of the benefit so far. Dow's up 88. We're back to
Okay. So PMI came in lower than forecast. So that's a good thing. Okay. All right. So we got our first yellow bar on SPY. TTM, that's a big deal, folks. All right. Minus 45. Okay. I'm going to post something in the trading room here shortly. Okay, while everyone is thinking bearish, not necessarily everyone in our trading room, but everyone out there That's super bearish. The tide's turned a bit. So most I'm looking for right now is a mean reversion trade back to 50-day, perhaps. Okay, there we go. This is for swing time frames, what I'm about to post in the trading room.
Let's get the gym and stop trading.
One of the worst hit groups is this consumer product group, which is usually been a good place to be. It's not just slow down. General Mills has just been awful. I read a note this morning, when Nielsen numbers just say that it's just
1% on the prime, minus
cereals getting crushed, fungible, but pet food for the first time. There's been elasticity. So no longer is it just blue buff. People are saying, you know what? Love the dogs. They can try to eat another kind of food. They're not teaching good food.
We're gonna get the wolf tomorrow, I think, right?
Yeah, I just think that there's a big switch in how you take care of your dog. Trading down. Dog never complains. Hell no.
Sorry, Ragu. It's not.
Right, who's gonna get used to milk powder?
Really?
No. He's got me that just food, or that stuff that my stepson ate by mistake. The looks like salami, going in the refrigerator.
Jim, what do you got tonight?
All right, we're gonna take the other side. We're taking the Schwab and Pet Fresh. No, David, it's not like that. And what people hate Schwab. The long knives are out, but we're not gonna do that. We're gonna go to the other side.
I see Deutsche today came out a little.
That was very, yeah, that was very nice. Now, remember, I made a mistake in Foot Locker. I'm going to talk about it 10:20 in my morning show. You own your mistakes, and that's how you get better. But it doesn't make you feel better.
Jim, we'll see you at 6.
Yeah.
Important day with NVIDIA tonight.
Oh
Money,
my! And
6 p.m.
Don't forget, ARM. You cannot have. You need to make race offer, which is the 2024 draft.
We'll see you tonight, Mad Money, 6 p.m. When we come back, Wells Fargo's Mike Mayo.
All right, we continue to move higher, S&P.
Opening highs here as the 10-year down 10 basis points.
Thank you, ABCD pattern on Google. Thank you, LA. I can't stress enough, folks. Teamwork makes this room what it is, makes it exceptional. Your participation, we've got several hundred minds, M-I-N-D-S, minds, brains working for us. Okay, NVIDIA, we got a size buyer of the weekly 520 calls, 1,000 of the September 29th weekly 520s. Okay, SPY, S&P. S&P. Money flow. Money flow, call it what you like. Money flow got to extremes.
Good Wednesday morning. Welcome to another hour of Squawk the Street. I'm Carl Quintanillo, David Faber, Leslie Pickett here at Post 9 of the New York Stock Exchange. Sarah Eisen has the morning off. S&P
Merck still going.
4210. We're all on a video watch today, but in the meantime, there's some bond buying going on as these global PMIs miss in Europe and the U.S. And we do have rates down across the board.
Yeah, and nice breather there for a change. We're 30 minutes into the session. Here are three big movers we're watching. Foot Locker shares slumping, missing revenue estimates, cutting its full-year guidance, and suspending a dividend this morning after net sales fell 10% year over year. That's stock down 33% right now. And here's another volatile one. Peloton also plunging, shares now more than 95% off their 2021 all-time highs. Remember that in the midst of the pandemic.
Okay, SPY looking pretty good. Higher lows on SPY. Okay, I just bought some 442 calls for Friday. Just bought some 442 calls for Friday.
Got a fair amount of data today. Let's get some new homes with Rick Santelli. Hagan.
Yes, this is July. New home sales expecting a number right around 700,000. Of course, that's super adjusted annualized units. 714,000, better than expected. Last month's drop at 697 becomes a bigger drop at 684,000.
Is that new home sales?
4% top, which you need here. This is the second best number going back right away. 715,000.
New home sales higher than expected.
Going all the way back to February of last year. So second best number since February of last year. And we all know that if you have a low mortgage and rent since you
New ho.
a preliminary benchmark revision to the establishment survey on jobs. We could be taking away 500,000 jobs. That's going to be coming out momentarily in. It'll be an estimate of the revision. The final number is in the January job report in February of 24. But more on this big new homes number. Diana Olick. Diana, your thoughts?
Well, Rick, it's a really strong number, better than expected, and really interesting because these numbers are based on signed contracts in July. So that's people out shopping, signing the contract, making that decision with the builder. In July was when
All right, PayPal's on the move. PayPal.
Higher in May and June again, but they moved solidly over 7% for the bulk of the month of July. Now we do know that the home builders have been using incentives.
PayPal's on the move.
Mortgage rates. But also, this report shows that the median price of a newly built home sold in July was down 8.6%. So builders are either lowering prices or they're offering more on the lower end, which means that home buyers are more active on the lower end than they are on the high end. Of course, we saw in Toll Brothers, they did much better than expected, so they're still pretty active on the higher end as well. I would also say that the inventory is a 7.3 month supply. That's more than twice the existing sales inventory. And a number I love to watch, which is the number of homes sold that hasn't been started yet.
It was actually very high for the last couple of months, but dropped pretty sharply down this month, which means that the builders are finally starting to work through those backlogs and get those homes out to buyers, because we know that they've had a lot of problems with material delays and with labor. So all in all, a very solid number for new homes.
Okay, so we got those calls working on PayPal.
Is hitting this 28-year low this morning as interest rates continue to be elevated. Home builder stocks down for the past 3 weeks. Joining us for more on the health of housing and the home builders is Stephen Kim, Evercore ISI analyst. Stephen has a buy on toll, target at 87. It's interesting, we were looking at some of the existing home data yesterday, Stephen, where you had supply ticking up, days on market ticking up, and now you got toll with this average order price miss. Are we seeing some inflection here in the trends?
No, you're not. Certainly not in the trends that we can reflect what had been going on through July. I think Diana put her finger on it. You have mixed issues that are going on in an environment where rates have been elevated. The builders are doing what you would expect them to do, which is adjust what they build to make sure that they're achieving affordability. In the case of Toll Brothers, you have some geographic mix going on that I think the CEO did a good job explaining just about 30 minutes ago on the conference call. So you really should read into that. The bottom line is that all of their forecasts for all the relevant metrics, whether it be revenues or closings or orders or gross margins, they're all going.
PayPal continues to make a nice move higher. S&P PMI numbers came out softer or lighter than anticipated, lower than previous. New home sales looking good. Netflix, nice. We've got a lot of stocks with plenty of upside. PayPal going. PayPal ripping here. Okay, looks good. Apple probably going to sell the 185s pretty soon if we can make another higher high. Microsoft, like to sell some covered calls on Microsoft as well. Probably the 330. Okay, the 105 looking pretty good. 105 trending.
I'd be interested, Stephen, to know when we talk about these incentives. The builders have been doing a lot of incentives last fall and into the winter to get buyers back. But then in the spring, they said they really didn't need to do incentives anymore because there was just so much demand. In the past month, though, on the Builder Sentiment Survey, we are seeing builders talk about incentives again, buying down those mortgage rates. That hits their bottom line. How much can they do on these incentives, and how long can they do it for?
PayPal, swing, working.
Buy down activity increase, particularly for builders that are catering to a more affordably minded buyer. There are limitations. There's a limit on how much a home seller can give to a buyer and still qualify for various mortgage products. For example, an FHA mortgage, you can give them about 6% of the loan value, for example. That's your limit.
All right, Google going. Nice move on Google.
But I do believe that you're going to see the builders increase their activity there if rates stay here or move higher, and that will put some pressure on their gross margins. And I think that we're pretty clear-eyed about that. On the other hand, we still ample demand for the product that they are selling.
Okay, talking home builders. Home builders are up 1.5%. XHB. S&P continuation looks good. A little bit of profit taking.
Get more aggressive with their share repurchase activity, and I think that that's something that you can also look forward to as you head into next year.
Stephen, just to follow up on your kind of outlook for 2024, what happens to this whole dynamic if we do start to see a cut in rates?
Well, a cut in rates. So a reduction in mortgage rates is just good for home building demand. It increases affordability, and it makes all kinds of things things look better. It basically gives the ability to raise prices or reduce incentives in the industry, because it doesn't actually do anything to increase the supply instantaneously, right? So it increases the demand. The supply is the same, and that has a very positive effect on your price, and that means better margin. So
44.25 next level.
Here would be nothing but good for the builders. There is a false narrative out there that perhaps if rates go down, that you're going to see a whole bunch of people put their house on the market. That might increase inventory, and that's bad for. Don't believe any of that. That's not true. That you might see more people decide to move, but that means you're also going to see more people look to buy, because a mover is a buyer and a seller. Their impact on the inventory isn't particularly significant. But I would say that lower rates, no question, better for builders next year.
I guess it depends on whether they buy or rent where they're going. I guess that's a dynamic we'll have to see flesh itself out. Diana, Stephen, thanks, guys.
Sure.
All right, pretty decent day so far.
Well, we are just a few hours away from a key test.
Man, can you imagine what the impact of NVIDIA is going to be? I'm just like visualizing the markets up and down. I don't know. I just think that anyone in business that hasn't been thinking about AI and how they can achieve AI in their business is asleep at the wheel. I would imagine most boards, most publicly traded companies, boards of directors, the management team, all thinking about AI. The technology department, working together, the CIO working together. That translates into business for AMD, NVIDIA especially. A lot of the industry group stocks, robotics and AI. So be very interesting to see what kind of demand, see it, concrete evidence, what the demand is like. I'm anticipating that'll be, whoa, look at this. Look at these numbers. That's what I'm anticipating. I'm not anticipating that companies all of a sudden decided they're not going to buy NVIDIA chips or don't want to buy NVIDIA chips. I'm thinking the opposite, I've read that it's 40 weeks to get one of their high-end processors. If I'm wrong, just post it in the trading room. A lot of you are technology professionals in the room. AMD.
Software, so CUDA and how they're going to monetize that. The second avenue is gaming. And you can't forget about gaming. That contributed in Q1 24% of total revenue. Has there been an upswing? Maybe some bears will say you don't need that most advanced chips for online gaming. So maybe that's where we're gonna see some weakness. But to your point, the stock movement, the options market right now is putting at 10.5% implied volatility with the stock aftermarket. So there is a lot. Expectations have also increased too, which helped bring down the PE ratio. So maybe that's a good thing, but no doubt because of that, there's going to be some volatility.
Yeah, the potential for a gamma squeeze here. I have to ask you about China because they've pivoted for that market, given some of the export controls on some of the higher quality chips that they've been producing. Is there an expectation that could crimp sales at all?
100%. And I don't think that's factored into the estimates going forward. Why is that? Because China's been said to be double ordering, rushing orders now because they're concerned about future export restrictions. Right now, they have access to already a watered-down version of a certain NVIDIA AI chip. So if China's ordering all of these chips now, what's going to happen a few months from now, a year from now, when they've already stockpiled to a certain extent, or if the United States completely blocks certain chips, right? So you have to factor that in. And it's funny because the China situation is almost opposite what you're seeing in other names and other companies, given the weakness that's coming out of the market. But to your point, that is a concern.
As far as the October guide goes, JP Morgan's point this morning was the line in the sand somewhere around 14.5 to somewhere that $1 billion or so, which would imply pretty crazy growth, even if there's a payback next year.
Yeah, so then how do you go from 14.5 to, even more. The last earnings report in Q1, they blew past analyst expectations by 50%, right? So can we keep that momentum going? That is the big question for NVIDIA, for a lot of these AI stocks.
Okay.
We saw so many AI themed S&P 500 names, and that's why the emphasis is on the report. But do you think that it can keep going in this momentum with these numbers after maybe a year from now?
I think there's a lot of people who would argue absolutely.
But even beyond that, so yes, because of the actual hardware, they need to hit that amount. So that is the big question. Or if supply is gonna maybe diminish that a little bit.
We'll see. A lot depends on what gets pushed out at companies like AMD and others.
Precise. AMD's Q4 is when their new AI chip could potentially come, if they go on time, right?
Keep talking about it.
Yeah,
We'll see.
Christina, thanks.
Thank you.
Huge report tonight when we get NVIDIA. Our roadmap for the rest of the hour goes like this: a retail round. The key names to watch as questions begin to grow around the consumer and, of course, inventory shrinkage.
Plus, more on the markets with Interactive Brokers Thomas Petterfee, who calls the soft landing wishful thinking and the big allocation move investors are making right now.
And Wells Fargo's Mike Mayo trimming estimates and price targets on the big banks. He joins us here at Post 9 to tell us why. A big show still ahead. Don't go away.
All right. Google. Okay, so we get a nice move today. Thank you very much.
The UBS nears the final decision on keeping Credit Suisse domestic bank and is preparing for an announcement as soon as the end of August.
PayPal. What's Tesla doing? Tesla, nice reversal on Tesla. All right, PayPal still going. The calls are plus 200%. All right. PayPal looking really good. I'm probably going to take some profits off. What I told you yesterday is that I'd like to take some profits off on PayPal and buy shares. I like what I'm seeing on the daily PayPal. I like the options stacking up, going out several months. It's a double bottom. The ones I have expire on Friday, so I want to take some of these off.
The retail round continues today. Shares of Foot Locker sinking this morning. Earnings match estimates, but revenue was shy. Meantime, Nike is on a record losing streak, on pace for 10 straight days of losses. That is the longest losing streak since the IPO in 1992.
All right, PayPal, let me just make sure I'm not selling these too soon. PayPal. Okay, PayPal is trading 51% of its ATR. PayPal.
Those downgrades, though, come after Dick's worst day on record. So not really sure what value they added for those who owned it yesterday.
Yeah, interesting timing there. And of course, it's been a very volatile retail season, earnings season. That dip is where we begin our next discussion. Let's bring in Jen Rogers-Nippon, who is the CEO of J. Rogers-Nippon WWP. What is your take on just this overall trend, rising theft from organized organized crime. It's been cited by Foot Locker. You say you've never seen anything like this shrink.
PayPal. Only 50% of its ATR so far.
It's never happened before. Why do you think it's happening now? And do you think it's reached a peak?
It's okay, Leslie, you can say I'm old. Yes, I think it has not reached a peak. I think it's not going to reach a peak until we figure out something we can do about this. And we're not getting any help right now from state, local, and federal government, I don't think. And we're not getting enough help yet from technology to figure out a way to make the goods unusable if you don't buy them. We know that, Lowe's has worked on that on RFID chips on power tools, but that won't work on everything. We have to have a better solution. And we have to figure out a way to keep the goods from being sold at full price on marketplaces, because that is killing the value of the goods when you can go out and buy the exact same thing at better prices, and the person who's selling it has no cost of goods. So that's a big, big problem. I don't see how it gets better until we can figure out a way to keep the theft from happening and punish the people who do, and neither one of those is happening right now.
It seems like retailers would be really motivated to solve this problem, given that it's been material in so many of their earnings during the second quarter. Why aren't they putting more resources toward this problem? Is it just kind of where we are in the cycle that they can't really afford it? Or is it something that's just simply out of their control?
Okay, so we can see that PayPal is only trading 50% of its ATR. $2. It's up 94 cents.
It's hard to put monetary sources toward it until you can figure out what you can do. You can't stop them from taking out of the stores right now. You can't put people in to manhandle the guy that's trying to steal stuff out of the store. You just don't have that flexibility. And you don't have the ability to call the police and get them there to do something about it, because we're not charging crimes for under $1,000.
Okay. S&P, nice little rally. Higher lows is what we're looking for. Higher lows, higher highs.
If you sell this, you're going to be in big trouble, and you can track it back to where it was sold, and you're going to have to authenticate it. But boy, that would be a complicated system to get in place, and would be an expensive system, and it would also be hard to do.
Janice, David, aside from obviously this huge issue of shrink and theft, really, what is your sense, given all the reports we've gotten on consumer demand right now? What does it look like from your perspective?
Well, think about it, David. We're putting record numbers of people through TSA and airports right now.
All right, so watching PayPal.
So it's not like
okay, let's see.
So are they not spending it on discretionary goods like we'd like them to be? No, they're not. But they're spending it pretty strongly on non-discretionary goods because inflation has run the price of that up, and they still got to buy it. So discretionary goods are both hurting non-discretionary, and experiential spending is hurting non-discretionary. But there is a little drift back toward goods.
Okay, semis on the move. NVIDIA.
We're slowing down on the experiential side a little bit and allocating a little more of those dollars into discretionary. And I think that will continue to happen every month right through the holiday. But, is the consumer not as healthy as they were before the Fed raised?
SOXLs, SMH looking good.
And not quite as healthy as they were before the Fed reduced the money supply at the fastest rate in the last 90 years? Well, of course they're not. That's why the Fed took those actions. They wanted to slow the consumer down. But the consumer's been pretty
Okay.
being slowed down.
SMH is going. Leslie, when you raise interest rates at record levels, you're going to have some cracks in consumers' ability to pay back their debt. So am I surprised that's happened? No. Did I expect that to happen? Yes. Are we at levels that are scary? Not yet. And unemployment is still below 4%, and jobs are still double what job seekers are. So
they're gonna have to press the consumer harder if they're going to get the consumer to stop. We're not at that point yet, I don't think.
Interesting stuff. Jen, thank you so much for being here.
Thank you.
Still to come this morning, Wells Fargo's Mike Mayo fresh off a new note trimming some estimates for the banks. We'll find out why and which names to watch here, although financials are green today as we got 1% gains on the NASDAQ. Stay with us.
All right, semis continue to work. All right, looking really good. The FANG stocks, let's go take a look at FANG. You know what it looked like? We were bouncing on Friday. We bounced off of the, what was it, the 50-day? It's all kind of blurring together. All right, so that's a nice looking chart, actually. Very nice looking chart, New York FANG. Let's see. Want to pull this line over and drop the opacity a little bit. All right, that's better. Okay, drop the opacity. Nope, not that much. Not that much. Okay, RSI. Remember RSI? We're looking for that to get back above about 50. That looks pretty good here. All right, looks pretty good for the bulls. Mm-hmm. Yeah, thank you, Grover. Thanks. What, you want out? Want out? Go see where your sister went? Oh, there she is.
Turning to financials, the sector coming off the longest losing streak since April 2022. But our next guest lowering estimates on JP Morgan, Citi, and Bank of America, citing less than expected estimated loan and capital markets growth, as well as fewer buybacks. Mike Mayo joins us here at Post 9 to discuss these moves. So you've got this whole regulatory layer on top of these things as well. Why are you doing this now? And do you think that the market's fully appreciated some of the overarching trends that you highlight in these notes as reasons for the lower estimates?
No, I don't think the market appreciates the game-changing nature of the proposed regulations. A decade ago, I said the big banks need to protect themselves from themselves. And you know what? The regulators did it for them. So I say thank you, regulators. And I thought it was mission accomplished. And as I look at the new proposed regulations, I'm like, wow. In terms of the complexity, the addition in costs, in terms of the marginalizing of the banks, more business going outside the banking industry, in terms of tougher rules to the U.S. than outside the U.S. And I think the banks are already going to get on a glide path to building more capital and hence a little bit less loan growth than you might have seen, less buyback than you might have seen. But we're in the middle of a big debate. This is a comment period for the banks to talk with the regulators, and we'll see how it all plays out. But no, I don't think the magnitude is appreciated. And September is conference season for banks on Wall Street. So, you know, look out when Jamie Dimon speaks. Just read his CEO letter and apply it to the new proposed rules. Wow, what a change in the landscape for the banks. So I thought the banks doubling capital, increasing liquidity. The loan loss has been half the level for the last decade than they were the prior few decades. Yet, I guess it's not enough. So grab your popcorn, sit back, and watch this big debate that's about to unfold.
Yeah, I asked him about these new capital rules when I spoke with him earlier this month, and he said they were hugely disappointing. You obviously seem to believe that they go too far. And one of the interesting things in your note is that you believe the Feds have basically said we're going to increase capital about 19% at the high end for some of the largest banks. You think the internal models will show that it's actually significantly higher, maybe even as much as 5-6 basis points higher than what the government is basically telling the market. And why is that? And what do you think that means in terms of just the overall estimates for credit, for buybacks, for capital buffers, and so forth?
Well, I do think the actual numbers could be higher than what the averages were.
All right, nice work there, guys and ladies. Looking for more upside. Okay, New York FANG index looks really good. 3-candle reversal. 3-candle reversal. Leading into this week, Monday, we took a little break yesterday, following through today. 50 days right overhead. Let's go look at the S&P 500, which, if you recall, was down 6% at its low point last week. 6% at its low point last week. 50-day is what we're looking for. I'm looking for a retest of the 50-day. What happens at the 50-day? We'll determine what we do probably next week. Okay, we're off just shy of 6%. Okay, looks good.
If you look at the 50-year record of banks, going back to Walter Richmond, CEO of Citigroup, he said countries don't go broke. And then you had losses of Latin American loans. And then after that, you had losses.
MACD is about to cross.
And TMT in 2001. And mortgages in the global financial crisis. So with the 50-year lens, you say, regulators, you're absolutely right. But with the 10-year lens, with all the reforms after Dodd-Frank, with the stress test, with the oversight, board of directors, you, me, asking so many more questions, and the de-risking that's taking place, you take on that last decade lens, you go, wait a minute, I thought we were done.
Well, Mike, a good review of history there. It reminds me a lot of my history when I started in '87 as a bank, dealing with all the consequences, of course, of those loans. But the private credit market now has grown enormously. It's taken an enormous share. Only would seem to continue. The banks obviously continue to complain. These guys aren't regulated. What do you expect will happen here?
Well, how ironic the week that Vice Chair Barr gave his speech.
Okay, looking really good. Looking really good.
Private equity firms are going to continue to gain share. Now, on the one hand, banks are and should be held to a higher standard. On the other hand, the question is, has that gone too far? And are banks giving up too much business to these non-banks? And certainly in the mortgage market, Jamie Dimon mentioned that on your show when you interviewed him, Leslie. Over 80% of mortgages are now done outside the banking industry. So the question is this the banking industry that you really want? So there's a balance between ensuring resiliency at the banks, back to the, look, I was there for 2 decades complaining about the banks and all the risk and all the misguided.
Nice.
Balancing the resiliency, but also having.
Okay, so that's a good point. People are posting different sectors. Farmer Jim just talked about some of the pharmaceutical names. Let's go take a look at Breath. Actually, let me look at this first. Breath, advanced decline percent. Where is the money flowing and why? That's what we're always looking for. Okay, so. Yep, looks pretty good. New York, the advanced decline percent. Once again, giving us a buy signal. Okay, so it's giving us a buy signal. money flow. Where is it going and why?
Safer banks in the $6 trillion investment grade bond market, they're going to have even more capital regulation. That's just pretty ironic for me from a long-term perspective. But you say, what's going on with bank stocks? Bank stocks are down. We said look out until the banks come out with the impact of these regulations. But at first, you had Silicon Valley fail. And then you said, all right, we're going to have a lot more banks fail. We had the 3 banks. They were in the S&P 500. They failed. No more big banks fail. Then you're going to have equity issuances. You didn't have that. Then you're going to have dividend cuts. You didn't have that.
Okay, advance. We got the bearish extremes. We hit minus 30%. Look for a bounce. Okay, so starting to work. NIMO. Same here. Bearish extremes, minus 108. Anything below minus 80, we start to look for a bounce. Okay, this all looks good. All looking good.
Given the regulatory environment isn't a necessary solution there as well. Mike Mayo, thanks so much for being here. Appreciate it.
Thanks for having me.
New highs, new lows. Making, all right, so we're just above the green, above the 0 line now on the 60-minute. New highs, new lows. Went from lower highs. Now we're making higher lows.
Family members of the missing to provide DNA to help in that search. The official death toll now stands at 115. According to a new court filing by special counsel Jack Smith, Mar-a-Lago's IT director, a key witness against former President Trump and his co-defendants in the documents case, recanted false testimony and gave new information implicating the defendants after he switched lawyers. That new testimony led to last month's superseding indictment. And a historic moment on the moon's south pole as an uncrewed Indian spacecraft touched down on the lunar surface this morning. India is now the 4th country to land on the moon behind the U.S., Russia, and China, and the first to stick the landing at the lunar pole. A Russian spacecraft trying to land there on Sunday crashed. Back to you.
Hey, thank you. Still ahead right here, fresh developments and a deal dividing the hedge fund world. We'll give you some of the details next. Plus, we'll have more of the market. We'll be speaking with Interactive Brokers. Come on, Petergy, stay with us.
All right. All right, we're at the highs. Little profit taking up here. Profit taking back to VWAP. Nice gains. Merck flagging at the highs. SMH flagging at the highs.
They're being reduced. Where are they? How are they being reduced? And if so, where is the money going?
So, the US has for a long time been the most stable frontier on the US. But now, that image of stability seems to be weakening politically, legally, monetarily, and even culturally. As you know, politics is driven by more and more by the two extremes. Legal troubles are mounting for both presidents. Lady Justice has lost her blindfold. The balloon in debt service and deficit spending is projected out by a decade seems to be spiraling out of control.
Tomas, is this more your belief, or is this actually backed up by the data?
Well, it is my belief, and it is to some extent backed up by the data. Yes, that's what prompted me to believe it. Yes.
So what is the data telling us?
The data is telling us that the markets are not are going up less than they used to, and more and more money is coming out of some of
Google.
the accounts, and some of it is going into other markets.
And what does that mean for your overall view of the equity markets in the U.S.?
I think that until we get our house in order,
Google's on the move.
Consider how to reallocate their investments, and this may continue up until valuations either become very low or some stabilizing news comes to dominate the news cycle. Right?
There is no doubt we have our share of issues. Thankfully, we won't debate here, but most of the allocations that I hear about are not out of the equity market to another equity market, but into fixed income, given the rates that we're seeing available for the first time in really a generation. Are you seeing that as well? Yeah.
Yes, but they go. The allocations go into the very, very large multinational tech companies that appear to be somewhat safe that the U.S. government, right? So, yes, that is also the explanation for the Magnificent Seven, right?
Yeah. So, are you one of those who shares a concern overall in the long term for the ability of the U.S. government to pay its debts, to pay its interest on its debt?
Yeah, no, it could be able to pay the interest, but it could be able to pay the interest with less and less valuable dollars, right? So, and eventually that is going to become unsustainable.
Necessarily a good thing. Tomas, always good to get your sense of things.
Thank you very much.
I wanted to move on to a story that Leslie and I have been following. Sculptor used to be called Oxford. We talked about it earlier in the week, Leslie, in part because there was another bid made by a group of well-known hedge fund managers in their own right, led by Boaz Weinstein, but including Glasper and Gillespie, that they said was in excess of the bid that was accepted by Sculptor from Rhythm. And now we have this essentially scathing letter from Daniel to the special committee members of the board that decided that Rhythm's
Okay, looking for a higher high.
superior to that of this group.
Google, the FANG stocks are saying, no, wait. We're going higher. FANG stocks say,
That really what seems to be motivating the special committee in turning away higher bids is that they would not entrench management's compensation. And Rhythm, in fact, reduced its offer because it acknowledged it would need to spend more money than anticipated in the form of long-term incentive plans and retention plans for senior leadership.
all right, nice follow through. Apple coming out of a squeeze. S&P 500 testing 44.25 is the next level. 44.25. All right, so yeah, I had to mute you guys there for a sec. At least I know who's listening. Yeah, I know who's listening there, David. How's things down in Texas? What's the weather like down by you guys? All right, Google, Apple, everything is higher. Okay, I'm going to sell the 185 calls here pretty soon, most likely. Apple, a Bigly. Microsoft, same. Microsoft looks good. I want to sell some covered calls on Microsoft, probably the 135, something like that. Not going to do anything right now. Having too much fun. The markets are very, very bullish. Upward sloping VWAP. Yesterday we had a downward sloping VWAP. Today we have the opposite. So you know what to do. DraftKings, continuation. DraftKings up 50 cents. Google at the highs of the day up 3%. $4. Netflix doing well. PayPal squeezing at the high of the day. Like yesterday, what's US Steel doing? US Steel hit 32. Let's see. I want to look at. There goes Amazon. Amazon on the move. Netflix. Okay, looks good. Nvidia. Nvidia. Let's go, Nvidia. Okay, Nvidia coming out of a squeeze.
Adopted under the Investment Advisors Act of 1940 would require more disclosure from funds to their investors on a quarterly basis. Additionally, the SEC
Oh, looking good, looking good.
managers who pass through fees related to things like an investigation into the fund's practices, as well as compliance, and restricting the use of subtracting the amount of taxes from an advisor clawback. It also seeks to level the playing field among limited partners by preventing preferential treatment.
Hi, Took Alert plus 800.
Now, this has been a very lengthy comment period. The SEC really watered down some of the final rules, some of the more controversial portions of the proposal. For example, it's not adopting a change in indemnification, which we reported on previously, which may have encouraged managers to make less risky investments due to a lower liability bar. Now, there's a staggered implementation period here, but the bulk of the rules should be implemented before mid-2025, assuming they pass, which pretty much everybody expects that they will, because these things are usually decided along party lines, and the Democrats have a majority. But interesting to see that kind of given what we saw in the proposal to the final version, they have certainly led away with some more controversial parts, and you had some of the trade groups that were readying lawsuits, prepared to really fight some of these areas.
Netflix pulling away from VWAP intraday. Netflix. Okay, Netflix is up $20 plus 20.
like that the MFA had basically said that they were looking to fight back on, as well as some of the other trade wars as well.
We forget how important these things sometimes are. I'm not saying we forget them, but we perhaps don't focus on them as much. Maybe government policy can dictate action for many years to come, both in banking, as we heard from Mike Mayo earlier, and of course, regulations like this on hedge funds.
Absolutely, and we were talking, as you mentioned, that these are shadow banks, and a lot of these measures will be costly, especially for managers who aren't currently doing them. But they won't change the overall way that the industry functions, and that was, I think, the key concern with the proposed rules, that it would just change the way that they operate. And so it seems, based on the final version, that won't be the case. Although we have yet to really see a full-fledged response from the industry at this point in time, because it has yet to pass. So we'll keep an eye out for that, and we'll bring it to you once we get it.
Meantime, session highs here. Dow's up 115. Watch Abercrombie adding some gains here now, pretty much at a fresh decade high, up 25% after these strong results and the guidance there. We'll talk about that. Their CEO is going to join us next hour to break down some numbers. Don't go away.
Looking good. Looking good.
So for options, they target Fed slash rate below 2% by March. Since the Treasury's rally seen Wednesday, buying of dovish protection has emerged, which targets a sharp round of Fed cuts by the first quarter of next year.
Netflix plus 21. Netflix wedge breakout.
Volatility hitting risk assets like Bitcoin as yields continue to climb. The crypto's in the green, but hitting its lowest level since June earlier this morning. Kate Rudy's got some details on it. Hey, Kate.
Hey, Carl. So Bitcoin is famous for its volatility, but it had been in this historically calm period lately. Analysts were calling it a time of investor apathy. The cryptocurrency was trading in a pretty tight range of just 4%. But that all ended last week in what some are calling a flash crash. Bitcoin saw its steepest percentage drop of the year. It was down 7.2% in a day, fell below $25,000, and it sliced through some key support levels. It broke the 200-day, 200-week, and
All right, that Netflix is flagging at the high.
Caught a bulk of options traders offsides. Implied volatility had been at lows last week, historic lows, and it's now roughly 50% below the long-term average in terms of implied volatility. That's according to Glassnode. And volatility now getting repriced in that options market, more than doubling for some of the short-dated contracts. A flash crash, as we're calling it, also wiped out a lot of leverage from that crypto system. $2.5 billion of futures contracts were closed out in a single day. That was a roughly 25% decline. And according to Glassnode, and a complete unwinding of all the leverage that had been built up over July and August. It was also the largest liquidation event since the crypto collapse last summer, about $230 million. The long positions were liquidated and forced to close in just a few hours. Back to you guys.
Hey, thank you. Kate Roman, before we go on this hour, did want to take a look at shares of Netflix, up over 5%. Now, the rest of the group...
They're figuring it out. CNBC is only about an hour behind you there.
Perhaps you may have thought it's because of hopes that the writer's strike may soon be resolved, although that remains quite unclear. The two sides are talking, though. It may well be this Oppenheimer note this morning.
Looking good, looking good. All right, S&P spiders looking really strong. Very nice. I have the 442 calls. We got the 442 calls Friday. Peeling some off. As we flag here, I'm taking some of these 442s off for a nice profit. Okay, looking for some more upside. Looking for more. I plan on a strangle on SMH. I'm not gonna trade NVIDIA outright. I'm gonna trade SMH. So I'll probably have. I've been thinking about this all day. I may change my mind again. I'm open to changing my idea or my mind end of day. But what I plan to do, I already have calls. I want to buy some puts at the high of the day. I want to buy some more SMH at higher strikes, calls at higher strikes as we move higher. But I'd like to have something close to a strangle with about, $1 either way, $2 either way. Twice as many calls as puts because I believe NVIDIA is going to blow it out. The calls, if they do blow out, will more than pay for the puts. If they disappoint and we drop, the puts will help with cushioning any losses. I just feel like doing it for NVIDIA. This is going to be a pretty big one. If this is anything like last time, I think it would be pretty good. It's a bet, basically. It could go either way with a little insurance. All right, S&P is still moving higher, looking good. We're above 4425 resistance. Let's go take a look at the videotape. What's this videotape he speaks of? I'm looking at, let's look at the combo strikes. Combo strikes on S&P. Okay, there's right here. This is 4405 right there. You can see this transition. We're above this transition zone. I like Tony.
Roger Ferguson on the possibility of not one more rate hike, but two, as we get closer and closer to Powell's speech on Friday.
And as we get closer and closer, the market continues to turn
Okay, so that looks good. 44. Okay.
We did, and obviously these are minor moves relative to the move we've seen overall higher in yields. But yesterday we spoke about how this move above
Combination strikes. This includes SPY and S&P.
that's restraining growth. It's the market's way of saying maybe we have too hot a period of reacceleration within a late cycle economy, and it's not that far from there to saying it's going to be too much. We're going to have to actually have a slowdown. So the PMI number coming in weaker than expected today on the back of Europe coming in, plus of course this kind of oversold levels in bonds got you this relief on the yield front. Reflex fade into stocks. I don't think it's game over for this little phase, but it's interesting to see the 10-year Treasury.
Somebody took some profits there. We're going to push higher. Okay, S&P is still on a buy signal. We just went on a sell just there, a little sell. Let's see how this goes. On the 2-minute, let's look at the 5-minute because the 2-minute tends to be noisy. If you're scalping, that's one thing. Still on a buy from this morning on the 5-minute.
Beating around the edges. People have relatively high equity exposures, but not excessive. So I do think that the yield stuff has gotten the outsized attention right now. It's not been about repricing the Fed. So to me, it's less about what Powell says about it, unless he's saying, look, it's much higher for much longer. So, I get the action today. We're all sort of waiting. Obviously, the NVIDIA stuff is going to be but I don't think there's a decent way to handicap it. To me, it's like market has to show its hand with the reaction. Yesterday's 481, but up a couple percent. Yeah. Do you laugh when people say it's the most important earnings print of the year? Well, I don't, in the sense that you do have this incredibly overloved, sort of overbought, big picture story, and frankly, the interpretation can go either way on any number. The options implied.
Let's see, what's VFS doing now? I see some people posting VFS.
Crazy. I've been doing this a long time. I've found no good way to figure out which way things are leaning and what looks like a more likely bet. And so to me, it's about look at the reaction.
What the hell's going on here? Why?
Does it give life to the AI trade from here on out? That's going to give a sense of which way the next few weeks might go. Finally, we woke up this morning, we're like, wow, Europe has some issues, and then we got our own, where the orders are down for the first time in 6 months. I mean, what does that say about Friday? Yeah, it says that I think nobody should be too confident about whatever we declare about the trajectory of the economy right now. That we haven't repealed the idea.
Okay, had something going on with Schwab there. Had to reboot Schwab. It should take a couple of minutes, if that much. Launch. Where's my phone? Oh, my wife has my phone. Shit. Okay. S&P. Spiders. All right, looks like we're going to go higher. Spiders look like higher here. I had the Friday 442s. I took some off right there on that little flag. And looking for more upside. SPY. S&P levels. All right, so I hope everyone's having a good day today. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 11:07 on the East Coast, Wednesday, the 23rd of August. It looks like we are hitting the highs for now. All right, maybe take some more profits off. I want to take some more of the 442s. I'm out, 442. I'm out for now. Okay, I'm all out of the 442 SPYs. I'm out, took profits. Okay, wow, semis are just kicking ass today. NVIDIA grinding higher. All-time high yesterday. We hit, what was it, 482? I can't wait for earnings. This is going to be something else. If you just take the demand side only, supposedly, I might be wrong, supposedly 40 weeks to get one of the most advanced processors. You got everyone and their brother. If they're not thinking about AI, especially corporations using AI to create efficiencies, to run processes, I don't know. SMCI is on top of that as well. Let's see what, I haven't looked at SMCI in a couple of days. SMCI. Okay, that's reversing. SMCI, nice reversal. Back above all the moving averages. 921.50 day. RSI rising. Okay, that looks really good. SMCI. Good job there, folks. SMH. Bitcoin's not participating. Not that anybody cares at this point. They're all focused on, most people are focused on tech, semis, the most active sectors today. Semis, SMH is up 2%. SOXL is up 5.5%. Robotics ETF, BOTZ is up 2%. XLK is up 1.75%. Builders are up 1.77%. AIQ, the robotics and AI ETF that I like to hold on to, is up 1.7%. Biotechs are higher. So everything's looking pretty good. Software is up 1%. So we want to take a look at the FANGs. Once again, the FANGs doing very well today. Apple, I sold some 180s. I'm probably going to roll some up to 185. Covered calls. Apple transitioning back above its 100 period moving average. Oh, what a fine day. What a fine day it is. Mm. Do, do. Netflix, PayPal. Oh, everything is looking good here. Tesla. Okay, 233 Tesla. Semiconductors. Awesome semiconductors. Thank you very much. PayPal looks like it wants to break out. PayPal about to break out. Okay, your ATR is $2 on PayPal. It's up 1, so it could run another dollar if it breaks out. More interesting right now is Netflix, semiconductors, Microsoft at the high of the day, software, technology, NVIDIA, higher lows and higher highs. All right, looks like S&P is going to go here. Spiders look like they're going to go. Okay, nice. Nice. All right, so sector-wise, we are 90% green, 10% red. Red sectors, energy, crude oil, small caps. Pharmaceuticals are flat. Utilities are flat. So about 90% green on the day. Semiconductors, tech, builders, communications, that's Meta, Charter, Fox, Netflix, Roku, etc. That's doing well. That's up 1.75%. Biotechs, though people aren't paying attention, there's talks about vaccines and new strains of viruses. They're going to most likely see continued buys on stocks like Moderna, Pfizer, Novavax, NVAX, which is trading at $9 now. Novavax, if that gets anything going there, Novavax. Maybe some leaps. Novavax, some cheap at the money leaps. They got a pretty big spread. The option's pretty big spread. Most likely gets rejected at the 200-day moving average. Novavax right overhead at $10. That's a speculative play. We don't know what's going to happen with vaccines and the whole COVID thing starting to come out conveniently into the fall and winter and the election next year. Oh, he's a conspiracy theorist. No, not really. It just, I don't know. We'll see. So watching Moderna, Novavax, the biotechs, IBB, XBI, LABU. Coming off the low. LABU double bottom. Okay, XBI double bottom. Multiple bottom on IBB. TJ Maxx is gone. TJ Maxx is gone. Did you see TJ? Looks like it wants to go here. TJ Maxx, retail. Looks like it wants to break out. Retail XRT. Dipping below the 100, 200, 9, 21, 50 day. Oversold, looking for a change in direction. Okay, I'm probably going to buy some puts up here. If we can't make any progress on SMH beyond this point, I'll wait for some more potential flow from SPY and the S&P. But I'm looking to buy some puts up here, probably at below 150. I just have a feeling NVIDIA from the demand side is going to talk about that quite a bit. Seeing Roku 80 calls, the 80 calls for September 8th. NVIDIA seeing 1,000 June 2025, 630 calls, selling to open. To buy 375 puts for net credit $25. Collar protecting a long stock position, most likely. Okay, looks like the S&P wants to go. Looks like it wants to go here. Okay. VWAP is up and to the right. S&P VWAP is up and to the right. Okay, transitioning. All right, starting to see U.S. Steel with October 29 calls. 5,925 at $3.90 with multiple interested parties in an acquisition. Thank you, Buford. Okay, we're continuing to move higher. S&P pushing higher. Merck off the highs of the day. Google having a good day. Google early ABCD pattern looks like B right now at 132.50 or so. A B pivot at 132.50. Now we just need to see price action pick up a little bit to confirm. SOXL following through. K-Web high of the day. Marathon. Okay, Bitcoin's starting to catch a bid here. All of a sudden, Bitcoin. Okay, Bitcoin got a bid. Multiple wicks. Down on the daily. All right, Bitcoin starting to move higher. Looks like it's caught a bid. Sam Bankman-Fried. Look good in orange, huh? Can you imagine? You spend a lot of your time in the Caribbean on the beach, drinking and having a good time. And now you're in a jumpsuit. Wow. Okay, looks like we're going to run here. Looks like it's buying. Looks like we're going to run. We're at the high of the day. I wouldn't be buying calls or anything up here, but we do look strong. I'd be taking profits off into strength. Look for BNC pivots, very strong. If we're going to be strong into NVIDIA earnings, we'll see VWAP price stay above VWAP. Any pullbacks will be bought. We'll be looking for volume on any pullbacks. Okay, so that will tell you that they're still buying. Otherwise, right now, I'd be looking to take profits off into strength. I had the 442s. Those are in the money now. Those are in the money. Initially at 90 cents. They were 90 cents. They are $2.77 now. 442s. Okay, 277. Okay, take some off if you haven't already. All right, what happened to my feed? There we go. All right, nice today. Continuation. Kava been rising. It was off a few days after earnings. Now it's starting to rise again. Kava. I sold the 50 calls. I'll probably roll those out. Probably roll those 50 calls out to maybe December, January for looking for a credit. Carvana up $2. Markets are bullish. Carvana high of the day. Shopify higher. Cisco continuation. Microsoft continues making higher highs, higher lows. Microsoft, thank you very much. FANG stocks look good. At the highs of the session, don't buy calls up here. Look for dips. If they're going to remain bullish into NVIDIA earnings, they'll buy above VWAP, hopefully. Looking for a move back towards VWAP at some point here. If you took your calls off, I had the 442s on SPY. Those were up nicely from 90 cents up to 277. And starting to fade a little bit now. All right, it's almost 12 o'clock. We got 25 minutes to go into the lunch hour. A lot of people will take profits off into strength. They'll come back later this evening. They go play golf, whatever. A lot of traders love the first couple of hours in and out, especially the West Coast people that get up early, trade for a couple hours before you have to go to work. 3 hours time difference. In and out. $8.35 on the West Coast. People taking profits. FANGs still look pretty good. NVIDIA, to repeat myself, I plan on potentially taking some puts at the highs, have a pseudo strangle. I was thinking about a straddle, but I bought the calls on SMH. Yesterday at the lows, they had just felt like NVIDIA was peculiarly sold. Shook a bunch of people out. SMH is still holding the highs right here. If we start to fade, I'll buy some puts up here. Probably in the 150s. I'm hoping that it's a blowout. You know, we used to wait for Apple earnings when Steve Jobs was still around. We would a lot of us would anticipate, we're talking 10, 15 years ago, would anticipate Apple would usually sandbag. They would underpromise and over-deliver, and we'd have these huge pops in Apple back in the day. I know Ziggy remembers these because Ziggy is a longtime shareholder in Apple. A lot of you have been around with us for, since the beginning, and we've known each other since before we opened the trading room. That's kind of what NVIDIA reminds me of now. And now you got a whole new genre with AI, software, hardware. That's why a lot of people think that software is going to be what has the longevity in the long haul. Microsoft, Google, NVIDIA has the beginning of the S-curve. If you know what an S-curve is, remember back in March 2016, first watch list was NVIDIA at $33.50, somewhere around $33.50, I believe, $33.50, $33.55. It was 33 something, $33.55, I think it was the number. And look where we are now with NVIDIA. Amazing. So anyway, looking forward to NVIDIA earnings tonight. Will it be helium leaking from the balloon, which the bears are hoping for? Or will it be another massive beat due to demand, with everyone clamoring towards chip makers, AMD, NVIDIA, SMCI? I can imagine the other chip companies like Texas Instruments, they have to be working on a chip of their own, right? It's a big enough market out there for lots of competition, I would think. Anyway, I'm really looking forward to that earnings tonight. So I'll stick around till after the close. NVIDIA is supposed to report at 4:20, I believe. And rather than betting directionally, I'll have a strangle. I'll have a strangle on SMH and SOXL. Maybe even the Qs if you're not interested. You could trade the Qs as well, or the S&P. Less so. I mean, I guess NVIDIA is pretty heavy on the Qs, but it's only about 2.5% on the S&P, so it's not a big mover for the S&P as much as it would be for SMH. Okay, let's see. NVIDIA, weight, and SMH. Okay, NVIDIA's weight in SMH is 20%. Okay, think about that for a minute. Okay, here's SMH. 20% weight in NVIDIA. So that should be interesting. So I'm going to do a strangle on this later. Okay, S&P at the high. Little fade. We're still above a upward sloping VWAP. Many of you are looking at puts at this point. Okay. If this does push higher and we take out the high of the day, that would tell me most likely just profit taking. If we continue to sell off, then we have to continue to reassess as we head back towards VWAP, if that's the case. Yesterday, we had downward sloping VWAP, and every time it looked like we were going to reverse and move back above VWAP, what happened? We got rejected right along this line, which is pretty much VWAP all day. Okay, so VWAP did this all day long. Today, it's doing the opposite. Okay, so let's look for a bounce. So as it gets near VWAP, in other words, if you got a short up here, it gets near VWAP, start taking some off. We're pretty extended. We're up $3.63 on SPY, nearly 1%, 0.8% right now. Okay. Okay. Yeah, Joe K is good. He's good. All right, so looks like that was profit taking. Do we push this higher? Price is what we are focused on, not our opinion. So currently we're on a sell signal on the 5-minute. Let's go to the 15-minute. Less noise on the 15-minute. Buy signal in the morning. Early in the morning. Okay, so early this morning we had a buy signal. S&P gap up. We ran up to 44.25, 44.30. And now we're watching this resistance and gamma level. That's the key question.
They say that this is a supply, not a demand story, which is a little trickier. The bulls say NVIDIA is the only real way to play generative AI, and it's the only company with financials actually being impacted materially to the upside now. Whatever happens, it will be crucial for the broader markets. NVIDIA is now a $1 trillion plus company, and its tangible benefits from AI, they give investors hope that other beneficiaries like Microsoft and Google.
One thing's for sure, whoever is right, the other side is going to be very wrong, I would imagine. Got a lot of calls, though. Got a lot of calls, so that's a little worrisome.
According to Gartner New Technologies, they go through a cycle. There's an innovation trigger and then a peak in inflated expectations before coming back down to reality and ultimately building back up to what I call the plateau of productivity, but not again reaching those heights at the top. See, there's generative AI right at the top of that cycle, according to Gartner. That's really the overarching question in markets about the technology at this moment and what NVIDIA could help answer tonight. I mean, that peak there at the top of that chart, that could last for a few years. It could last for a few months. We just don't know, but that's what we're hoping to get from NVIDIA.
Yeah, we were just talking about the S-curve. They were just showing something similar, but they were looking at the S-curve failing at the highs with generative AI. What happens if that plateau starts another acceleration cycle as businesses take hold of AI? Not just the chips, software, infrastructure. I don't know. We're all speculating. We don't know what's going to happen. All we can do is watch price action, how investors trade. All right, here we go. So as I was just saying, if we make a new high, that's going to tell you that last 15 minutes was just profit taking. Okay, S&P is trying to make a new high. Still on one buy signal today, no sell signal on the 15-minute. If you go to a shorter time frame, yeah, you could scalp this in and out, in and out, in and out. I don't feel like taking that much time, brain damage wise. This was a nice 5-minute chart from 4,400 up to 44.30 before we got a sell signal. Now we're starting to show signs of maybe another continuation. All right, so we're on a buy signal right now. Okay, SPY, S&P is on a buy again. Everybody's getting their 15 minutes today. on NVIDIA, what they think is going to happen?
I use it all the time now. And when you think about real life solutions like autonomy, which is where NVIDIA and Tesla first began with AI, which is really building things that will, think on their own and do better, like your car, and now you apply it to so many other things. This is just the beginning of what I think will be the decade theme, and that's what my fund does, GK, is we invest in thematic investments, and one of our big themes is AI and technology, and now it's starting to play out. So I think this is just the beginning. There will be a lot of volatility, but you must think long term with this theme.
Yeah, but having NVIDIA as your number 2 holding and all of the options activities running this one, and then Tesla as well, you're no stranger to kind of some interesting aspects of the options market. Does that make you a little nervous when these drinks come if it kind of doesn't go according to plan?
No, it doesn't make me nervous because I'm a long-term investor and I know exactly what's going on at Tesla and I know exactly what's going on in NVIDIA. And I've
Shopify, high of the day.
Factory in Austin. I've seen what they're doing with robotics and full self-driving, firsthand. So when you actually see the technologies, they're incredible.
Shopify reversing the downtrend.
Is happening, and it's been a while.
Okay, look at Shopify. Reversing the downtrend. Let's go take a look at the 60-minute over here. Okay, here's the daily. Let's look at the 60-minute. Okay. So you can see this downtrend. Now, we talk a lot about the 60-minute. All right, I like to watch the 60-minute for reversals in particular. All right, so here's Shopify. Here's Shopify on the 60-minute. Okay, where is it? It's above the 20 EMA. Where was it? Below the 20 EMA. Okay, Shopify. If you just watch this one strategy, a lot of times you can be on the right side of the trade. Most of the time. Okay, most of the time you're going to be on the right side of the trade. There goes Shopify. What's Google look like? Google. Somebody was giving me a hard time about Google recently. All right, so check the highs here. Google still needs to get going. But you connect these, the tops, you can see we broke out of that pattern. We're above the 20 EMA. What about Netflix? Netflix, nice move above the 20 EMA. And more importantly, what's S&P look like? S&P 500. Okay, so we've been looking for this for several weeks now. Since the high in July, we were looking for price to get back above the 20 EMA. Okay, so this is a big deal. This is a big deal. Put your big boy, big girl pants on. This is a big deal. Okay, we're going to take out the high, it looks like. Okay, so you're looking pretty good here on the 20 EMA. Transitioning.
Yeah, down 29K, not slowing growth, but actually losing 29,000 subscribers. And of course, it kind of makes you think a little bit about just this whole return to work policy and all the headlines we've seen in recent weeks. Zoom requiring their workers to return to work, return to the office at least 2 times a week. Goldman Sachs, there was some news yesterday that they're kind of throwing down the gauntlet, requiring everybody to be, which they really have for a while now. They've had people in the office 5 days a week, but they're going to be a little bit more stringent about making sure and trying to the office. So it kind of just is a little back to 2019 in a way. Which is probably a good thing. I feel like it's a good thing. We've been here.
Look, there's been no paucity of takes that the pandemic threw a bunch of curveballs that no sort of algo could have predicted, right? On demand shifts and sentiment shifts among the consumer, and obviously you're going to see some companies trapped on the other side of that because at the peak, who was really going to give up that growth at the time?
All right, having a nice day. Most of you having nice days.
Home renovation experience, that's kind of fallen off a cliff as well because people aren't home and kind of messing with things in their house anymore. So it's really affecting every pocket of the economy.
Of course, we'll race for NVIDIA after the bell. They're not going to be the only ones, by the way. We're going to get Snowflake and takes on hyperscalers. Very busy afternoon as we get ever closer to Jacksonville Friday. Let's get to the judge.
Shopify.
Investment committee laying out what is really at stake for your money. And joining me for the hour, Steve Weiss, Liz Young, and Joe Terranova. Let's check the markets here, show you what we're doing. Mentioned yields falling back, manufacturing PMI is weak, so yields drop, stocks are higher. Nasdaq's leading up 1.5%. Now all the marbles, Joe, are on NVIDIA, which you own, which you bought the end of April, and you rebalance. And now the pressure is on. Because this could determine whether this market swoon leads into the fall. Well, or not. This company has...
All right, S&P looking good. Shopify. That's a pretty chart. Shopify turning.
From the beginning of the quarter until May 24th, the day that NVIDIA reported, S&P was only up 14 basis points. Subsequent to NVIDIA reporting, NVIDIA rallies 38%. S&P rallies 8% into the end of the quarter. So this, without question, is going to be a potential catalyst for both price and time. It's a catalyst for price because we are in a seasonally weak period, and you have the potential here, if NVIDIA is able to deliver, for price to recover and overcome that seasonal weakness. In terms of time, if NVIDIA is to disappoint, then that seasonally weak period is going to extend even further. So I look at this, we're going to talk a lot about fundamentals, what the options market is pricing. But to me, this is about sentiment. This is about whether or not NVIDIA can change the sentiment in the market. And the reason for that, if there's a signature for the 2024 equity rally, it's NVIDIA. There's no doubt about that. It's not 200%.
Sponsored by
T-Strike. So
T-Strike allows you to actually deal with futures, forex, and stock instruments. Get a free trial at T-Strike.com.
Rates in the last month, that's critically important. I think we all get that. But given what the stock market, particularly the Nasdaq and tech have done in the last month, you can make the argument that this event this afternoon might matter more for where this market really is going to go. If the leader
All right, we're fading from the high.
loses its leadership on a more determined time frame, market's got a problem.
Yeah, I mean, NVIDIA's been the poster child for this AI run and all of this optimism that's occurred. And And some of it, perhaps rightfully so, they did increase guidance, and you could argue that there were fundamentals behind that. But the implied move is big. It gapped up the last time it reported earnings. Usually things back and fill that gap. I do think that there's a lot riding on it, and I completely agree with Trevor. This is a sentiment move. There's sort of this feeling of what if it's contagious, right? What if it goes poorly, and then that kind of ripples through the rest of the sector? That could absolutely occur. At a time before, right before, we get a Jackson.
All right, I'm nibbling on a few 150 puts.
If it's hawkish, that's probably okay because that's what we're expecting. If it's dovish, there's sort of this expectation too that, oh, that would drive a rally. They're not going to go as far as we thought. It's not going to be as strong. I think if it's dovish, it sends more of a message that they don't have the tools to solve the problem.
I don't know. I could see a dovish, speech from the chair sort of taking the air out of where rates have gone, right? And that rates have done some of the Fed chair's work for us over the last 3-4 weeks or so. Equity markets cooled a little bit.
Yeah,
Do you think the risk?
true.
You think the risk is to the downside or upside for rates coming out of Jackson Hole?
So it's not so much that I would expect a dovish comment because of what rates have done. It's more so there's also this.
All right, Shopify change in direction.
What if they start signaling that they'd be comfortable?
Okay, S&P.
If that's the message of dovish, I think the interpretation then by markets maybe initially is positive because it's a dovish message, but then later you start to get to the point where you realize, well, wait a minute, does that mean that their tools aren't fixing it? Does that mean that we have to give up on the target, we have to give up on the goal because we don't have the tools to fix this anymore?
So Weiss, what is riding on this afternoon in terms of where this market's going to go over the next 2-3 months?
Dumb question.
The next 2-3 months, I don't think a lot at all, frankly, is riding on NVIDIA's report.
Good for you.
Over the next couple of days, maybe, but what you'd see if NVIDIA misses, and I just want to give a shout out congratulating all the cutting edge analysts who have been trying to trump each other by raising their targets when the company's in quiet period. I
You're
guess
just jealous.
they found nothing fundamentally different.
You're just mad you don't own
So you built the
Man, Wapner is such a dick.
I don't own it. You must be particularly angry since you don't own any stocks at all.
Yeah, there you go. Now he just said it. He just said it. What I'm always thinking. Ah, I love it. Weiss just said, you must be really jealous because you don't own any stocks at all.
You're right. It's a Weissian comment that will turn out to be very accurate and fresh. So it'll matter if you let me finish what I was going to say, Scott.
All right.
I'll tell you why. It's only going to matter. It's going to matter to the tech stocks. It'll matter to NVIDIA. It'll matter to Microsoft. It may matter to Meta. It probably will. But what you'll see from that is you'll see a movement reasserting itself into so-called value names, into structural names, and perhaps into healthcare. So while the move in tech will be squarely there, it's going to help the others because all the Momo money that's went in there, that's going into NVIDIA today, is just going to come out of that and suck it out. At that point, when those next few days are over, you see an exaggerated move to the downside. That'll be the time to step in and buy, and we'll start this all over again. So that's why I don't think it matters. If anybody can tell you it's going to matter the next 2 or 3 months, they don't know what they're talking about, pure and simple. So let's not overdo anything on NVIDIA.
Okay. So you don't think, okay. So you don't think that NVIDIA's report last quarter mattered at all in the months that followed? Because, I mean, that's just
I'm not saying that. I'm not saying that.
You have to be saying that. How can you not be saying
No,
that?
I don't have to be saying it.
How can you not be saying that?
Why don't I stop talking? Why don't I stop talking? You just tell me what I'm going to say.
But how can you be saying that?
Oh, man, it's getting bad, man.
That's not what I'm saying. I didn't say that at all. Of course it mattered. What I'm saying is I don't expect a major miss to NVIDIA. I don't know what NVIDIA is going to do. I can't predict it. Nobody can, right? Nobody predicted that the revenues would be up 50%. I predict, though, you won't see another reset of their guidance or their quarter where they're going to increase it by 50% relative to expectations. I can say that with little fear that I'll be corrected on that. So that's what drove it. that kind of size. If we've seen NVIDIA come out and say, okay, revenues are 5%, 10% more than we expected, then I don't think you would have seen the move that we've seen. But that, you don't see companies increase revenue by 50% versus guidance. You just don't.
That's awesome. That was awesome. I've been waiting for that. Been waiting for that for months. I've been waiting for that. That's awesome.
Since their last earnings report, like this one has done in 3 months. I mean, that's what NVIDIA has done. You're all over this company, and you're going to be covering the earnings and over time. What matters most?
Data center revenues. Data center revenues, because that encompasses AI and all the AI chips that we're talking about. The estimates are $8 billion for this quarter, $15 billion in the following quarters. I think what Steve was trying to point at, maybe I'm misinterpreting it, is he's talking about the lack of momentum going forward. We can't just NVIDIA can't keep blowing it out of the water each time, 50% above analyst estimates. And part of that thesis could be supply. The supply chain, the fact that NVIDIA is completely reliant on TSMC to produce these chips. If they can't get the parts, how are they going to sell these chips? Yes, they have every single person under the sun wanting these chips from Saudi Arabia, UAE, United Kingdom, all the hyperscalers, they want to buy these chips.
That's great.
That means that the utilization rates at Taiwan Semi has to go up.
I love it.
Just, completely jump from where they are here to 50% more within just a few month periods. So we have to factor
Man, I've been thinking that for so long.
That could maybe keep guidance at a certain level for a little bit longer.
Steve Weiss won't be on there much longer.
But it still matters because, to your point, it did influence so many other S&P 500 stocks because of this AI push. And it'll also matter for other names that are going to lose out. The software names, because so much money is going into AI, and that's detrimental to the other infrastructures within the software database world.
It's sort of underscored the entire narrative around the AI buzz and shows the demand. Even if NVIDIA is not able to keep up with supply.
Calling out Wapner, sorry.
I wonder if Wall Street just rewards them based on the demand alone, figuring that, well, they'll just catch up at some point. But the demand is unbelievable.
Well, okay, so first of all, the chips are basically sold. In 2024.
I've been waiting for that for so long. You have no idea. If I ever went on CNBC, I don't know if I could contain myself. You guys don't provide actionable information. All you do is give opinions. And you get these people talking their book. I find the halftime report pretty helpful because you know what, Joe T and Stephanie Link and people like that are thinking, what they're trading, what they have investments in. Also like Melissa's show at the end of the day. But the rest of it's just like fluff. Anyway, I know some of you like Steve Wapner. He plays the antagonist.
Do you agree or disagree with Weiss that it doesn't matter?
I disagree because I'm beginning to. The risk is, to me, the disappointment in which a company. This is the one single company that's validated the entire AI thesis and the belief that the 50%.
People getting testy sometimes, huh?
In the coming years,
getting testy.
AI server chips. This is the company that has basically told you when you think about servers, AI servers right now are 7% of the overall server marketplace.
Google starting this football season NFL Sunday Ticket on YouTube, and YouTube TV will be fully integrated into Google TV in the US. Blah, 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 blah. All right, so it looks like Google News. Okay, this is good. Watch Google. Watch Google.
It says, you know what, there was just way too much fraud in not only this stock, but the whole AI narrative. If they do what they did last time or anywhere close, don't they validate the whole story?
look, there are degrees of disappointment.
Thank you.
And there are degrees
Thank you,
of
Rob.
surprising to the upside. So it's not black and white. So you have to parse through it. Look, data centers are slow. They've been slow for a long time. Are you going to see the reacceleration? Yes. You're not seeing it right now. I can tell you that from the information that I have from talking to many companies on the private side, the ones that report, you're not seeing
Kramer really believes what he's saying, I believe.
for AI, so you need much more storage. And by the way, cloud's only 25% penetrated, so you've still got that tailwind. However, if they come out and say they missed because of data centers, it's not going to blow up the AI story. If they come out and they say we've overstated the demand for AI, then of course it will. And of course, over the next week, maybe 2 weeks, the market's really going to get hurt because it's been driven by not the AI story necessarily, but just a multiple expansion, which has been abetted by AI. So I can't say conclusively it's black, it's white. I just think Jensen Huang is way too smart to come out and said what he said last quarter, not be able to follow it up with something this quarter. I mean, think of the reputational damage to him personally as a CEO if they miss this quarter. I'm talking about his guidance.
I know what you mean. I want Christina to comment.
I know what you mean. I know what everybody means.
And he was very bullish on AI. They're constantly coming out with new products.
Yes.
VMware just even announced yesterday. So that is a bullish sign for the commentary that's going to come out of the call this afternoon. But to your point, before speaking to Steve, you talked about validating this earnings report now. I wonder whether it'll validate.
Bitcoin's still going, by the way. Bitcoin's still going.
And then after that, what is that reoccurring revenue? Right now, NVIDIA benefits from the AI training part, but there's the AI inference part where other players can step in. Not only AMD, but in-house players like Google, Microsoft. All of these guys are coming up with their own chips to keep the costs in-house, to keep the data in-house. And so that's a threat, a year from now.
Well, this whole thing is a bet on the future. It's why investors are willing to pay 50+ times forward earnings for NVIDIA, or whatever above market multiple they're willing to pay Liz Young on any of these names.
Bitcoin's still going.
And what this technology is going to mean, and then the major players that are going to take the most advantage of it.
Right. Well,
Bitcoin's still going for what it's worth. It needs to reverse off the daily, but it's moving back to the top of the range. Not really paying much attention to it. Merck at the highs here, pulling back. Google.
This is not something that we're going to get justification for or gratification for by the end of this year. You look at a forward PE ratio, that is on a forward 12-month basis. These valuations, NVIDIA in particular, is right now trading more than 70% above its 200-day moving average. That is frothy by any definition. We are probably not going to get the satisfaction that by the end of this year, it deserves that kind of valuation. I don't think you're going to get that satisfaction on any of these stocks, which is why it is a sentiment play. If there's some give back in this multiple expansion, I think all of them give a little back. That doesn't mean that it has to be some huge crash. That doesn't mean that it's some big crisis. It's probably healthy, frankly, and then it starts to trade like a real theme, which is years long. I don't think it's the wrong theme. I think it is something that's going to transform the industry. I just don't think it's going to happen by December 31st.
Well, 4 hours from now, we're going to know, or thereabouts. And Christina Partsinevelos, we will see you then, and I can't wait for that. But we'll see you in closing bell too.
Of course,
we ramp
every
up
day.
and get the countdown to that. That's Christina Partsinevelos. Great to see her all over NVIDIA. I do want to get to the other big story of the day, and that is the retail rout. I think, I don't know what else you call it. Foot Locker is our chart of the day. Why it's getting smoked. Worst day ever. They paused the dividend, softening trends in July. What else can you say for a stock and a chart that looks like that, down more than 30%? Nike, by the way, is down 10 straight days, so that's a segue into that. Dick's Sporting Goods had one of its worst days, if not its worst day ever, the other day. We talked to Steve Weiss about it then, who I find out today has added on that weakness to DKS. Mr. Weiss?
Yeah, so let's look at these. Nike, a big reason why Nike's down is because of their exposure to China. And then that exposure has been translated into what's happening with Foot Locker. Foot Locker's just a mess. If you walk into one of their stores and say, like, what the hell am I doing here? You know, are these people dressed up as refs? Or, you know, what's going on? So Nike has cut back their exposure to Foot
Wow,
Locker.
Dick's Sporting Goods.
Where they increase their
Yikes.
exposure, they've increased it.
Wayfair bounce back to the 50-day.
The issue yesterday
Depends on how it reacts to the 50-day. Might be another short.
but I think we need to start over again. So we've seen these kind of periods with Dick's before. We've seen it with basically a lot of retailers. And I think at this level, given the comparisons we're going to see going forward with margins, keep in mind, the company said yesterday, gross margins will surpass their prior forecast and be higher. And to me, that's so traffic's still good, outdoors a little weak. I think overall the stock is very reasonably priced here and poised for upside. This is a good management team. So I added a little, did not add a lot. Stock opened up very weak on back to Foot Locker news. I think I'll do fine.
So, Joe, you own Nike, so you got a dog in this fight.
Sure do.
I don't even pardon the pun. I mean, it's a big dog. Dog's got fleas. What's going on with Nike? Down 10 straight days.
So listen, 5 weeks ago, Foot Locker's last quarter was the beginning of the breakdown for Nike. And I talked about it at that time. Nike was added into the ETF.
Nike down at 80 would be a good entry level if it bounces. Nike. All right, here's Nike.
October 31st is the opportunity.
All right, let's take a look. 5 years.
But there's been a critical breakdown in momentum. There's been a fundamental decline as it
Okay, so if it doesn't stop at 80, the next level on Nike would be 60, 58 to 60. Yikes.
Valuation in retail means that you take ownership of something. Well, look at Target. Target's right back to a 52-week low once again. Someone tell me Target is cheap, okay?
Lower high, lower low.
Any of us are smart enough to figure out how inventory management's going. Are you Macy's? Are you being promotional to work off inventory? Are you Abercrombie? Are you Abercrombie? Or are you Kohl's? Are you Kohl's that was able to actually do the proper inventory management? So your point, Urban Outfitters, Abercrombie Fitch, Darrow Craig, off-price
ANF,
TJX, which we own, thankfully, in the
ANF shows you how much I trade this one. Abercrombie on the opposite direction. Kohl's, TJ Maxx. TJ Maxx still going. What's Elf doing? Elf. Okay, a little fade from the highs on the monthly. Elf.
I think 3 years ago, my remark to you at the time, Scott, was as it relates to fitness, a mirror and a blood test.
Nice bounce at the 50-day. Elf. Speaking of bounce, let's go take a look at the watch list. Most of these stocks had oversold stochastic, which tells me to look for bounces. There's Adobe. Nice bounce there. Watch list.
I did. I both was long it and I'm short it, and both turned out okay for me unusually so. And I also, my family has 3 bikes.
It's the watch list plus the extended watch list in the lower panel. A lot of these look good.
And then a lot of them can turn to clothes hangers. So I think that's the issue.
Netflix.
Around the business. Look, I still enjoy it.
Par Pacific.
But, you know,
Energy. TJ Maxx trending. TJ.
So I'm not
XP. Trying to break out. Ross Stores following through. Ross Stores looks great, huh? Ross Stores.
And later, after 10 years in the National Football League, our friend Brandon Copeland will join halftime to make a special announcement today. Don't want to miss that. He's in the house, and we're back in 2.
All right. Everybody speculating. Oversupply, under demand, over demand, under supply. NVIDIA. So rather than trying to pick a direction, I'm just going to take a triangle on SMH, looking for a big move. Either way, 9%. 9% is what, as of this morning, 9% was what they were looking for on NVIDIA. Where is NVIDIA right now? It is trading for 66. So 9%. That's $41, $42 plus or minus. All right, SMH, I'm thinking $2 either way should capture a pretty big move. Let me see what SMH. Man, I'm hoping they blow this thing out. SMH. The dollar, the 10-year, and the VIX continue to move lower. Three amigos continue lower.
Welcome back. We don't see any upside from here into year end. That's the big call from JP Morgan this week. Joining us now is today's halftime headliner, Dubravko Lakos, Chief Global Equity Strategist at the aforementioned JP Morgan. That wasn't your call, though, right? That was Marco. A lot of it, right?
It's our research call.
Okay. So it's a house call.
House view.
So the rest of the year is not going to do anything?
But we think it's capped because you got a multiple that's basically hitting against that 20-turn ceiling. You have a cycle that, in our opinion, is aging and not getting younger. You have positioning that definitely was on the low end earlier in the year, but now I think the boat has gotten filled up there, and sentiment is definitely much more bullish. You have monetary policy remains restrictive, and we're of the view that Fed is not going to be easing anytime soon. We can talk about do they hike more or not. Cost of capital remains prohibitive, and fiscal, what people forget, this year has been a massive fiscal easing year. $1.8 trillion in government spending. Next year, that's going to get tighter.
But what about the economy? Because the economy's better than a lot of people thought it would be at this moment in time. Does that trump everything else or not?
So I think a lot of the resilience in the economy is coming, I think, from this very strong fiscal tailwind that we've been facing. And then, two, I think from the consumer that's been spending above trend. But what you're seeing also on the consumer and the household side is an increasing bifurcation between upper and lower income. Lower income continues to get squeezed. And there's increasing utilization of credit cards and leverage now. So I think it's sort of pushing us more and more into a corner.
What do you think that the chair is going to say at Jackson Hole this week? And how do you think the market ends up reacting? Because last time, remember, 8 minutes was enough to sink the market down to its October lows after Jackson Hole.
So I think, I'm not even sure it's going to be that big of an event. I think they'll just, emphasize, again, data dependency. I think if you look at what the bond market is telling you is that, hey, they could do maybe a little bit more, or they could hang around the current level for longer. I don't think you're seeing any sort of strong weakness in the recent print that suggests. So I think they stay put. Data dependent.
The notes that you just gave our producer before you came up here, a hard landing is inevitable. So you don't see soft landing, no landing. It's like,
I think there is no landing until you get to hard landing. I don't buy into the soft landing thesis. I definitely don't buy into the Goldilocks thesis, like the best of both worlds. And I think it's just the whole thing is just the
Ross Stores. All right, I'm gonna go back to S&P. 15-minute, we're still on a buy signal since 9:30.
and that's been keeping the boat afloat. But what happens if it gets pushed out to the degree at which then the Fed is actually done, if not cutting?
Netflix still grinding higher.
Enough for long enough, then it offsets all that.
My plan is to have 20 of the SMH, 20 of the SMH calls and 10 puts, leaning more bullish. The 152 call, the 150 put, maybe the 154. I got some 152s already. 154. Plus or minus $2 either way. Yeah, we should get a big move. We should get a big move on SMH.
And this year, you're basically looking at $2 trillion. So I think that's what's keeping the boat afloat. But I think it's also a reason why inflation and rates and so forth are also sticking higher. This guy hits a good tennis ball. You got a good volley back at him, or what? Does he get any winners?
I do, but Dubravka, with all due respect, what you haven't talked about is this contribution from technology, from AI. We have leadership finally, once again. I understand it's concentrated to the Magnificent Seven. In the environment that you're describing, is it that the Magnificent Seven is going to have a significant breakdown? And the reasoning behind that would be what?
No, so I don't think so. Our view all year long has been centered around cost of capital. And I still think that remains the number one thesis that every sort of portfolio manager should focus on. And that takes us to the fact that you need to continue to overweight high quality, good balance sheet businesses. The Magnificent Seven or Five, whatever you want to call them,
I hate that. I hate that name. I guess I didn't like FANG either at first. And it morphed into FAMTang and all sorts of crazy stuff. Yeah, it's been consolidating at the highs. S&P has been consolidating, squeezing, if you will.
The part that I find extremely puzzling is you have long duration stocks, growth stocks that continue to re-rate over the last few months. And what are real rates doing? They've gone up 100 basis points in the last 3-4 months.
So maybe that all that does is just throw some cold water on the whole narrative that long duration assets are so tightly tied to where rates go. Maybe it's just not that simple. Maybe the AI story is as powerful as people want to suggest it is.
So our team, and again, I'm going to bring my colleague Marco out here. I mean, we've published a number of extensive primers on AI, ML 10 years ago.
We've read all of them.
I think the AI thesis is powerful. It's a secular thesis, but this is more like, you're going from version 3.0 to 3.5, and it's not like something, a new breakthrough, if you will. So I personally think in terms of what's priced in, is a lot. It's a bit overhyped.
Even with NVIDIA's guidance? Right? Well, that suggests you could be going from 3.0 to 4.0. Forget to stop halfway through.
I'm not going to comment on individual names. NVIDIA, I would just say, is a very idiosyncratic situation.
I use it as
you
an
got China,
example.
you got Saudi, whatnot. But yeah, and there's a few stocks that will benefit, the infrastructure plays. But in terms of AI driving massive productivity gains for the broader economy, yes. But like 3 years from now, 4 years from now, not in the next 12 months. We have so many other macro headwinds to worry about. Geopolitics, cost of capital, balance sheets deteriorating, households, balance sheets. So, yes, it's a powerful theme, but I think that people sort of hold on to it a little bit too much.
What do you need to see to which you would say, you know what, I'm wrong. I miscalculated.
So very simple. Very simple. The preemptive Fed easing. Fed starts to ease rates. Let go of, call it this supposedly 2% inflation target. Forget about what's going to happen to inflation break-evens, but let's say they start to ease, it's definitely going to prolong the cycle. And if magically the government comes back and says, you know what, next year we're not doing $1.5 trillion government spending, we're actually going to do $3 trillion, of course, party goes. But more inflation, higher rates. But ultimately the inevitable happens, which is balance sheets are getting smoked.
Like there are two inevitable.
All right, so right now I'm looking at all of the sectors, okay, with IBB. Most of the sectors coming off of oversold, more gas in the tank, if you will. If we do get a bounce, I would rather be where we are right now and have stochastics at the low rather than at the high, obviously. Potential for these to all turn.
So again, it holds until all of a sudden it doesn't hold, and then there's a peak. So 12 is a rough number on a multiple. Rizjan?
Yeah, look, I'm with you 100% on the economic story, that the cycle is getting older.
What do you mean, Mondo is too fake? That's as real as it gets, man.
The idea that if the Fed changes, right, has to save the day forever and for always, which really just bleeds back into inflation is here to stay. Rates are going to stay high because the cost of capital is going to stay high. The Fed is going to get what they want eventually by constricting capital available in the economy, ruining demand, and we still get to the same place.
Yeah.
Down and in a recession.
Adrian.
Maybe takes another 6 months to a year. So I don't think it turns bullish at all. Really.
Yeah. So first of all, you mentioned a lot of ifs.
Right.
Secondly, I don't think that rates need to go higher. I think just if rates stay where they are, and that's our house view that they stay where they are, that continues to deteriorate balance. I think the worst nightmare for us is the easiest way out of this would be let's get a
All right, S&P continues higher.
all these balances get sort of rebalanced, refied, and so forth, and then we move on. The bond gets pushed out 5 years. But if we sort of stay in this prohibitive cost of capital environment for longer, issues just magnify. Like the whole commercial real estate that everybody talked about beginning of this year, regional bank crisis. What's the duration mismatch now? Is it smaller or bigger at the beginning of the year? It's bigger. Is the commercial real estate, all the debt getting rolled? That's not a 2023 problem. That's a 2024. So the question is, when does the market start to think about these things? And right now, it's FOMO. Buy the dip, buy the dip.
But the market is thinking about it because you can see the performance of financials and banks. So that's where the commercial real estate story is reflecting. That's why they're not going it.
But the risk is that this starts to spill over again. Right? So now everybody's holding strong when it comes to, like, I don't know, NVIDIA or these Magnificent 7, the AI stocks. But again, then it starts to spill over. VIX collapse, positioning is re-rated. You can have a peak. That's what we're saying. So I think the upside case here, I mean, I can't time stuff in the near term, but I just don't think it's that compelling at all. If anything, I'll be pressing the short side more aggressively. And especially for low quality plays. You think about small caps, Russell 2000, you need some massive short.
Where are you on energy?
Energy, we're neutral. Energy, we're neutral. We like the supply side of the equation. The demand side, we're questioning. We didn't talk about China. What's happening in China? It's the second biggest economy. What's happening in Germany?
Why doesn't the market care more about China?
I don't know. We decoupled? No, I'm joking. You can't decouple from China. You can't divorce.
I'm serious, though. I mean, there was a point in time, not all that long ago, if China delivered the kind of news they're delivering now, the market would have a pretty big problem. Brushed it off for the most part. Little bits here and there, but not to the degree where it's like, oh wow, the world's second largest economy's got a legitimate issue here.
Well, here's a small risk, something that could come about in the next few weeks. What if one of the big multinationals from U.S. or maybe from Europe, Germany, like a car maker, all of a sudden starts to talk about
What is NIMO now? Minus 37.
And then the street starts to extrapolate. So
do you believe the
We got to go after this.
But so China deflation ultimately gets exported to the United States, to Scott's point, then the Federal Reserve has to start cutting rates. Do you believe that?
Yeah, but I think growth in the meantime also starts coming down. Prices have a margins.
NIMO is minus 37.
Best of both worlds. I think it's just a dream.
I'll make that the last word. Just a dream. Good to see you.
Good to see
Thank you for being here. Subratko Lekos, JP Morgan. Good discussion. Coming up, Steve White's making a move in the healthcare space. We'll document that trade next.
All right. Exhilaration. Okay, what time is it? 12:37. Can't believe school started again. When I was going to school back in the day, walking to school back and forth, 20 miles over hills through the snow with no shoes on back in those days, we used to start school like after Labor Day. And we'd get off at, the beginning of June. So we'd have much longer. All right, so gathering cash. This is something to think about. All right, so here, let me go to this chart here. Okay, so new traders, I want you to think about something. Okay. Okay, so let's just look at the 60 minutes. 60 minutes pretty good as well. Okay. And all right, so the markets ebb and flow. I think everybody knows that, but many of you as new participants trading, you want to be long as you can, and you want to be out of the market or short when things change. But the biggest part of what I'm trying to deliver here is that the markets are not going to go straight up every single day. We had a nice rally from the October lows, right? We had this nice rally from October over here. 32%. 32%. We hit the highs. We knew where gamma was, so there was no surprise that 4,600 held, right? So what we were doing going into the end of July, we were taking profits off into strength. Why? Because we don't want to give back everything we gained from June on the pullback. So you take profits into strength. And what are we sitting on right now? A pullback that's getting bought. We moved back 6%. Looks like we're going to rally. Now we're looking for money flow. Where's the money flow? And is it more bullish? Is it bearish? What? So that's what we try to deliver on a daily basis. We're using gamma. We're using the things that Mikey posts and Spot Gamma posts. We're looking at advanced decline percent hitting an extreme low. Okay. So if you're just new to this, trust me, this is going to work very well for you. See how we hit minus 30%? I was talking about this for a couple of weeks, looking for that minus 30%. Oh, we're going to get the 50-day test. I know some of you got tired of me talking about the 50-day, but we did. We were out. We were looking for a reason to buy. And I kept telling you that the reason to buy will be when you start to see bullish candles like this. Now, the 50-day is right there. So if you didn't buy on the bounce on day 2, that was Monday. You had the reversal, 3-candle reversal. You're not too far off. You can still make some upside. Now, if we get above the 50-day, that's going to be huge. That'll tell you that institutions will look for the volume. That'll tell you institutions are continuing this buying. Despite what they're saying, we're looking for the evidence. All right, so let's go look at a couple of other things. Let's look at advanced decline percent. Let's see how many stocks are actually being bought versus sold. All right, so we want this to be above the zero line. So not there yet, but looking a lot better. Okay, we had a 90% improvement over yesterday, which was a pretty decent day for the most part. It was down, but we had 40 more stocks out of 2,700 making new highs. Okay, that's taking new highs minus new lows. So that's a net number right there. That's net 40. So money is flowing in. We're looking for advanced decline to turn back up. Advanced decline percent has turned up from minus 30%, delivering us a potential buy point after taking profits off into strength into the end of July, because we don't want to be long forever. Well, we would love to be long forever. But as we pull back, now we have an opportunity to buy. And we're looking for this flow to continue. We're looking for everything to set up and to go with what we're seeing. All right, so NYMO will turn. Okay, so we're looking for a trough in this black line right here. And NYSI, the summation index, we're looking for that to turn. Okay, we know that minus 80%, anything below minus 80% on the close is a reason to think bounce. And that was Thursday. That was Thursday last week. So we're moving back and starting to head back towards recent highs. And with NVIDIA tonight. So if you learn anything from me, when we start talking about taking profits, and I try to post that, taking profits into strength, talking about it in the weekend videos, you want to pay attention because we want to bank the profits and we want to wait for the next pullback. It's a bullish trend. All right, the thing that we were looking for all this year was a reverse of what we were looking at last year. You can see this in the S&P growth and value. You can see that red line dropping, price action dropping into year end, and then we reversed. And now where are we? We're moving up and to the right. Up and to the right. Okay, so we're trending up in the other direction. Coming into this year,
So for those reasons, I decided to stick with UNH because they've got more leverage to pull. It's a broader business.
What am I trying to do? Let me get a different chart here. Oh, you know where it is? I know where it is. It's over here. Okay. So coming into December, January, we were saying that you want to see. Where the hell is it? Here it is. Okay. We want to see this type of trend over here on the left return. Okay. During 2022, we're in a downtrend. We went sideways. Now we're moving higher. So what's the 200-day moving? 200-day moving average turned down, flattened out in late 2022, and now has turned up. So there's a change in trend. Change in trend that we've been waiting for into the first of the year. That dotted line there is the 200 period. Okay. So 2022, this is down. Now it's up. So the trend is up. Even if we get a 6% pullback. All right. I hope I didn't butcher this. So you understand what I'm saying. 200-day has turned up and to the right. The trend is up. Intermediate and long term. So we're looking for dips to buy and look for this trend to continue. It's pretty straightforward. Okay, so let's get back to this. All right, so that was for the new guys and ladies, okay? All right, so we're above gamma resistance levels. We showed you that before. This is the spot gamma transition area right here at 4,400. Okay, we go from puts dominating to calls dominating and price actions continuing higher. Okay, so this is taking the SPY and the S&P 500, combining it together, giving you a reading that you're seeing on the screen. So above this level, we're getting more bullish. Okay, let's go take a look at the actual S&P gamma. So here's 4,400. We're trading above that level now. Trading 44.31. Okay, 44.31. There's 44.30. If we get above 44.25, 44.30, the next level is 44.50. That's the next level of resistance that we're watching, above 44.30. Or rejection, okay? Or rejection. So nice bounce, nice bounce. I'm anticipating we're going to get rejected at 44.50. That's that level we just talked about, 44.50. That's right here. There's 44.50 right there. 44.50. Puts and calls are pretty large there. So we're going to watch that 44.50.
We are back. It is one of life's toughest decisions, knowing when it's time to retire.
44.50. All right, so that's the next level overhead. 44.50.
Copeland spent 10 years in the National Football League, 85 career games for 5 teams, as respected for his performance on the field as his leadership in the locker room. He's here today to announce what comes next, and we're honored to have him here at Post 9. It's good to finally meet you in person, too. You've been on the show a bunch of times. But this is it?
Yeah. Do I look slimmer in person or? It's great to meet you in person.
Why now? Why is it the end of the road?
Yeah, I think all good things must come to an end, and ultimately, after playing 10 years, I've had a number of surgeries, and I see my little ones running around, and when you start limping after them, you're like, okay, let me let me slow down here, right? And so I've been blessed to have amazing support system, village, and folks like yourselves who've always welcomed me in. So now it's time for the next chapter.
It's hard to walk away in some respects. I mean,
Good to hear, man. Good to hear.
You're such a well-respected member of every team that you.
Good to hear, Mondo.
The salary that you get paid.
Yeah, you haven't mentioned him in a while.
Player as well.
He's in his own world. That's cool.
It's something I've done for 23 years, and every summer I'm looking forward to training camp and running.
Bitcoin turning the corner.
And make a weight limit every week. And so, it's definitely tough. You're going to miss the fans. You're going to miss coming out of the stadium, getting booed, getting cheered for. You're also going to miss the locker room and stuff. But, again, I want to walk away.
All right, looking for a follow-through?
They start talking bad about me on TV. Say, we need to get this guy out of here.
And why you can still walk away, right? I mean, it's obviously a tough job. Is it true that you got a call as recently as last week or so from a team?
No thanks. And then I hung up the phone, and then 5 minutes later I said, call me maybe in November. You never know. But it's never thought in my wildest dreams, undrafted free agent out of the University of Pennsylvania, that I would be saying no to an NFL team calling to ask me to play. And so again, it's just been a blessing.
Yeah. So obviously you use the football skills that you learned in college to do you right on the field for 10 years, as we said, but you use the education to try and educate others.
Yeah.
Too. It's always been a big part of who you are. We've talked about that every time you've been with us. You announced your retirement this week, but today you announced what's next.
Yeah.
That's athletes.org. Yeah. Explain to us exactly what that is.
100%. So athletes.org, I'm the CEO, executive director of the Athletes Organization, and ultimately now what we're doing is we're going after giving athletes, in particular college athletes, on-demand support. So we're giving them on-demand support in the form of knowledge, access, and protection. They're able to meet with experts for free, legal experts to help them negotiate contracts and things of that nature. They're able to run background checks on people for free. And so they're also able to get their questions answered via our Q&A, which we have experts who have downloaded their brains. And right now, in the collegiate athletics landscape, things are happening really, really fast. And there's conferences being realigned, and there's a lot of money flying around. And we want to be able to also provide the athletes voice into some of these situations. And so for the first time ever, athletes will have a community, they'll have chapters, they'll be able to vote and get feedback on different issues. And so we'll finally be able to hear, hey, what do you think about being an employee? What do you think about flying across the country to California in the middle of the season or the middle of the week as a softball player at Rutgers? And so we're excited. We're arming them with a lot of guidance and really also a lot of mentorship in the form of pro athletes as well too.
It couldn't, as you said, come at a better time. I mean, the amount of money that is flowing around collegiate athletics now with name, image, likeness, NIL. So these kids are making, millions of dollars as college kids.
You're going pro earlier, pretty much. And we did a great conversation. We were at Slam Summer Classic at Rutgers Park, top 20 high school men's and women's basketball players, and we had a conversation with Tahir Whitehead, who's a 10-year NFL veteran. His younger brother, Tariq Whitehead, just drafted to the Brooklyn Nets, and he's like, I just turned 18. And while I'm also trying to be a great player for the Nets this year, I also am starting to learn about my money. I'm learning about my nutrition. I'm learning about all these things, and I think that
this stream is
the best way I can sum up what we build with
It's free daily points, Fibonacci, and market
when you
profile
go
levels
to
by signing
vacation
up
and you
at
go to an Airbnb,
Twitter.com.
you're probably going to choose the Airbnb that has 4.9 stars and a bunch of reviews. You feel more safe about going to that place. Well, how do we do that for the people that want to do business with athletes? How do you now understand that financial advisor, that accountant, that agent, they've always worked with your best interest in mind, because us as athletes, we get one chance to get this thing right. And how do we increase the probabilities of that? Because that changes generational wealth, that changes communities, and ultimately that changes that athlete's life.
How would you sum up the mark that you left on the game? Not so much on the field, because that's judged by stats for the most part, tackles, interceptions, and the like, but even more so around financial literacy. the people that you've helped educate, so to speak, as Professor Coach, as you call yourself.
Yeah.
That legacy and what that means to you.
Yeah, I mean, it means the world to me, honestly. I knew, I went to the University of Memphis a couple weeks ago and spoke to the athletes, and a lot of them said, hey, like, I asked them, what do you want to be remembered for? And like, best basketball player, do this. I said, hey, who was the point guard here in 2006? No one can tell me. Who was the center here in 2013? No one can tell me. Yeah, it's pretty hard to be remembered for your sport, for athletics, right? And so ultimately what I always wanted to be remembered for was what I did for people off the field, that ripple effect, for people that I've never met, never came across. And I think that I can honestly say I've done that not only for my peers in the locker room, for athletes, but in every single city that we've been in, 6 different teams. We've done holiday shopping sprees for people. We've just gone to grocery stores and fed people when they needed it most. And so ultimately for me as an athlete, I've maximized my platform, and hopefully it's just beginning.
Well, we are proud of you. We congratulate you. You have a seat at our table anytime you want it.
Thank you so much.
And you're a member, by the way, of CNBC's Financial Wellness Council, too. And we hope you continue doing that. Brandon Copeland, everybody, we appreciate you being here. Final trades are next.
All right, I had to go put something in the oven for lunch. All right, so we're near the highs of the day. We got NVIDIA tonight. We got Jay Powell speaking on Friday. Having a really good day. PayPal is a swing. I want to buy some PayPal shares with my earnings from the calls. We're at 62 now in the money. So what I'd like to do as we start to reverse, I'd like to start buying shares and sell covered calls. So I think that's what I'm going to start doing. Okay, that looks good. Let's see, we're at 62. January calls are going for 62.50s are going for $6. How much more upside are we going to get on? Okay, you know what? I'm not going to do anything. I'm going to do something with PayPal probably tomorrow. I'm going to focus on my energy on SMH, SOXL, NVIDIA, and the chips going into the rest of the day. I don't want to get sidetracked. PayPal is a different industry group, so I want to focus on the semis and the strength coming off the lows. I'm looking for NVIDIA to blow it out, but I'm not going to do a one-way trade. I'll have maybe twice as many calls as puts by the close. And hopefully we push a bit higher with SMH so I can buy some calls at the highs. SMH, let's see what the average true range is for SMH. Is trading 83%, 100% of its daily range so far. And we're consolidating. So all depends on NVIDIA at this point. NVIDIA, does it continue? Let's see what NVIDIA looks like. NVIDIA trading 67% of its ATR, 92% of its daily range. So the NVIDIA actually has a little bit more upside potential for the day. PayPal. Okay, so I'm going to focus on PayPal tomorrow. And, tomorrow morning, obviously, we'll be talking about whether or not we're going to take profits in the puts or take profits in the calls tomorrow, depending on how NVIDIA opens in the morning. There's a lot of people out there that I respect a good bit that are looking for NVIDIA to be over 500 tomorrow. So, I don't have anything to say about it other than the fact that we'll see. Price action will tell us what to do. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 23rd, coming into 1 o'clock. Final trades will be up next on CNBC. S&P has room to the upside. You notice if you're looking at your daily chart, you can see RSI is rising back towards 50 after getting oversold. What's Airbnb doing? Airbnb. All right, we're fading off the highs now. Fading off the highs. Airbnb. Okay, nice bounce at the 200 days. Day 2 on Airbnb. It's got the 50-day overhead. So there is some resistance. However, you have a MACD and a stochastic turn. Okay, MACD and stochastics are turning. Airbnb. The 100-day.
Well, 3 o'clock Eastern, we're going to count you down.
Day
Those big earnings. And
4.
Adam Parker will be with me. Bryn Talkington, too. She owns the
Stochastic
Final trades.
and MACD.
You're first. I mean, Steve Weiss. You're first.
Nice to have a strategist that didn't stop the dispensary on the way to the set. I'm going with Freeport. Copper's turning. I like it here. I think it rebounds.
All right, good stuff. Joey.
FleetCor, FLT, tough to find a financial with 21% revenue growth over 2 years. Nice.
FleetCor, FLT. I like that one. That's been on the IBD 50 many times. Yeah, FleetCor, I like it. Just came off the 21-day. FleetCor, I like Joe T's call.
Thank you very much, Scott, and welcome to the exchange. I'm Kelly Evans, and here's what's ahead. Can NVIDIA beat expectations when it reports after the bell tonight? The now trillion-dollar stock will also have big implications for the rest of the market. Is the AI boom cooling at all or not? We'll get all the nitty-gritty as we await this key report. Plus, Charles Schwab scales back its office footprint, just the latest example of tenants signing smaller leases, and Manhattan converting office space to homes. We'll speak with one company that provides financing for some of those rather difficult projects. And pick up your heels, go ahead, lean back, recline, and listen to what the CEO of Lazy Boy is telling us about home shopping trends.
Okay. Kelly, being a little silly now. Lazy Boy? Haven't looked at that one in a while. Lazy. Lazy days, lazy boy. Are they not trading anymore? Lazy boy? There it is. LZB. Okay. LZB. Yeah, that's not very interesting to me. Tesla pulling back a bit. All right, so we got Jay Powell on Friday. We got NVIDIA earnings tonight. All right, Bitcoin, big turn in Bitcoin. Bitcoin definitely caught a bid. Bitcoin. Definitely caught a bid. Bitcoin. We had 1, 2, 3, 4, 5, 6 days at the low. Day 7.
working at what could be a record 10-day losing streak right now. That kind of discretionary trade very much in focus. But Kelly, you gotta look at NVIDIA, gotta look at the retail trade. It's setting the stage right now. Some traders think NVIDIA, Kelly, is more important than the Fed symposium out in Jackson Hole.
Certainly going to be a fun, I would have thought 48 hours or more here. Dom, thanks very much. We appreciate it.
S&P, this is a 15-minute chart. Only one buy signal.
With our earnings exchange, let's get the trades on NVIDIA and a couple other names about to report. Our trader today is Decatur Capital CEO Degas Wright. Degas, it's great to have you here. Welcome. Here for last, and we're going to actually start with Dollar Tree today, which is having another bad month after that dismal earnings report back in May. Those shares are about flat on the year. They aren't immune to those shrink or theft problems plaguing other retailers. They also have to grapple with consumers opting for lower margin staples over discretionary goods, and thanks to inflation, they had to hike dollar goods to $1.25 and add some higher priced items. Degas, would you be a buyer here?
So, with NVIDIA, what we're seeing is that we've been owners of NVIDIA since 2017. And so, we got in at $73, and now we see a 400% gain. So we are holders of NVIDIA, and as we look at our models, we're seeing that this is actually still in the buy range of what we look at for overall forward performance. And so that's why we really like NVIDIA. Even at these
Okay, we got the 105. Yes, the 105 bounce. 15-minute, we only had one buy signal, no sells yet.
So with Dollar Tree, this is really more of a turnaround story. As you know, Mattel Ridge hedge fund actually purchased about 10% ownership into Dollar Tree. So this is still a turnaround story because they are really increasing their investment in 4 major areas. One is increasing the wage and benefits of their employees. They're also increasing the supply chain, and they're doing major repairs and maintenance on their stores. And lastly, they're improving the technology around all their systems. So this still may be a little bit too early to get into Dollar Tree, but we would say that let's get past the print and let's see how they do, because the economy, the overall impact on the earnings and revenue is still being impacted by 4 things. The economy, obviously their customers may be more impacted with the economy, individuals with limited income. Also, the cost of the turnaround has a major impact on their ongoing costs, and that still may be a headwind. In June, they actually missed on earnings, and that had a significant drawdown on the company. So those are some things that we're concerned about with Dollar Tree.
Sure. All right, maybe Mattel Ridge can help them for the long run, but you're staying cautious for now. Let me ask you about Splunk, which is a little bit of a teaser for AI as well. The shares are 14% this year, although down 9% in the past month. The company is also touting its AI implementation, but it's unclear just how many companies are looking to jump on that right now, and its expenses are high. We're going to have the CEO here tomorrow. Degas, what do you think about owning these shares right now?
Yeah, so Splunk is a company that what we're seeing right now is that we evaluate this company as really more a market performer. We're not looking for Splunk at these levels to outperform the market. And so we would not be buyers because it doesn't meet our buying criteria. And so what we're seeing though is that it does have top quintile profitability, but also there's an issue around will they be able to continue the growth in their annual recurring revenue, and that's a concern because what we like to see in the print is that they were talking about a 2% annual recurring revenue growth.
All right, we're still going here. All right, one buy signal, no sell signals yet. Yep, nice follow through.
the holders. So for the new investor looking at this, one thing they have to keep straight about is the evaluation. Now, the valuation is not always
Okay, let me go check my lunch. I'll be right back.
really about average for valuation because it has a earnings yield of about 0.4%. So we're concerned about valuation for new investors. But if you were to be a long-term investor and can really deal with the volatility that NVIDIA may have at times, this is still a good time to buy. So we're, once again, long-term buyers.
All right, Degas, thank you very much. Appreciate your time today. Kicking things off with us. Degas Rental, Senior Capital Management. Sticking with NVIDIA, those shares and the rest of the so-called Magnificent Seven announcing to come back after underperforming the market to start the month, and even in the face of surging interest rates. Deirdre Bosa is here with the details in today's Tech Check. Hi, Deirdre. Kelly, so I want to show our audience this graphic from Gartner because I found it really helpful. We spent a lot of time this year talking about the AI hype cycle. This charts the different phases for new technologies at large. Now, first you have an innovation trigger, like when ChatGPT went into consumers' hands, and that set off a flurry of different applications. The next is a peak in inflated expectations, and here's where you will see generative AI at the very top. It's small, but it's right there. NVIDIA, of course, is leading that charge. It's the only company with financials that are currently benefiting from this shift. But this is also a precarious place to be, as you can see, because the next phase here is the trough of disillusionment before coming back down to reality and ultimately building back up to what Gardner calls a plateau of productivity, but doesn't again reach those heights. That kind of makes it tells the audience where we are ahead of NVIDIA's report tonight. Expectations, they are sky high. They're near or at that peak. If guidance delivers, and really it's all about guidance, that will tell investors that there is more to be wrung out at this stage that could help bring some momentum back to the other AI plays like Microsoft and Google, the Magnificent Seven, which have taken a breather over the past few weeks. It is important though, Kelly, that could of course push generative AI into the next.
All right, we continue to push higher. Looking good. One buy, no sells. All right, looking good. Opportunities to take profits into strength abound. Lots of stocks moving higher. PayPal was one among others. FANG stocks doing well. Apple's off the highs of the day. Google, Amazon, Microsoft trying to go. All right, PayPal pulling back a little bit. NVIDIA near the highs. All right, NIMO continues its cycle higher. Okay, we got one yellow bar. Okay.
There's a long list of potential IPO candidates out there. Some have been around for a long time, including Instacart and Reddit and Stripe, Fanatics, Birkenstock, the shoe manufacturer, and car sharing firm Turo, as well as Shine, of course, fast food retailer. ARM may not be the kind of tech unicorn that really excites the stock market, but it's really big, and the fact that it's coming really soon is going to set the tone. So that means the pricing is really important. And really what that means is they have to price it so it doesn't flop. And let me explain what a flop is. A flop is not, oh, we thought it was worth $60 billion and now we're going to price it or at $50 billion. Valuation. That's not a flop. A flop would be we price it at 20, it opens at 23 and it closes at 18 that day, or 3 weeks later it's 15. That's a flop. Price at 20, 3 weeks later 15. The retail market will determine whether it's successful. So that's why this is important. They've got to get the price right, and it's got to hold enough.
Yeah, so better for them to be conservative. And I like your point too. That listen, this is more telling us about SoftBank's need to sell or to raise capital to really hot on the stock right now. I'm not sure how strong the interest is going to be in a company with reporting declining financials.
Look what happened to Kenvue. There was situation, very stable. Everyone knows the metrics on Kenvue. Everybody's got a good sense of the metrics on as well. And yes, I think that's going to be a problem with the numbers you were talking about. That's why I think the valuation may well be lower on that. But again, would it not be a great thing if the average investor, CNBC investors, bought in at a lower price and the stock rose rather than what we've seen in the last few years, where they price them high, and then months later, the IPO prices is gone. Prices are much lower. Let's let the viewers and our investors get in on the deal and maybe get a rise in the next few months.
Vehemently agree, Bob. Reach. Thank you so much. We'll see how it goes. I'll the sign report today from the stock exchange. Still, Commerce Secretary Gina
Microsoft trying to take out the high of the day, trying to get above 330. I want to sell some covered calls on Microsoft. I might wait a couple more days. I'm going to focus on NVIDIA for tonight. PayPal fading back below 62. It might need to consolidate a couple of days. I'm going to watch price action. S&P continuation. So Russian Civil Aviation Authority says Prigozhin has reportedly been killed in a plane crash in Russia. Wow. Prigozhin. Okay, big move here. S&P going. Okay, looking good. Looking good. You've got Bitcoin continues this big move. I don't think anybody's paying attention to Bitcoin, but Bitcoin's on the move. Big move on Bitcoin. Been waiting for 6 days. Today is day 7. Day 8 if you count the actual loss of support. This is day 8. Man. Wow, look at the FANG stocks. FANG stocks are kicking Aztec right now.
Welcome back to the exchange. Commerce Secretary Gina Raimondo traveling to China next week for talks with senior government officials. It's the latest in a series of high-level visits there and comes at a tense time as both countries try to repair relations. It also comes at a vulnerable time for China as they deal with economic pain, and that is crucial, one of my next guests says. The U.S. needs to proceed with caution. Joining me now, David Dollar is Senior Fellow in the John L. Thornton China Center at Brookings, and Stefan Seelig is former Undersecretary of Commerce for International Trade. Welcome to you both. David, are these your words to proceed with caution?
Well, I definitely think we should proceed with caution. There are some opportunities to stabilize U.S.-China relations, and I respect the Biden administration is sending a range of cabinet officials to do that. We don't want relations to spiral downward, but we shouldn't have very high expectations. There hasn't been the preparatory work you would need to really get a new trade agreement. Commerce Department took 27 firms off a list that prevents firms from buying from U.S. suppliers. So that was a small goodwill gesture, and maybe this trip will lead to more small goodwill gestures. But
All right, S&P continuation here. Beautiful follow through. No sell signals yet. Still going. Yikes.
Small yard with a high fence. We want to identify technologies that have military applications. We don't want them to diffuse to China. So the high fence means serious controls of exports and investment. But we say we're going to keep that yard small. And frankly, a lot of our allies have much more economic exchange with China than we do. So our allies like this idea that we're going to not pursue decoupling, but have this small yard with a high fence. And I would say until recently, it did seem like we were creating a very big yard of technologies and products that we were restricting. And so now the administration is really following through. And I think that that's sensible because it was a good strategy and it's what our allies are looking for.
So, Stefan, I'd be curious as well for your perspective on this. As someone who made many trips, what do you think the Commerce Secretary's trip is going to be all about, or what's the significance for the business community?
Look, Kelly, I think it's about building relationships that, as David pointed out, don't currently exist. In my experience, success came from building those relationships that were fundamentally underpinned by trust and respect and looking for win-win opportunities that were good for both sides. And frankly, this economic and commercial relationship between the United States and China is vital to both of our interests. So we both wanted to succeed. But in D.C. at the moment, there has been this gang tackling of China. There's this bipartisan view about getting tough with China, but tough doesn't always mean smart. And we've sent a bit of a muddled message, as I think David is suggesting. And I think they need to understand that this is not about containing their development or the rise of their economy, but rather about protecting our national security interests and creating a level playing field for our companies and our
I think we should be distrustful of their intentions. I'm speaking of the Chinese Communist Party here, Stefan.
But look, they're not our friends, right? But, fierce competitors also need to cooperate where we have shared interests, and we have plenty of shared interests. And that, I think, is what this is about. It is not about, kumbaya moments, but it's about creating a dynamic and an environment where we are able to cooperate in the future.
So do you think that the
Okay.
maybe implicitly
Continuation.
they're backing off a little bit, and they don't want, as you said a moment ago, they don't really want a decoupling.
JP Morgan, nice bounce.
Starbucks to have locations there, and they want companies to have, is that what they want, or they don't?
it's easy to get confused because we have heard different things from different members of the administration over time. But I think more recently you've got a pretty consistent.
All right, 440, 450. We'd anticipate some resistance there. Today's been a good day for the bulls. You have to remember the cycle has turned. Okay, so you're looking at this, intraday, of course, many of you day trading, but the cycle has turned. The cycle has turned. Let's see, S&P. Okay, look at the cycle here. Cycle's turned. Everything is turning.
Sticking with China, its recent series of underwhelming economic reports have investors worried not just about growth there, but in the rest of the world as well. Here to discuss that, Andres Garcia Amaya is the founder and CEO of Foley Financial, and Nathan Sheets is chief economist at Citigroup. Great to have you both here. Nathan, let me just start with you. You recently made some changes to your GDP forecast, if I'm not mistaken. How do things look globally? Are we the only house in town at this point?
Our sense is that the United States continues to look pretty resilient. And we maintain the call for a first half recession in the United States. And let me tell you, we're feeling increasingly anxious about that call as the economy continues to.
All right, NIMO, the cycles, everything is working for the bulls. Okay, so watching money flow. Watching the money flow.
Just kind of go back to the broader investment implications.
It's interesting because if you look at U.S. economy exposure to China, it is right. U.S. GDP exports account only for roughly 10% of GDP, but 30% of S&P 500 revenues come from abroad, and roughly 1/3 of those come from China. Right? So a slower Chinese consumer, a slower Chinese economy can actually have an outsized impact on the S&P 500 versus.
This stream is sponsored by TicketTick. It's free daily flip points with an asking and market profile levels by signing up at TicketTick.com.
Listen, if I miss the market this year, what do I do now?
Yeah, one, I would echo that we can't ignore the fact that the U.S. economy has been really resilient to a rising rate environment and to a slowing global economy. And I think that's one of the reasons we've seen the market act the way that it is, like double-digit returns this year. So you have to look at every China slowing down, but the upside, the U.S. economy has been very resilient. When it comes to the U.S. investor, I think the question now is where is that incremental?
All right, looking really good. All right, most of you are on the right side of the trade. We still have only one buy signal, no sell signals on the 15. We're right at 44.40. That's a major level.
I think that's broadly correct, that we're seeing the labor market moderate. The pace of job growth we're seeing is much softer than say a year ago. I think the Fed is looking for more slack in the labor market, and more evidence that it's hard to really gain traction on wages and services inflation. And quite frankly, I think that the resilience we're seeing is still not quite consistent with where the Fed ultimately wants to arrive.
All right, and we'll hear a lot more next couple of days, Jackson Hole and so forth. Andres Garcia, Amaya, and Nathan Chief, thank you both. Coming up, the latest developments around the Hollywood strike, and while it's looking more likely we'll see a resolution before the fall, the exchange is back after this, down to 2 points.
S&P is blowing it out here. All right. Wow. Wow, wow, wow. What a nice day. What a nice day for the bulls. All right. Tesla's about to break out. Tesla about to break out. Yep. Yes, it does. Wow. Enjoy it. There goes Tesla.
Russian state media reports that a small business jet crashed in flight from Moscow to St. Petersburg. According to the Associated Press, officials say all 10 people on board were killed, and that Wagner mercenary chief Yevgeny Prigozhin was on the passenger list, and it's not clear whether he was on board. NBC News has not independently confirmed the details. It is possible that Yevgeny Prigozhin, the man who made a move against the Kremlin,
One comment about momentum. Once the momentum shifts, I'm erring to the long side, watching what happens as we hit resistance levels. NYMO hit minus 108 on Thursday. It's minus 35 and rising. That's telling you what institutions are doing. The 105 EMA is rising. So is price action. Advanced decline percent hit minus 30%. Copox cycles have turned bullish from extremes. Just ride the wave. The wave was down since the end of July. Now we're seeing a shift in the opposite direction. Bears win, bulls win. Pigs get slaughtered. I'm here with you, ladies and gents. I'm just eating lunch.
Welcome back to the exchange. Charles Schwab cutting jobs and downsizing its real estate footprint in an effort to save costs. They aren't the only ones. According to the Wall Street Journal, office leases are increasing, but the square footage is declining as companies plan for long-term hybrid work models. And that means more vacant office space across the country. In response, New York City lawmakers are taking action, recently announcing plans to convert vacant office buildings into residential apartments to boost affordable housing options. But my next guest knows firsthand some of the challenges involved in doing this. Joining me is Ron Eliasef, the CEO of the Northwind Group, and they've done more than $2 billion worth of debt and equity investments in New York since 2008. Ron, welcome back, first of all. Secondly, and it's a reminder that these things have to be rezoned. You can't just decide as a developer to make this conversion. How big a deal is this rezoning? How much flurry of activity do you think will unleash?
Well, it's a great first step in the right direction. I mean, we all know that vacancy.
You hear what they're talking about? Real estate, offices. You know how hard it is to convert an office to residential? Think of all the plumbing. If you're talking high rises, multiple bathrooms, kitchen, it's a lot harder than these guys are making it out to be. So yeah, it's nice to say, okay, we're going to convert office space to residential, but it's very difficult. It's very costly.
We just learned the Manhattan rents are at an all-time high. So they're trying to kind of solve both of those challenges, I guess. But how attractive is this for developers to get involved?
It's attractive, but not enough. It's a very costly project to convert an office building to resi. There's a lot of unforeseen conditions once you start stripping away the walls. And also, not every office building can be converted. Sometimes the floor plates are too deep or too wide. There's not enough air and light. So the rezoning is a good step, but you also need to provide tax incentives for these projects to be actually viable. And that has not happened yet. So I don't see that we're going to see a major flurry of conversions start. We've seen a few. There's about 6 million square feet being converted right now in Manhattan. That's not enough. You have about 80 million square feet vacant in the city.
Boston, if I'm not mistaken, is doing something more significant in terms of tax incentives, where I'm going to just spitball it, but maybe you get to save half on taxes for the next 20 years, something really big like that. So you think that additional step is needed if we want to do a lot more conversion?
It's not needed. It's a must-have. So there were programs in place, 421G, which is equivalent to 421A, which basically says if you convert to resi, as long as you provide a certain percentage of affordable housing, 20% is the most common number, then they'll give you a tax break on your property tax for a certain duration of years to incentivize you to do the conversion. It was existing. It's not existing now. It has to be brought back to allow for this to happen. Same thing with multifamily ground-up construction in New York City. you need the 421A tax abatement program to be back in order to incentivize the growth to go. You were talking about rents. Studio rents 2 years ago, average studio rent was about $2,400 a month. It's now up to $3,200 a month.
Wow, it's jumped over about $1,000 in 2 years.
Yep.
Wow.
And salaries are not up in that same pace. So there's not only just a housing crisis in New York City, there's also an affordability crisis. One-bedroom rents are up from $3,200 to over $4,200. Those are big numbers. And when you look at the population growth in the next 5 to 7 years, the city will grow from about 8.8 million to over 9.1 million, adding a lot of need for housing.
So even as a developer, you agree the rents are too dang high, but they maybe need some policy changes to accelerate the developers' willingness to jump in and get involved with this. And you know New York City better than anybody. Do you ever look outside the city, or is it just too Byzantine complex to try to have projects going in multiple different venues?
We're financing projects in major gateway cities. So New York is our main hub, about 70% of our activity. But we're doing the loan right now in Philadelphia. We're doing the loan in Boston. We're doing the loan in Houston and Miami. But New York is definitely our number one favorite place because of the supply constraints. So actually, we choose to lend on residential in New York because it's a supply constrained market, which means pricing remains stable or actually go up.
Yeah, no. So in a way, you kind of need it to be good, but not too good for some of these new conversions. Final question: we're actually talking about.
All right, so that was a good lunch. Finished off those Maryland crab cakes I made over the weekend. Very good recipe. We're lucky enough to get fresh crab meat. All right, Tesla breaking out. There goes Tesla. Tesla's going. Tesla breaking out. Here goes Tesla. All right, nice reversal. I'll get above yesterday's high and go on a buy signal. We need to get above 240, 241.50, 241.50. All right, so most of you did very well today. SPY calls, etc. Thank you, David. You guys watching Bitcoin? Bitcoin, nice reversal. Nice reversal on Bitcoin. Most people are not paying attention to Bitcoin. I have some BITO. That's it. I have some call options. January call options. Let's see what those are doing. They're off a couple of bucks. No big deal. Small position. The most important thing to me right now is watching this momentum. I understand the timidity when we've come from a 3-week or more downtrend, shifting, changing direction. We only have one buy signal today. No sell signals yet on the 15-minute cycles. On the longer time frames, the momentum is kicking in and pushing the markets higher. As shorts cover, new money comes in. It's early in the cycle. We only turned last Thursday at minus 108 NIMO. Let's go look at some other indicators besides these cycles, which I showed you and shared in the room. The cycle, okay, is on a buy now. Cycle's on a buy. For 3 weeks, it's been on a sell. Let's go take a look at what's IWM doing. Let's see, IWM. Small caps, most likely on a buy signal as well. All right, starting to turn here. Small caps. Okay, so that's close. We bounced last week off the, what is that, 200 day? And following through. So give it a couple of days. Cycle in IWM most likely leads to some small cap biotech, small cap energy, financials, industrials, all following through. The S&P is the big boy right now. Big boy, big girl. Let's see. I wanted to track. Okay, S&P equal weight index. We're looking for the number of stocks trading above their 50-day and 200-day to change direction. And survey says, yes, this indicator or these indicators, when all three turn up and CCI triggers, it's a couple of days late for sure. It's a lagging signal, but this is a confirmation. And watching VIX. VIX is holding right now at 16. We're looking for VIX to drop off. But watch what's going on here. Number of stocks trading above their 50-day got down to almost 30% and has turned now. So if 90% above the 50-day is overbought and we get down to 30% oversold, look for a turn. Look for your other indicators to reverse. Here's the 200-day moving average. This looks beautiful to me. I got a feeling we're going to see a lot more over the next couple of days. Yeah, but what about NVIDIA? Yeah, NVIDIA is a big deal. That could wreck everything. I doubt it, though. I'll be the first to say, oh, man, I was wrong. Demand isn't enough to keep the stock up here at highs. But guess what? Guess what? You know, when you see a gap up on earnings the first time, people say, they can't do that again. Well, really? Look at Meta. Look what Meta did. Okay, here's the first gap up after a move lower. Gap up, trend, gap up, trend, gap up number 3, and a fade. But certainly NVIDIA could do the same thing. Okay, so NVIDIA gapped up on the last earnings. It's back above. Can it gap up again? You bet you can. So I'm not going to trade NVIDIA directly. You could do like butterflies. I see Joe K talking about butterflies. The upper strike on the butterfly. People trading, going into NVIDIA earnings. The upper strike on that NVIDIA butterfly is 540. Okay, so it's 42 points on NVIDIA is the expected move. But we could blow that out. We could possibly blow that out. So NVIDIA, we got MACD has crossed. Stochastics is now reaching overbought territory. I choose to use SMH to trade the NVIDIA earnings. I'll probably have, at the end of the day, I'll have probably about twice as many calls as I have puts for insurance. I'm thinking NVIDIA is going to blow it out based on what everybody's got to be doing. I mean, am I wrong? Do you guys agree or disagree? Do you disagree? That's fine. You know, I don't mind debate in the trading room. But if AI is maybe overblown and companies aren't looking to be more efficient, aren't interested in what AI has to offer, no matter what your business is, I think AI could probably create efficiencies, just like computers. I mean, we were using slide rules and TI calculators in college, right? Computers just started to kick in the mid to late 80s, 84 through 86. Remember the 88 processor, 88 processor? I forget what the RAM was. I think it was 64, I want to say megabytes, but it was less than that, right? You tech guys. And they had those 12-inch floppy disks. And look how the markets have gone over the last 30 years, 40 years. Pretty freaking amazing. All right, so down. Okay, NYMO is minus 34, was minus 108. Just 5 trading days earlier, we were at minus 108. The last time we got down there was March. Look what happened after March. We produced at least 8 yellow histogram bars on TTM. 8. Prior to that, another 8 in January. We produced our first yellow TTM bar today. The momentum has shifted. We could see another 7 days. And then it transitions to cyan. So another couple of weeks of upside. All potential. And NVIDIA could be the big party pooper. Or it could be a weekend at Bernie's. Party hard. That was a funny movie. Weekend at Bernie's. Man, we got a lot of action going on. NVIDIA, $16 million trade on NVIDIA. 470 calls for October. $16 million trade. Mr. Lomax. That's a great movie, you know. You don't need a remake. You don't need a remake of Weekend at Bernie's. You don't need a remake of Snow White. It is what it is. You know, you can't come up with something new. Come on. Sure you can. How many times have West Side Story been redone? Romeo and Juliet became West Side Story. Yeah, that was a great movie.
Welcome back to the exchange. Shares of La-Z-Boy pretty much erasing their declines today after the company reported that sales were down 20% last quarter due to industry challenges. The furniture maker did, however, beat on both the top and bottom line, with earnings topping estimates by 7 cents and retail same-store sales climbing 2% on the year. Joining me now to discuss is La-Z-Boy's president and CEO, Melinda Whittington. Melinda, welcome to the program. For having me. So we spoke with a door maker yesterday who said that, listen, it's just this is a little bit of a tough part of the cycle right now, you know, kind of post-pandemic. Describe for us overall how business is going this year compared with, you know, a couple of years ago.
Yeah, the last 3 years for furniture, there's certainly been a lot of disruption. We had, consumers were home, they were ordering a lot, and then there was just significant supply chain disruption that slowed down production to meet that demand. So of our $2.3 billion of sales last year, and our year just finished the end of April. So that $2.3 billion, $300 million of that is sales for pandemic-related backlog. Wow. So if we kind of then look at where's the consumer today, now that we've caught up on that backlog, our consumer right now is fairly stable across the industry with where we were last year and the furniture industry for the quarter ended July, which is how we look at it. The consumer's down about across furniture and furnishings about 6%.
Thanks, Vantir.
It's going much better than that, and we're pleased with that. I believe that's the strength of our execution and our brand name and the really fragmented market. We just delivered 8% growth in our retail business. We're both a manufacturer and a retailer. And even within that 8%, of course, that's new stores and acquisitions. The 2% of that was so we are seeing the consumer reacting when you're still speaking with them.
Then I hear, from some of our younger producers, Joybird is a popular brand, a little bit more apartment facing, that kind of thing. We heard from Macy's and Foot Locker that in June-July timeframe, consumers started. Is that unique?
44.50. Gotta believe it's going to stop at 44.50 and regroup. I mean, it's been a hell of a run today. We're up 55 handles on the futures, are up 55 handles, 55.50.
Good to hear. Maybe it speaks to the challenges those other segments of retail are having, but that it's maybe not something happening with the consumer more broadly. So we talked a little bit about kind of inflation or pricing. Is that out of your pipeline now? In other words, when we start talking about whether sales are going to be up, 3, 5, whatever the number is, as you kind of look more hopeful about the holidays, how much of that is pricing? How much of that is volume?
Yeah, the pricing is pretty stable at this point. So, over the last couple of years, the furniture industry saw some pretty dramatic price increases based on input costs, right? 25, 30, even 40%. The majority of that has held, but it's been well over a year since we've taken any type of really significant pricing action. So you're really looking at, again, more stable trends and more volume related as we go forward.
Then I guess my last follow-up question to that would be price cuts. People are starting to notice it at the price leaders like a Walmart, that they're really taking advantage and saying, we can now eat into this a little bit, maybe win the consumer, and not have to do too much on margins for the reasons that you mentioned.
Yeah, across our industry and certainly for us, more than half of that pricing is really held up. Now it varies a bit, by the consumer base. Our La-Z-Boy consumer and even our Joybird consumer tends to be a bit of an upper middle income consumer, and so maybe a little less price sensitive. So we've seen some activity within furniture broadly. It's maybe a little bit, to a little more price sensitive consumer. Yeah. But overall, we're not seeing, dramatic actions taken. Now we're always keeping an eye on that.
Of course.
We believe that the consumer's going to pay for the brand, the trust, and the quality.
Yeah. Well, every time I think I'd like to settle into a La-Z-Boy right about now, it always sounds pretty good. Melinda,
set you up with one of those.
No. I hate to eat into your bottom line. No. Melinda Whittington, thank you so much for joining us today. We hope to check back in soon.
Thanks.
And that does it for us here on The Exchange. Be sure to tune in tomorrow. We've got some special things for Jackson Hole Plan. We're going to be there. You'll see what I mean. But first, I'll see you next hour on Power Lunch. Tyler's already getting ready.
All right, so we're continuing to grind higher at the highs of the session. Looking for a follow through. All right, so the momentum is key. We can see this follow through. Okay, we're fading from the highs. Some profit taking. Okay, we're putting in a high here. All right. Tesla continues higher. Tesla, nice follow through. All right. Tesla continuation. Nice reversal. Is it going to keep going? Sorry, my wife was making a bunch of noise. I had to mute. All right, so we're at the highs. Not expecting much more upside. We're up 50 handles, 55 handles at one point there, 56. Anticipating we could see a little pullback. All right, pulling back some more. Still on a 15-minute buy. The shorter time frames are going to give us sell signals, more noise. 1 minute, 2 minute, 5 minute. All these are on sells at the high. All right. All right. Let's see who's doing what here. Alrighty. Okay, more fade. Okay, S&P in a 5-minute sell, 15 minutes still on a buy.
From your lips, as they say, to God's ears on that one. So just to wrap this up, and then I want to ask you one more quick question. The rebasing that you're talking about may look or feel uncomfortable, but it is necessary, and it ultimately will be a good thing. And you're not all doom and gloom, as you say. I want to pivot, though, for just a second to these reports that Yevgeny Prigozhin of the Wagner Group, and you, the first time you and I met years and years ago in Prague, you were working on the restructuring of the former Soviet satellite states and countries. You spent a lot of time in Moscow. You spent a lot of many of the so-called oligarchs. What do you make of the reports that Yevgeny Prigozhin's plane, on which he was a passenger manifest, may have gone down with no survivors? It wouldn't surprise me one bit. There's a huge somebody in the military establishment, not Putin, somebody in the military establishment were behind this. I never believed that Prigozhin's sort of revolt was a real revolt against Putin. I think the Prigozhin were in concert, and it was Shoigu and the defense establishment that was out to get both of them. All right, Dan, you know how much I enjoy our time together. We have to leave it there.
All right, we're back almost to the 105. 105 is at 47. The 105 is at 4447. ES 47. Yep. Yep.
Putin doesn't welcome any kind of dissent, even by people who have been his friends. And so my best theory is that this was Putin exercising payback in a way that he can still deny, and it didn't require any more of a confrontation at the time when there was still danger that the Wagner Group fighters might still.
Okay, NVIDIA. Inside yesterday's big candle. Halfway there. Starting to see some profit taking. Okay. Tesla, some profit taking there. Sell into strength here and then wait for a pullback. All right, so puts. I bought a few SMH puts. The 150s, bought some 150s.
Said in recent days, I think probably will be borne out by future events, which is that the Wagner Group will refocus again on Africa, and I think the Kremlin will be happy to see that happen, not just because it keeps them out of the mess and the trouble in Ukraine, but because the Wagner Group serves the Kremlin's interests in Africa. It exploits resources, it gains friends, and
footholds and political allies, and it does so all at very modest cost and with plausible deniability. So I think Wagner troops, if you want to call them that and dignify them with that term, will continue to be active in Africa, and Putin will try to make sure he's got some kind of a loyalist who's carrying out that job, which frankly shouldn't be that hard for him to find, because again, this group in Africa is highly effective in terms of financial recompense and in terms of political influence.
Is it fair to say, Michael, that if Prigozhin had his way, Russia would be even more hawkish in the war? And as we try to understand whether the Ukraine offensive is, I don't want to say fizzling out, but whether we're at some kind of stalemate, what is Russia's next move likely to be as we head into autumn, a wetter season, a season that probably doesn't favor a lot more gains on the Ukrainian front here?
So on the first question, I think that Prigozhin was, in some sense, correct back in the spring to feel that he was being left out with his men on a branch with very little support. They were being asked, as you'll recall, to assault around the city of Bakhmut, and it was really just a human wave attack style kind of thing, which left many, many of his forces dead or badly wounded. I think he was asked to do the impossible by Shoigu and Gerasimov and anybody else in the military chain of command. And I think maybe Prigozhin thought that by doing something so dramatic that it would catch Putin's attention, that maybe he could finally persuade his former Gerasimov and military leadership were doing a very poor job provisioning his forces and giving them any kind of good, sound tactical leadership. So I think there was, in other words, there was an element of correct analysis and understandable frustration on Prigozhin's part, but the idea that somehow a mutiny or almost a coup attempt could be the right answer, I think,
Wow.
was a delusion, and now we've seen the likely consequence of that. So in regard to what's going to happen in Africa, I think that the approach there is already pretty well established, and as far as it goes, it's incredibly cynical, it's incredibly brutal, but it's moderately effective. So I don't expect any dramatic change there. In terms of the Ukrainian offensive, I'm afraid that I don't see great prospects for any big change, even frankly next year, once Ukraine may have the F-16s and longer range missiles they've been asking for. But again, we'll test that on the battlefield.
Michael O'Hanlon, thanks for joining us to react today. We really appreciate your time.
Thank you, Connie.
Fascinating stuff there. As we mentioned, bond yields have fallen a little bit today ahead of Chair Powell's comments out in Jackson Hole into the week. Let's go to Rick Santelli at CBO for more on the bond market moves. Hi, Rick.
Hi, Tyler. Indeed, we've seen not only treasury rates fall, but maybe the catalyst for treasury rates falling actually started overseas, whether it's the UK or the European Union. The PMIs were weak, and then coming into our time zone, we were already pressured. Look at a 2-day of 2-year. You can see we're under yesterday's lows, and if you look at a 2-day of 10-year, same dynamic. 2-week lows and booms down down 14 basis points, pretty much the same as gilt. And the big story today might have been 306,000 on early benchmark revisions. We'll know for sure in February next year on the job front. Maybe it's less than we expected, but it still draws attention. A lot of assumptions on the rate.
All right, looking forward.
Let's talk to a trader. Mike Palmer. How you doing? Okay, bump shake. This is the big guy, and what we want to ask Mike is very easy. I see that rates are moving lower, which means treasury prices are moving up. More importantly, I see that the VIX is moving down, and we're seeing very strong buying on it. I do expect buying that to slow down.
Right behind this is very difficult to what we usually see in August. This is the buying of those two. Don't forget if you're really concerned about Jackson Hole, I don't think that's what's got like a volatility. I think it's something we can do, keeping a close eye on inflation, and also we might have one more rate cut in the cycle, and that's it. That's the message discipline we're used to. It's very rare that we get volatility back down with Jackson Hole. That's a vivid deviation. We could have a move in market later.
Now, as I look up here and I see these news, it certainly seems that there is some type of nervousness potentially happening, Jack. So it seems all the trends we had prior, we're in a soft low, moving lower. Interest rates last week had breakouts to the upside. This is more of the inverse growth trend.
Yeah, that guy's nuts, Steven. All right, we continue to fade back towards VWAP 44.25, support resistance. Still looking for a higher low. Momentum is still bullish. Nice 10 handle move there on the S&P futures. Okay, we're up 55. We're up 47 now. Back to the 105. We just dropped right through the 105. Vantair was looking for 44, 45. Looks like we'll tag that area. 45. Yeah, you just tagged 45, right? That's pretty funny. Can't wait. I cannot wait for NVIDIA. Man, I am looking at the potential for NVIDIA in both directions, really. Would love to see a follow through to the upside, given the current momentum in the markets. Okay, Bitcoin finally starting to flag. Bitcoin's finally starting to flag after a big bounce. Excuse me. All right, let's see. Tesla. Nice little dip on Tesla, selling into strength. By the way, Grover, thanks. Thanks for yesterday. Entry on Tesla. Reversal. Okay, nice little bounce there. S&P. 15 minutes still on a buy. No sells. 15 is still on a buy, no sells. Starting to turn again. Tesla starting to turn again. All right, looking good.
GPU, but TSMC has to supply it. They have to ramp up the utilization rate, and then they got to ship it out. So on the call, will there be any comments on the backlog? That's what I'm going to be looking for, and making sure that order flow into the next quarter is going to continue. We're going to fix Taiwan issues.
When you look at the market value, over $1 trillion, and it's gotten there very, very quickly. Compared with all the other chip companies, it's greater than ultimately Nintendo.
Right. The first mover advantage. First mover advantage, right? When you think about the actual AI chip that is utilizing all of these AI infrastructure, NVIDIA is the first player to come out with one that is capable of doing all of that compute. The next second best would be AMD. If they come out with their chip by Q4, so it's a timing issue with them. They are a little bit later, but I introduced TSMC in the past, and she said we worked 15 years on this, so it's not like we don't know what's going on. We're just a little bit later in executing. Then you have a player like Intel, a company like Intel, that may not have that GPU chip, but wants to build those GPU chips and be part of that entire process. So is it warranted? Maybe for now. I think it just in the future, is this all going to be an upfront cost? Are they going to put all this money into buying the chips, and then what happens a year from now? Will they keep buying chips, or are they going to buy the software that goes with it? So how is that momentum going to continue to justify this high price, this high valuation? And hardship practically bearish. You only have a $500 price target. I'm sure you've seen your colleagues on the street. I think I saw 780 this week. So walk us through, what do you think they're going to do revenue? What do you think they're going to do data center, and valuation, if you wanted to chime in on that too?
Thanks for having me on your show, guys. So I think the most important number is
Yeah. All right. So the 15-minute is still on a buy, no sells.
So this is sort of a step along the way. Now, this quarter is particularly critical because NVIDIA has guided to something like a 78% sequential increase for the July quarter. And if we somehow stall, then give me that 50 million number becomes incredibly high. So I think the importance of this number is that the momentum that creates and for us to look at I don't think the customers that are lined up at your door will simply have everything by the end of this quarter. I suspect that there will be the Chinese companies, frankly, it's in their interest to buy as much as possible, as quickly as possible. So we're seeing a tailwind there. We are seeing a shift towards general purpose GPU, which is a trend back towards NVIDIA. And then there's a new kind of a data center in play, GPU-only data centers. So as we private companies like CoreWeave and Lambda, I think you guys posted CoreWeave CEO. That company is going to go from 30 million in revenues last year to 500 million in revenues this year to 2 billion in revenues next year. And this is a NVIDIA GPU pure play from a data center angle. So that's where a lot of the demand is coming from.
So there is this thing called the law of large numbers, Harsh. I'm not exactly sure what the law of large numbers says, by the way, but it seems to me that what it fundamentally says is that when you grow at this rate and you get to this scale,
I hope everyone's having a good day. It is 2:30 on the East Coast, 2:30 on the East Coast. It's Wednesday, the 23rd. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. A fine Wednesday it is. We've had a nice run up in the morning. We're producing a lower high. 15-minute just went on a sell signal. 15-minute first sell. First one today. Okay, so we got profit taking. We got a sell signal on a 15-minute. 215. Okay, we got a sell signal now on the 15-minute, finally. All right, we ran up from 4,400 this morning, all the way up to 4,440 for a good 40 handle run before getting a sell signal. So just catching the meat of the move between 4,400 and 4,435. Nice move. Had a couple of people shorting earlier from the top, Van Ter and others. Done for the day. Now we'll wait for NVIDIA and see if they can run this sucker back up to the highs. Momentum is clearly bullish. NIMO went from minus 108 last week. On Thursday, it's minus 36 at the moment. Tomorrow, I would expect a test of the zero line, another yellow bar, a couple of days more upside into Friday, into Jackson Hole, and maybe a test of plus 50, plus 60 on NIMO before getting overbought again. By that time, we should see 3 or 4 more yellow bars headed towards cyan on a TTM squeeze.
The final number of candidates on tonight's debate stage still up in the air. North Dakota Governor Doug Burgum towards his Achilles heel in a pickup basketball game with staffers last night. He says he'll decide whether he can participate after doing a debate walkthrough this afternoon. The GOP candidate has to wear crutches. The debate is 2 hours long tonight with candidates standing throughout. And he's accused of walking into a Boulder supermarket in 2021 and killing 10 people. Today, Colorado's Department of Human Services ruled the suspect in that mass murder is competent to stand trial. The suspect was accused of killing customers, workers, and a police officer who tried to stop him. Tyler?
All right, thank you very much, Bertha. Ahead on Power Lunch, America's home wrecker, the 30-year mortgage with rates heading toward 8%. Mortgage demand from home buyers dropping to near a 30-year low. More on that after the break on a very busy news day.
Okay. VIX a little pop back up to 1611. Tesla, a little dip, looking for a rip. Not yet. NVIDIA. Okay, NASDAQ 100 is still, there's only 15 stocks on the NASDAQ 100 that are red. Chips, Qualcomm, Gilead. We got a nice mix. The top 10. NASDAQ 100 top 10. More profit taking.
New home sales for July rising more than 4% to an annualized rate of 714,000. That was higher than forecast. Existing home sales, though, slipped 2% last month as mortgage rates topped 7%. That is the highest rates have been in more than 20 years. At least next year. Here with more on the health and housing is Bess Friedman, CEO of Brown Harris Stevens. Bess, welcome. Good to have you with us. What are you seeing on the ground right now? I mean, new home sales, because basically people who own used homes aren't moving.
Yeah, I mean, existing home sales are just stalled right now because sellers don't want to let go of great rates that they which is a good thing. We just saw that Warren Buffett invested something like $1 billion into home builders. So there's a big bet there. But I think buyers are on the fence right now because rates have gone up. They've doubled. The highest they've been in nearly 20 years. So there's less affordability and there's less inventory. So it's a little bit of a sluggish housing market right now. It's going to take some time to reconcile that. And so we're kind of waiting it out.
Okay, NVIDIA pulling back a bit from the highs.
And I think because inflation has come down, and that's a good story. And we did not enter a recession. That's another good story.
Let me see. Do I want to buy some more puts? NVIDIA, SMH.
Are you seeing more buyers coming to the table, or maybe the negotiation with all cash? That's number one. And number two, are you seeing among those people who are taking out mortgages, are you seeing a return to adjustables?
Yeah, I mean, definitely a return to adjustables because there's more flexibility there. It's less money. So people prefer that. And I think cash is always king, right? And so we're seeing a good amount of cash buyers. That's a good thing. But, you know, look, mostly, probably 65% of homeowners have mortgages today in the United States. So when rates go up this much, it definitely has an impact. And so I've said it before, and it's true, the market is now disciplinarian. Things have changed. And so it's in a meaningful way, and therefore the housing market has slowed down. It's not flat. There's good inventory in places like New York City, so that's a good thing. But places like Connecticut and Palm Beach are challenged. Look, I was with my friend over the weekend who has a place in Connecticut that he bought before the pandemic, before there was this sort of jolt of business in Connecticut, and he got a great deal. Today, that house would go so much more, and it would have sold in a quicker period of time. It's just this period of time in the market right now. Yeah, that's, I don't know what real estate is doing. I mean, nobody's doing it. I mean it. It's, we have so many people come in the past couple of years, and you guys are been there forever. You're well established. If anyone can make it so you are, but you know, turnover is so low. People are throwing that again, and how they've been trying for years to bid. There's like 2 properties for sale with people out there bidding. I mean, it's like, I mean, but you're in the housing market. Yeah. No, I agree. It is a slowdown. It's not that bad. I mean, we are still doing business in a decent amount. I think sales are down 17% year over year, which is not horrible. And again, circumstances dictate what people have to do, right? And when it's therefore, people have to sell and it's just that people that are deciding buyers right now, many of them are opting to rent because they see less affordability and less options. And so a lot of people, because of divorce or because of marriage or a baby or whatever it is, they have to buy and sell. So those things will continue. I call those cycles.
Dollar is bouncing a bit. Dollar hit a low of 103.30. 70 cents off of the high. Dollar dropped 70 cents off the high. The 10-year dropped from 4.29% down to 4.2. Just watching the markets with an hour and 18 minutes to go. NVIDIA reporting at 4:20 p.m., somewhere around 4:20 p.m. Man, I'm so excited. One way or another, they're going to get you. One way or another. Yeah. So NVIDIA, I'm looking forward to this one. This is probably my favorite all year, NVIDIA's earnings. After last time, we're watching Google and Microsoft as well as Apple, those four. Netflix had a good day today. Tesla had a good day. Tesla just drifting right here. Tesla looking forward to get above yesterday's high. Get above 242.50. That would be a buy signal on the daily chart. Let me see what the 60-minute looks like here. 60-minute. 60-minute. Your claws are going into my leg, miss. Those claws are those are sharp. Stop doing that. Cat came to visit. The one cat that didn't like me when we first got them now just won't stay away from me. She's so loving. All right, so we're just watching the markets right now. Most of the trade for the day is done. I mean, we had a great run up in the morning into noon. Into the evening session, we're on a sell signal on the 15-minute for the last 30 minutes. 45 minutes, depending on when you got in. 45 minutes. All right, starting another 15-minute candle here and fading a little bit more. Bear flag, bear flag. Seeing bear flags everywhere from the highs, so I'm not surprised to see some profit taking. If you waited to take profits, we are just sitting here watching now. I'm not doing anything. Cat has gold colored eyes. Really cool looking. Cat eyes. All right, looking for a bounce. We are still very bullish. Just a matter how far we pull back. Momentum is still bullish. So, we're going to have periods where we have, runs up to the highs and we're going to pull back a little bit late in the day. People taking profits, cashing in their, stop swiping at me, cashing in their chips. But the bigger picture is bullish. You want some treats. The bigger picture is bullish. Wish you could see this cat. All right, so the bigger picture is bullish here. You can see the breadth indicators. We're nowhere near a sell yet. Okay, when I say a sell, obviously we can have intraday pullbacks. I'm looking at the bigger picture swing time frame. Okay, I'll give you a treat. Jesus, this cat is like all up my caboose. Here. Oh, that's too much. That's too much. That's too much. Way too much. She's like, why are you taking those back? All right. Okay. So if you're just joining us in the evening session, I'm your host, Cousin Vinny, coming to you from theclosingprint.com at 2:47 on the East Coast, the best coast. We can see advanced decline percent. This was created by the late Marty Zweig. If you don't know who he is, just Google him, ZWEIG, Marty Zweig. Pretty well-known trader in the late 80s. He wasn't the first, but he created this indicator called advanced decline percent. You take the advancers, decliners, and you take a percentage. Who's winning? Who's losing? And you contain it. It contains itself pretty much between 30 plus 30% plus minus 30%. So it's a reversal signal, and you're looking for other signals, including this one, to agree, basically. All right, so let's go take a look at something that's in agreement, okay? The more indicators we have that agree, the better our chances are for a reversal. Okay, here's the 200-day. Now, the S&P 500 is above its 200-day. Hasn't tested it yet, but the S&P equal weight has tested the 200-day as of Friday. That's removing S&P equal weight, removes the weight of these 15 stocks on the left. Okay, so let me remove this. Okay, so these 15 stocks removed from the picture. So it's an equal weight index. Nobody's more important than any other. The key for me is, number one, is bouncing at the S&P 500 equal weight 200-day moving average, the red line. The number of stocks trading above the 50-day have come from an overbought 90% down to a somewhat oversold at 30%. 30% of stocks are above the 50-day. 70%, 70% were below the 50-day. So room for improvement, momentum shifting. NIMO intraday is at minus 36. Last time I checked. Minus 37, having hit minus 108 on Thursday last week. All right, so the momentum is shifting. Watch CCI. CCI is going to trigger. When it does, the last time it triggered was right here in June. What do we do? Look at the move from June into the highs. Okay, so when the three of these trigger, that gives you a nice signal. Okay, so here is the trigger.
As you mentioned, there have been ongoing strikes of writers and actors, which you can see behind me here. But there's also been a weekly strike of hospitality workers in the city, as well as a one-day strike of 11,000 city workers across Los Angeles. Data from Cornell shows that there have been more than 55 strikes spanning 95 locations in the state since the start of the year. And a big reason for some of the workers keeping on strike is inequality in the state.
I would say that's a question that every single working person in Los Angeles, and there's so many. Who is going to be able to live in the city? Is it going to be the few and the wealthy, or are working people going to be able to find a home that can make the money?
And while housing and wealth inequality are long-standing issues in the state of California because of its high cost of living, UCLA economist Chris Tilley told us and warned California may be the first to see this type of massive labor uprising in the country, but it certainly won't be the last, pointing to other states like Texas, where so many California residents fled during the pandemic, also facing a lot of the same issues: high cost of living, rising rates of homelessness, maybe not to the extent the state of California has seen, and also unemployment rates on the way up. So again, California may be uprising among so many different types of workers, but likely will not be the last.
What you're hearing about two things. Number one is the potential for negotiations that might move toward some kind of settlement in the writers and the SAG-AFTRA strike. But also the broader effects on the economy in California, where so many people are tied to the production related or whatever, who are tied to this sort of entertainment ecosystem, I guess I call it.
Yeah, that's a great question. And I think the economist we spoke to said you're going to start seeing this coming up in the data. Again, Tyler, really unique to California, obviously, that this is happening all at once. But it's not the last we're going to see of this. Your question on the writer's strike, I believe that there was some meetings last night between some of the executives and the writers, but the writers still saying they're still not there yet. Keep striking, continue to strike. And one more kind of fascinating thing that we've seen between all of these different classes and groups and types of workers who are on strike is a lot of solidarity, right? The city workers are supporting the hospitality workers. They're supporting the writers and actors. They're all saying enough is enough. It's too expensive here. We need pay increases. We need job protections. We need better working conditions. And that's something that a lot of the organizers that I've spoken to said they've been doing this for years and they have not seen that type of solidarity in other strikes and situations. It's really interesting.
You mentioned things, working conditions among them, but doesn't it really all boil down to pay? When you look at the settlement between UPS and the Teamsters, as I read that, there was a very generous increase in pay that basically got the deal done.
It's always going to come down, not only as you mentioned, to working conditions, some protections rather that are job specific. Obviously, the writer's concern, for example, about the use of artificial intelligence to create scripts. But as you said, and as you heard in the piece, who's going to live in the city? Who can afford to live in the city? Who's going to commute several hours to get to their job at a hotel or a restaurant or working for the city of Los Angeles here? It all comes down to who can afford to live here, and that's how you're seeing such a push for pay increases across the board.
All right, Kate, thanks very much. Kate Rogers reporting from California. Still ahead, back to school blues. Students are heading back to class, but there are no bus drivers to get them there. We'll discuss that and much more when Powerless returns. We will be right back.
According to Japan's PM office, North Korea may have fired a ballistic missile.
Okay, so we're looking for that buy signal. Probably tomorrow. That's cool. NVIDIA blowout would be nice. I really miss Steve Jobs with his sandbagging, under-promising, over-delivering. That was fun back in the day. Jensen Huang taking the reins of the sandbaggers. Maybe he under-promises and over-delivers this time. All depends on demand from my perspective. Supply and demand. If everybody wants NVIDIA's chips, they'll have an order book that's crazy, crazy strong. Okay, so let's get back to the business at hand. We've been on a sell signal for 47 minutes, and we're starting to produce another 15-minute candle here. Stochastic RSI, you can see in the bottom panel, is oversold, starting to turn. So if you're thinking about a long, a little scalp, it's late in the day. You only got 64 minutes to go. 64 minutes to go. I hope everyone's having a good day. I certainly had a good day. Enjoy being here, giving you the play-by-play, telling you what I see, sharing ideas, sharing experiences and knowledge with you, especially the newer members, some of you old fogies, you old folks. You've been doing this a while. There's a lot of good traders in this chat room. So if you're a new member and you're wondering who to follow, just watch the chat room for a couple of days. You'll see. It'll be obvious. Just don't follow that Brother Bill guy. Just kidding. Just kidding. He's a Kansas City Chiefs fan. That's the only reason I said that. I like Kansas City. Kansas City is I'm watching Kansas City this year. after watching Quarterback on Netflix. I'm a new fan of what? I'm a new fan, Kansas City. Also watched what was the name of that series on Netflix? It's big right now. The Swamp. Watched 3 episodes of Untold, Swamp Kings, about the Florida Gators college football program. Urban Myers and his tenure there. It's pretty good. Really enjoyed it. The takeaway for me watching any of these programs is, you get out of life what you put into it. If you're passionate, like many of you are, like I am, if you're passionate about the business of trading or passionate about whatever business you're in, you're going to do well. I mean, whatever you do, that's what you become, right? Whatever you think about every day, that's what you become. This recent episode, Untold, the Swamp Kings, Florida Gators college football program. My takeaway was that these guys really, really wanted it, so they worked really, really hard, and they achieved glory. Same thing with trading. Once you get it, the ebb and flow in the markets, what to look at. I like to use money flow. Where's it going and why on different time frames? Momentum, as I've been talking about the last couple of days, has shifted, very obviously shifted, and everything is starting to line up. You got this pullback for 3 weeks, 4 weeks. Now we get these shifts higher. Okay. This is the equal weight index one more time. Last time it shifted like this and it triggered a signal was back here in June. We went from 5,500 up to 6,300. Nice move if I don't say. Other indicators that are kicking into gear, starting to see a shift. Okay, we're going to see this shift. Okay, you can see this is turning. All right, this was capitulation selling last week. That's why this line is down in the green zone. Capitulation selling leads to buying at some point. Institutions buy after they see capitulation. Okay, we're looking for a bounce like September, October, March led to a rally. Money flow, where is it going and why? NYSE. Up, down volume. Cumulative is turned higher. S&P we talked about. NYMO, advanced decline percent. These are all turning. They're all in agreement. Doesn't mean we're going to go up every single 5-minute candle. No, it means that daily charts should continue. Higher highs and higher lows. We could have a down bar tomorrow and still have a follow through. That's what I'm looking for. I'm also looking for NVIDIA to beat the stuffing out of the bears. S&P had a nice run up this morning. Most of you took this trade to the upside. I took the 442 calls. I haven't traded SPY calls in a while, so I wanted to trade some SPY calls instead of S&PW. Big cap calls this morning. Both worked. Everybody in the trading room for the most part was on top of where resistance would be once we got above 4,400. We looked at 44.25, 44.40, and we stopped shy of 44.50. All depends on what happens tomorrow or tonight, according to the smart people out there. Okay, we got more selling into strength.
year to date. The last guy gave a revenue guide was $4 billion. Biggest upward slope of the street, any mega cap company has $4 billion. Biggest upward slope is any mega company. So because of where guys is going this month, right? Market's been edgy and tech's been kind of dicey. Does it matter more now because that narrative on AI needs to stay? The thing is, AI being intact is not all. NVIDIA has a special position in an outside expert position in that category.
Okay, so NASDAQ 100 is still there's only 10, 1, 2, 3, 4. There's only 9 stocks red on the NASDAQ 100. There's the top 10. SMH. Okay. Okay, I want to add the calls. I want to add the calls on the SMH right around 154. 154 is what I'm looking for. Actually, to buy. I'm looking for the index to jump. Yeah, you tell him, Bren. Bren, I love this lady. She's really smart. I love her even more than Stephanie, my girlfriend. Kathy Woods used to be my girlfriend, according to everybody out there. Because I always supported what she was saying. She's still really good. All right. Looks like we got a higher low starting to print, about to go on a buy signal, S&P 500. Okay, I'm just going to take SMH. I'm going to buy the 154 calls. Just bought some 154s here. So I have a 2 handle either side, 2 handle strangle, 2 plus or minus, 154 call, 150 put. Actually about 3 on the put side, but I want to add a few more calls. I'd like to get up to about 20 calls. That's just me personally. I mean, if you do 5 and 2 or something like that, or 2 and 1, same effect. I'm looking for upside. If I'm wrong and it drops hard, then, you know, the puts will cushion the loss in the calls. However, if NVIDIA doesn't make a big move and it just kind of sits in the middle of price action and it kills both puts and calls, that happens too from time to time. I doubt it this time. There's just too many calls that have been bought on NVIDIA coming into this week. No matter what source you're using, the calls just outnumbering the puts. A lot of traders are nervous.
swoon that we've seen.
I mean, look, I think there are very high expectations for NVIDIA and for other names as well. In addition to Broadcom, I also think that Lam Research also is going to benefit from AI. But there's a lot of hype there.
Oh boy.
In the next 5 years. I mean, it could go from anywhere from 80 billion to, if you listen to AMD, 150 billion. TSMC thinks it's a 50% CAGR in the next 5 years.
SMH. I'm feeling really good about this earnings. If anybody can do it, you can do it. Thank you, David, for that, by the way. That was fun. It had me laughing my ass off. Rob Schneider in Waterboy. Adam Sandler. I like Adam Sandler a lot. Some people don't like him. I like him a lot. Mr. Deeds, that was good. The guy, Carturo, whatever his name is, the butler. I'm sneaky, sir. And what's her name? Winona Ryder. I enjoyed that movie. I like comedies. A lot. All right, so we're counting down to NVIDIA earnings. Are you guys excited? I'm excited. I'm very excited for it. I'm looking for a big move. The only thing that would be disappointing if it just fizzles out, meets expectations, and the markets don't sell off or don't pop, and they just like stay right in this area. That would be a little disappointing if that happened. That said, though, I'm pretty much most of my positions are longs. I've been selling covered calls against stocks like Apple, Microsoft, Unity Software, Carvana, Merck, and just, collecting premium while we're waiting for the markets to start this bullish cycle. All right, so the bullish cycle started on the reversal from Thursday into Friday. Followed through Monday, took a break yesterday, following through again today. We got NVIDIA. So do we follow through? Well, momentum is clearly in the bullish camp right now. All right, so if we were reporting NVIDIA earnings and we were just topping out like we were in July, end of July, if we were in that circumstance, I'd be a lot more bearish or a lot more defensive, right? So instead of taking twice as many calls, I'd be probably taking twice as many puts. You follow? We've changed direction, and the cycle, this momentum is not going to change direction real quickly. We're back to the 105. ES is back to the 105. Do we rally into the close? That would be kind of cool. NVIDIA back up to the evening highs. Today's session highs just a little bit above where we are right now. SMH, I've told you I'm taking the 154 call. I have some 156s too. Take some 154 call side and 150s on the put side. Half as many puts as calls. Hoping for the best, planning for the worst. The big theme being momentum shifting. Trust your indicators. Yep, exactly. I like Bren. She's really smart, this lady. She's pretty too. Good looking lady. Stephanie's good.
Picture to make it as simple as you can make it. You know, rates down, stocks up. Rates have been putting pressure on stocks for the better part of the last month, right? The 10-year has been at these elevated levels, and stocks have thought that was too hot to handle. Well, rates go down today. The manufacturing PMI number was ugly. Some of the retail numbers were ugly.
Okay, SMH continues to rally with NVIDIA into the close. Let's go. Let's go, LETSGO. Let's go, NVIDIA. Come on. I want to see a barn burner. Oh, boy. I think I'm going to create some slides that are consistent. I could just go to when I start talking about trend changes, reversals, examples with calls and puts, and how I think about trades, whether I'm selling premium or buying spreads or whatever, and 9 and 21 day. I like giving live examples, but to have it in a graphic form that I could just flip through very quickly, that are consistent every time we talk about, I think I'm going to do that. With StreamYard, I can save a slide presentation basically. So, I mean, examples, S&P 500 is clearly, look at VWAP, that dark purple line, clearly in a bullish trajectory. Completely different than yesterday. VWAP was down all day. Here we are with upward sloping VWAP. PayPal, okay, real-time example, PayPal flat VWAP. It wasn't flat this morning. It's flat now, though. So when it comes to VWAP, Novissimo, you were talking about VWAP earlier, okay? So if you see this pattern, if you see VWAP up and to the right, you've got a bullish trade. You just got to buy the dip. If you see a flat VWAP, let's see, something that's not working today. Let's see what's not working today. Caterpillar. Let's see what Caterpillar is doing. Caterpillar. Okay, Caterpillar has been on an upward trajectory during the day. Okay, so VWAP up and to the right. So last week, Susie made the prolific comment, nothing's working to the long side. And that was very true. Nothing was working. Most stocks were closing lower or a flat VWAP, didn't go anywhere. This week, Monday and Wednesday, this week, most stocks are up and to the right, VWAP up and to the right. Let's see, Vornado Real Estate. Look at Vornado. Is that a beauty? VWAP up and to the right. XLRE Real Estate up and to the right. Sector strength showing up in SMH. Semiconductors up and to the right. Look at the price action pulling away. VWAP's about to, NVIDIA is about to break out. NVIDIA up and to the right. Not flat, up and to the right. What about, let's see, US Steel. There you go, flat VWAP, and it drops off a little bit. All right, so there's no trade on X today. That's okay. Tomorrow will be another day. Let's see what else. Zillow starting to flatten out, but it had an upward sloping VWAP for most of the day. Rivian up and to the right. Roku sort of flat. So look at how flat this is. Think about it for a second. If you took a long over here this morning, you did very well. If you tried a long on the bounce, you probably did okay. But now you're stuck in a trade because it's just moving sideways. VWAP will tell you that, plus relative volume. You put those two together, that's a good solution or a good strategy. Tesla.
normalizing for them. Macy's has been losing share to Amazon and others forever, right? I mean,
Okay. What else? Let's see what else was working today. AMC. I mean, it's a cheap stock. They all apply. Flat VWAP, starting to bounce here, but you got the high, you got the low, flat VWAP. Not much to do here. Let's see what else. Bitcoin, Marathon Digital, upward, up and to the right. Bitcoin, US dollar, VWAP, up and to the right. Was flat early in the morning, so there wasn't much of a trade. Flat in the morning, then it took off to the upside. VWAP turned up and to the right. So paying attention to VWAP is going to help you out a great deal. VWAP, high relative volume. You know a stock is in play when you have 2, 3, 4 times normal relative volume compared to the 5-minute chart over the last 5 days average. When you get 2, 3 times relative volume, you've got a bullish trade. You know that people, or a bearish trade, depending. 5 times relative volume could be a bearish trade or bullish trade, depending on the direction of VWAP. Right now, it's obvious Bitcoin is more bullish. The Qs. You got 9 stocks on the Q. Out of 100 stocks, 9 are red. The other 90, 91 are bullish. The top of the list, let's go see the top of the list. Top of the list is, drum roll please, Netflix. Okay, so what do you see? The morning was a great trade. Trying to force it in the evening session, though, didn't work out too well because we got a flat VWAP and price is just hanging out. Netflix was up quite a bit today. It was up over 20 handles, 21 handles earlier. Ross Stores followed through. Ross Stores, after a great earnings last week, Ross Stores, VWAP up and to the right. What about Kohl's? VWAP up and to the right. It's been moving higher all day. AMD, VWAP up and to the right until about 12 o'clock, and then it flattened out. Price action just jigging around. Now look at what's happening towards the end of the day. If you want to trade AMD instead of SMH, a strangle on AMD probably does very well. Potential upside on AMD is about 123, 124. What was it? 130 was the recent highs, right? On AMD. The recent highs 132, I think it was. 132.83. So you could play this. Probably going to hear a lot of good things that apply to AMD as much as NVIDIA. Are you tempted to buy NVIDIA earnings before? What a dumb poll. CNBC is kind of crazy lately. All right, so VWAP is your friend. So is the 921.50 day. Okay, 921.50 day up and to the right. You want to look for pullbacks. Buy when you see other people buying. Just because it pulls back to the 50 day doesn't mean it's going to hold. You don't buy just because. You want to see the volume, and you want to see the reversal underway. 3 white soldiers right here, the first week of May on AMD, and this thing took off from 93 up to 130. 30-point move. Nice move. 921.50 day riding up and to the right. Okay, so it just got rejected, it looks like. S&P just got rejected. Lower high. I'm getting excited about the earnings, NVIDIA earnings. Swamp Kings was pretty interesting. I didn't realize Tim Tebow used to play for Florida, or Aaron Rodriguez. What is it, Rodriguez? Aaron, who's the guy that got arrested? Used to play for New England. Hernandez, Aaron Hernandez. I don't know why it wouldn't roll off my tongue. All right, looks good. That's a crazy story. Aaron Hernandez. Crazy, crazy. Aaron Hernandez, yeah. Yeah. Aaron Hernandez. Man, that was a crazy story. Tesla 5 times. Wow. TSLL. I'm bullish. Yeah, it looks good. Inverted head and shoulders. We're right back to the 105. Okay. I'm just imagining some of the things that people are going to say. Oh, this market's rigged if NVIDIA like zooms higher. Oh, I told you so if it drops. Everybody's a genius. Nobody really knows what's going to happen, right? All we can do is follow money, follow price, volume, over time. Okay, watching the futures trying to get back above the 105. We got an inverted head and shoulders on short time frames.
And we look at the top 100 institutional active managers, aggregate their relative weighting in these 15 different mega cap or large cap tech stocks. And ultimately what the answer is that Apple's weighting in the S&P is called it just shy of 8%. And Apple's weighting in the top 100 actively managed institutional portfolios is closer to just under 6%. So the answer is yes, Apple is under-owned more so than any other mega cap tech stock today for the first time in 4 years, taking the baton from Microsoft.
I mean, it would seem to me the obvious answer as to why this is is because all of those other companies that we think about are all the ones who are laying out their AI strategies. And that's where all the hype is, and we're still kind of waiting to find out what this is really going to mean for Apple moving forward. Is there any truth to that?
No, I think that's fair. I think the other angle here too, though, is remember this is as of June 30th, so this is pre-earnings, pre-Apple earnings. But ultimately, if we think about what happened in the June quarter, Apple has been on fire effectively since February. It's been was a massive outperformer. And I think this is the market reaction to valuation, frankly. Looking at numbers and saying, well, Apple is still declining in the near term. There's the potential to get back to growth in 2024, which I am bullish on. But ultimately, they need to put those numbers up. And I think investors got a little bit concerned, at least, with where valuation was as we got towards the end of the quarter, and we're looking at Apple trading, again, closer to 30 times PE. So I do think it's partially AI. I do think it's partially also valuation, and then investors just being mindful of Apple's run-up year to date.
Makes me also wonder whether, you think Apple's near-term direction is not going to be Apple's decision to make. I mean, there's nothing that's going to happen in the very, very near future. Now, of course, they have the upgrade cycle coming in September, but it's potentially going to be driven by, in part, what NVIDIA does after the bell today, or wherever the AI story continues to go, and the overall drag higher that story has meant to megacap.
I think you're exactly right.
Early market on close imbalance, currently sitting at 275 million
in
for the
terms
sell
of if you
side.
get a really positive report from NVIDIA tonight, if you look at interest rates and they do fall lower in the near term, that's ultimately positive for stocks, Apple, included in that group. Now, you're right, we are in a bit of an information vacuum. We aren't going to get any real news on Apple until mid-September when the iPhone launch comes. Ultimately, I do believe that can be a catalyst to drive numbers higher. I think this will be actually a good iPhone 15 cycle. But I think you're dead right that within the next 30 days, a lot of the way that Apple will trade will be dictated by broader macro movements, and again by NVIDIA tonight.
What's your pushback to those who say it's just too rich, Apple's just too expensive, 30 times? Yeah. The fundamentals aren't phenomenal in the environment we're in with rates where we all know they are. How do you push back on that?
When I started working at Morgan Stanley here in 2015, I heard the same narrative as Apple was expensive. If you made that call, you ultimately would have massively underperformed because Apple has been a great outperformer. It's gone through different business model pivots that have ultimately driven the multiple higher. Listen, I think today it's fair that Apple has gone from, call it 190 to 175. This is a bit of a consolidation that was needed after the stock was effectively up and to the right for the better of 6 months. What I think needs to happen is that numbers need to move higher. And ultimately, that will give investors kind of the confidence to say, okay, I am willing to pay whatever it may be, 25, 30 times for this stock, not just because of the near term, but you also have to think big picture, longer term. Apple just added 150 million new users to their installed base last year that are at the very beginning of their monetization curve. I would argue they're not really impacting the model. So when we look at, for example, fiscal 24 EPS, is that reflective of the past user base and their spending and their profitability, or is it reflective of these new users that are coming on board? I'd argue the former. And so ultimately, maybe what I'm saying is that the quote-unquote normalized earnings power of Apple's install base isn't necessarily what we're seeing in fiscal 24. It's what we're seeing further out. And on that basis, then Apple would actually be cheaper than the market thinks it is today.
Apple ever going to buy something larger than Beats? How do you do that?
I remember last time I was on here, we talked about ESPN.
It's part of the story that people talk about. Like, they're going to mount the cash. What are they going to do with it?
They're going to continue to buy back $20 billion of stock a quarter and pay a dividend and grow that dividend over time, and obviously use the rest to reinvest. I don't think that Apple is going to do something big and flashy. I think ultimately their goal for cash, again, is to use it internally, build versus buy, so to speak. You've seen them build an entire TV platform off of nothing when everyone thought 5 years ago they were going to buy Netflix. So unfortunately, for the story, I don't think Apple will go out and buy anything like ESPN or something flashy, as cool as that may seem. I think this is going to be an internally driven business, build versus buy.
Appreciate it as always. Eric, thank you. We'll talk to you soon. Yeah, Eric Woodring joining us today from Morgan Stanley. Coming up, trouble in the charts. Top technician Jonathan Krinsky mapping out his forecast where he sees this bounce heading from here. He'll join in post 9 next. And later, a breakdown of what to watch when NVIDIA does report in overtime. We're about a half hour away from that. And it's not just NVIDIA. Snowflake also reporting this afternoon. The key data you need to watch when those numbers hit the tape. We'll tell you closing bells coming right back.
Yeah, David. So, once you understand price, it's pretty logical, right? It's either going to do three things, one of three things. It's either going to go up, go down, or go nowhere. So if it's going up, you know that there's buyers there. And if you look at the volume, relative volume, that's telling you that there's buyers. And if it's above average volume, R-ball, that's usually indications that institutions are active. If it's dropping and relative volume is high, then that's telling that the sellers are active. So yeah, price action, that's why I like to use price action. Most of you in the trading room use it, whether you realize it or not. Most of you realize it. Once price starts to move higher, that's your signal. It's when we get all complicated and have to throw indicators and everything on there. I mean, Mondo likes to use the 5-minute Bollinger Bands. That's his strategy, but it's based on price. And Bollinger Bands are the single indicator, aside from, trends, of course. Yeah, I think the problem a lot of traders get into is trying to predict what the market's going to do or have an opinion of what the market's going to do. You can kind of predict what's going to happen given price action and volume to a certain degree. But I think the biggest flaw that new traders have is they have a bias, and then they can't seem to change their bias, especially in the longer time frames. This is too high, or this is too expensive, or this should turn because of X, Y, Z. An opinion based on whatever, instead of price, volume, support, and resistance. All right, we're above the 105 on the S&P futures. S&P is grinding back up towards the highs, back on a buy signal.
We're back up closing bell. The major averages rebounding today and setting up to snap a 3-week losing streak. Our next guest, though, says this bounce could be set to stall and that we're only halfway through this recent correction. Joining us now, post 9, Jonathan Krinsky, BTIG. It's good to see you in the house. Why are we only halfway through? What tells you that?
So there's two issues that we're looking at for the markets. Now, short term, we did get some oversold conditions last week. I think we're seeing relief this week. But when we take a step back and look at the medium term picture, some of the momentum gauges that we would classify as medium term, such as weekly MACD, starting to flip over. We have a sell signal on that on the NASDAQ. We're very close to that on the S&P. The other issue that not a lot of people are talking about is this volume profile that we talk about. Most people look at volume over a time series. We like to look at it on a price basis. And if you think about what happened from the last time NVIDIA recorded earnings in late May, we pretty much went straight up from 4,200 to 4,600 on the S&P. That creates what we call this volume pocket. Oftentimes, what you see on the upside,
Yeah, aside from price action, I think the other biggest problem that new traders have is they chase. They feel a need, they have to chase price because everybody's excited about it. Even though people might have got into the S&P 500 at 9:30 this morning, You know, talking about how bullish it is at 130 is not a reason to go buy it at the high of the day. So you have to have some sort of reference point to understand where you are, you know, ATRs or daily range or VWAP, gamma levels, support resistance. We are pushing a bit higher though. Looks like NVIDIA wants to take the highs.
Now, forward returns on the other eight occurrences were somewhat mixed, but there were some notable times. One was the last time NVIDIA reported earnings in May, that was a bullish catalyst. Before that, you have to go back to March, the end of March 2022, which is the tail end of that counter-trend rally. And then there were a couple occurrences in 2008 as well.
Now, in fairness, you haven't liked this market for a while, right? I mean, you have, from my recollection, you please correct me if I'm wrong, you know, a lot of the March up, you suggested, well, this can't last, and it lasted. Why was that? Maybe the technicals that, you know, you're relying so heavily on aren't telling the whole story. Yeah, is that a fair depiction of sort of the case you made? I can't remember you coming on in any recent memory and saying, yeah, this is totally justified. I think we're going back to new highs or to 4,600 where we got to.
Yeah, look, I think the breakout of 4,200 and the S&P accelerated the move, and that was really the trigger where we did see a bit of breadth expansion. Up until that point, it really was a Magnificent Seven-led rally. So we've certainly seen breadth expand, but you haven't seen that follow through. For instance, the percentage of stocks above the 200 and the NYSE has yet to exceed 75%. 11 months into a new
We're looking
market,
again now
we've
at the 30
never
month
seen
close imbalance. Still sitting at 275 million to
yes,
the
it's
sell
been
side.
much stronger than anticipated. In other ways, we've never seen a new bull market that started this week internally.
I know, but you got to be careful when you do that because, you know, technicians would always say, well, we've never ended a bear market without some dramatic capitulation event. We never really got that, and that's the kind of stuff you were saying at the time back then.
Totally. And look, one of these two situations will be true. Either it will be the weakest start to a new bull market we've ever seen, or it will be one of the biggest head fakes and bear market rallies we've ever seen. We don't necessarily think we have to go back to the lows, but I think a retest of 4,200 certainly makes sense in the scheme of things.
So then set things up for us in 20 minutes or so, right after the bell tonight, overtime NVIDIA. Yeah. So given everything that you've said, to what degree?
Okay, the FANG stocks are turning. Microsoft turning off the low here. Short covering. Apple's at the high of the day. Merck turning the corner. PayPal.
Anecdotally speaking, this is the most anticipated hyped up earnings release we can recall in some time. NVIDIA's gapped up pretty strongly the last two earnings reports. Our sense is a gap up this time will probably be sold into or sell the news. And we'd also say, just looking a little bit shorter term, the NASDAQ broke down below the 50-day, right, a couple weeks ago. It's now retesting that. We haven't been below the 50-day prior to this correction since January. So I think that's an important retest. We think it'll probably act as some resistance.
All right, good stuff. And good seeing you in person. Jonathan Krinsky, BTIG. Joining us, coming up next, we are tracking the biggest movers as we head into the close. Christina Partsinevelos is standing by with that. Christina.
Will the apes huddle because AMC shares are getting crushed? I'll explain all of that after break.
Okay, headed back up to the highs. The cycle, as we were talking about earlier, the cycle shifted on Thursday, Friday of last week. Followed through this week, Monday, Tuesday, Wednesday. The trend is up. The trend is up. All right, we got the 10-year rolling over. We got VIX rolling over at the lows. We got momentum indicators. We've got muscle. We got tick cumulative green. Prices above the 105 and rising. And we're doing it on 2-to-1 up volume on the NYSE, 2.7 on the NASDAQ. NASDAQ leading. What a wonderful Wednesday it is. Hope everybody's having a good day. We've got about 15 minutes to go. It's currently 3:43 on the East Coast, 3:43. Wednesday the 23rd. We got Jackson Hole speakers starting tomorrow, and then Friday we have Jay Powell speaking. So that could change everything or initiate a follow-through and a push through the 50-day. My guess is that Jay Powell is going to say some things that are going to have traders pondering further upside, and we stop at the 50-day perhaps. This is still seasonally one of the weaker months of the year. August and September, 2 months where we normally see pullbacks. Okay, let's go look at the S&P. S&P 500. Okay, so a nice bullish. Okay, so tomorrow could be the day. Maybe we test the 50-day tomorrow on news out of NVIDIA. Or maybe this is the last day up. You know, we're pretty close to the 50 already. I'd be taking some profits off in the strength. That's all I'm going to say. If we get through the 50-day and NVIDIA is like a blowout and we fly higher, we can sell into strength tomorrow. And then reassess the markets if we can stay above the 50. I don't think we're getting above the 50-day. It's just my guess. I hope I'm wrong.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments.
The one caveat is that we could see bullish follow through on the momentum. NIMO passes through zero on NVIDIA earnings and stocks are up. And then we could see 2 or 3 days more upside.
Which was launched to raise capital and pay down debt. Those APE shares will be converted to common AMC stock on Friday, which raises those fears of dilution. But have no fear, AMC also plans to do a reverse 1-for-10 stock split, aka reduce the number of outstanding AMC shares. You can see AMC is down about 12%, APE down almost 6% today.
Wow.
And you might be breaking a sweat if you take a look at shares of Peloton hitting an all-time low. The company posted a much wider than expected loss, citing a recall of its bike seat post, which literally snaps off if you pedal too hard. You also had CEO Barry McCarthy who wrote in his shareholder letter that consumer spending has shifted towards travel and experiences instead of Peloton hardware. Shares down almost 23%.
Brutal. Barely above $5. Christina, thank you.
Thanks.
Christina Partsinevelos. We're also keeping an eye on Netflix. Julia Borston is here with that move today. What's behind this, Julia?
Well, Netflix shares are up about 4% today, and it's because of a bullish note from Oppenheimer with an overweight rating on the stock and a $515 12 to 18 month price target, laying out how paid sharing and advertising should boost Netflix's revenue by 40% by fiscal 25, 40% higher from where it was last year, saying that this increase will be in very high incremental margins. Oppenheimer writing, quote, "We believe Netflix's dominance will continue given its clear advantage in producing high engagement content and monetizing that content more effectively than peers."
New York FANG RSI is back above 50 now. MACD about to cross. Stochastics firing. Looks really good.
And Netflix may be benefiting from the fact that it appears better positioned to ride out the writers and actors strikes than its rival media giants. And this, of course, comes as the studios and writers standoff continues. Scott?
Julia, thank you. Julia Borston. Last chance to weigh in on our question of the day, the question of the moment. Are you tempted to buy NVIDIA before tonight's earnings report, before those numbers come out?
No. What's the matter with you? Do people actually do that right before earnings? I guess. Why would that's a dumb survey? Well, in my perspective, it's a dumb survey. We got 12 minutes to go. 12 minutes to go. I'll be here through NVIDIA earnings, hash it out and see how it goes. I'm glad I'm on the second floor, only one floor down to the ground if I have to jump out the window on NVIDIA earnings. What do you say? Jump out the window? No, I'm just kidding. Just kidding. Cleveland Cliffs on the move here. Cleveland Cliffs is rising rapido right now. Cleveland Cliffs. CLF is on the move. CLF is on the move here. Check out CLF. Here's the daily. Okay, reversing off the low. 5 minute. Nice move in the last hour or so. What's US Steel? US Steel, Kerplunk, down a little bit. No worries. I mean, I'm more concerned about NVIDIA right now, or I'm more focused on NVIDIA, I should say. Proper words. I'm looking forward to watching the last 2 episodes or whatever for Swamp Kings. Okay, lower high on S&P, lower high. I would imagine some not short covering, profit taking. Profit taking. Profit taking. I so want NVIDIA to blow this out. Oh, I need to buy a few more calls. I just remembered. Let me buy a few more calls here. I'm at SMH 154s. SMH. CNBC really thinks that people would buy NVIDIA right now, 9 minutes before the close. I guess they want to see how many people are actually watching the program, huh? Bitcoin still pushing higher. Big reversal candle today. Big bullish reversal candle today on Bitcoin. So even if NVIDIA blows it out today, it has to hold wherever it goes this evening, whether it's lower or higher. It has to hold those levels. So recent low was that Monday's low was what? Let's see here. Monday's low was 442. Monday's low was 442. Last week was that the 14th, Monday. The low was 404. Imagine a 100-point move in 9 trading days. Yeah, I mean, this one did, what did it did 80 last time? Was it 60, 80 points on the last earnings? So for people who think that NVIDIA can't gap up again, I just point to Meta, which did that twice in its earnings. After the reversal back in January, we gapped up. We pulled back to the 21-day. Next earnings, we gapped up, pull back, runs higher. We gapped up again, pulled back underneath the 50-day, looking for Meta to get higher. MACD's turning, stochastics turning. I love this setup. I love when it sets up like this, like over here in February. And we went on to a nice rally there, 20, 40 points. Peloton reversing off the low, higher lows. Peloton, higher lows off the low. Mm-hmm. Okay. Getting close. 5 minutes to go. 5 minutes to go.
It's going to be eye of the beholder. Look, there was nothing particularly wrong with Microsoft or Apple's results, but the stocks in the market sold off because it was ready to do so. I think we're going into the NVIDIA report in a much more neutral setup. We were oversold. We've had a little relief. Yields are down. We've had our little 5% pullback. Question is, was that enough? Also, for as much as NVIDIA is up, for as far as it is above its longer-term trend line, it has been more overbought in the past. In November of 2021, not only that, it's done nothing for a month. So I think it's a bit of a crapshoot short term. There is going to be a quarter where people have an oh no moment. We front loaded a lot of the enthusiasm for AI. Who the heck knows if it's going to be this one?
I agree.
Nice move in the S&P here. As we sort of move to the close here, we got better than 1% gain. Yes, you said it. Rates down, stocks up.
And that's basically what it has been. I mean, banks also found their footing. That was important because that's been a very vulnerable
NVIDIA, S&P up 44 right now.
You know, look, again, as they come up to a neutral level, we're still
Not a bad day. Not a bad day.
We're not quite broken the little downtrend. So it's constructive, but it hasn't really proven quite anything yet.
You know, Kate, you can hear Snowflake. Hey, don't forget about us. We matter.
Right.
We matter.
I know. It's been all about NVIDIA, but we'll go to Bitcoin today. Here, Scott. So guidance is going to be key. Snowflake typically provides product revenue guidance. Street's looking for $675 million there for Q3. There's been a lot of talk about optimization headwinds. So in other words, talk where customers spending a little bit less in prior quarters as they are optimizing spending, as it's called. The Street's looking for any signs. And some of that pressure is mitigating. Net recurring revenue is expected to continue to slip, but any silver linings there of booking improvement and momentum would be seen as a positive in this tougher budget environment. Any signs that consumption trends have bottomed based on some of the June and July trends we're going to see today. Snowflake also cut its forecast in the last report, so the stock was down last quarter on that lower outlook. It's been a big earnings mover in the past, and it's been on a streak lately of some downbeat reports. So maybe today that'll turn around, but we'll see in a few minutes here, guys.
Yes, we certainly will. Kate Rooney, thank you very much too. Christina Partsinevelos, as we count down to the big report. I mean, you feel the magnitude of what's at stake here as well. As closely as you cover a lot of these companies, this just feels different this time.
Yeah, I mean, we talked about this on Halftime Report because of its influence on the entire S&P 500 and this whole
AI themes and whether it's going to be hype or not. And so NVIDIA actually remains one of the few thematic plays that is actually seeing a material bump in its numbers from AI. And that's why there's going to be so much emphasis placed on its data center revenues, given it contributes roughly 60% of total revenues and includes those sought-after AI chips we've been talking about. So the street is expecting that number to more than double to $8 billion at least in Q2, with analysts even calling for $15 billion in the coming quarters. That is a pretty big goal when total revenues are only expected to be about $11 billion.
Imagine if Q3 comes in at 16 billion versus 8 billion last time. 8 billion last time was a beat by 7 billion. Wow, that's amazing. Okay, little rally coming in. Little shorts covering in today. Shorts covering S&P. Okay. A very, very good day for the S&P and for traders in general. Most stocks did move up and to the right.
Species within the market that it doesn't necessarily have coattails directly for other either macro or fundamental factors. Those are the questions right now. I think big picture, not to overthink it. If you thought 4 weeks ago.
Okay, oh wow, it snuck up on me. Here we get the closing bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's the closing bell, Wednesday the 23rd. I'll be here into NVIDIA earnings. Have a great evening, everyone. I'll be here. I'll sign off after NVIDIA earnings, but I'm going to put the headset down and I'm just going to be listening to the markets, and I'm going to crack open a beer. I'll be right here with you.
This is the moment Wall Street has been waiting for. NVIDIA's second quarter earnings report is just minutes away. One expert this week called it the single most important print of the entire year, and for good reason. NVIDIA has been the poster child of the AI-driven tech gains, propelling the stock above a $1 trillion market cap this year. And it's seen some huge moves after earnings this year. After Q4 results in February, the stock jumped 14%, and after May's earnings report, it spiked nearly 25%. And you can see it's kept running since then. Today's options implied move is plus or minus around 10%. And boy, the guidance expectations are high. We've got full team coverage, ready to break down the results as soon as they cross. And as we await NVIDIA earnings and numbers from Snowflake and Autodesk, let's bring in our market panel. Joining us now, Phil Camparelli of JP Morgan Asset Management and Matt McIlvaine of Madrona Venture Group. Guys, welcome. Phil, yields backed off today with the 10-year below, I think it was 4.2%, and stocks ran. So does that, I mean, it seems like it raises the bar for tech results tonight. What do you think?
Yeah, John, huge exhale today because investors were absolutely paralyzed by the last 50 basis point move in rates. And it brought up all those bad memories from 2022 when instead of stocks and bonds being negatively correlated and providing diversification, we're in this world where bonds were the problem for the last few weeks. Now today what we're seeing is, and what we believe is, this is a story still about disinflation. This is not a story about above trend growth. I think on Friday, Friday at 10 a.m. is a little bit more interesting than NVIDIA results. Personally,
I gotta leave here at 4:30 to get there, so 4:35. What's up?
The one road is going to be we're close to done. Maybe not done, but we're close to done. We're going to keep rates up here, but we're going to be days dependent. Or the second road, which investors would not like, would be if him and the committee were nervous about this latest run-up in growth Atlanta Fed and hinted at additional multiple hikes. We think that
I'll leave here at 4:30.
It's an inflationary story, and we think that's still a very compelling backdrop for both stocks and bonds in the near term.
Okay, Matt, the whisper numbers that I've been seeing on NVIDIA's guide.
Well, post office is closed, I believe.
Around $14.5 billion, which I think is like 2x what they did last quarter before, they guided to what we're expecting now. I mean, how out of this world is that expectation that it puts on its head the big outperformance that we got in the guidance versus expectations 3 months ago.
Well, that is the risk. It's an expectation game, and I'm actually more interested in the Nvidia earnings. We'll see what the folks do on Friday. You know, the reason it's so important is because Nvidia is the leading edge of the curve of what's happening in AI. And it's only the beginning because they're really still primarily focused on training models versus inference of models or running these models. And there's so many things that NVIDIA can do in that area. And we'll see how much demand that they've generated so far and what they're more importantly, the guide's going to be for Q3. So I think it's really critical to look at the guide. And then you can look through to things like Snowflake, which is also about to come out with earnings. I think the Snowflake trick is the balance between optimization that's been going on for the last 4 quarters and the future of new workloads like these AI-driven workloads. Here's one stat. There are 100 exabytes. That means 100 million terabytes of unstructured data sitting on premise still today. Yeah, a lot of that data is going to move to the cloud. It's going to move to places like Snowflake that are trying to be relevant as not just a data warehouse, but a data modeling system for AI workloads.
Well,
so
Matt,
it's just so much opportunity.
We've got data moving right now on earnings. Autodesk earnings are out. That's not popping after hours. Kate Rooney has the numbers. Kate.
Hey, John. So it looks like a beat here on earnings and revenue here for Autodesk. Let's start with that EPS number, $1.91 adjusted. That was better than expected. Street was looking for $1.73 there on EPS. Revenue coming in stronger than expected as well, $1.35 billion. That was up 9% year over year. Better than the Street was looking for at $1.32 billion. Also looking like Q3 revenue and EPS guidance is better than expected. And as well here, it looks like in the release, they're raising the lower end of their guidance ranges, which is why you likely see the stock popping more than 6% here after hours. Back to you, John.
Yeah, Kate, thank you. And I know they had made some accounting changes that have the Street nervous over the past couple of quarters, and perhaps that's starting to get digested now. Phil, given this pop that we're seeing after hours, after a strong day for the NASDAQ and tech stocks overall, how much are you going to read into how that
around 4:30, let me know where you are.
Sure, we've got Jackson Hole at the end of the week, but for what to do portfolio adjustment wise.
Okay, so turn it off.
Yeah.
And
John, we're
call
not underweight
me
stocks.
back around. I'll
Okay,
call you
I
back around
think
4:30.
If the
Turn
economy
it off,
avoids
okay?
recession, which we expect that it will, we only have a 20% chance of recession over the next 6 to 9 months, combined with a Fed that can actually pause interest rate hikes, I think that's a really supportive environment for stocks. So we want to be underweight. But there is a really important opportunity, John, which we've spoken about before, that remains in the front end of the U.S. yield curve, where we can get about 8% in yield, in high quality, high yield, which looks exactly like the long-term capital market assumption for stocks, but with less risk. So again, we don't want to be underweight stocks. I think that would be a mistake in a world where the U.S. economy avoids recession, but we are looking for better ways for risk-adjusted return, and the yield play is really important there. And as far as the tech story goes, John, this is all the same story. If we continue to march higher in rates or multiple hikes have to happen, I don't care what the name of your stock is in tech, you're going to face some pressure as multiples contract and yields march higher. So it's all the same macro backdrop. And I'm telling you, the 10 o'clock story on Friday, John, is where all the action is. Well, maybe not all the action. We got a lot of action happening right now, including Snowflake's numbers starting to cross. We will bring you those as soon as we have gone through them. Matt, you were talking about Snowflake before, and speaking of a stock where there's been some chop post earnings, the consumption model here and the kind of quick reaction that you're able to see in what enterprise demand looks like and how companies are trying to save money. That's sort of an interesting trend when you put it up against AI, where I have heard about concerns that people are stockpiling chips. It's really hard in some cases to tell what the real demand on the ground is, and it's really easy in some others, right?
Well, you're exactly right, because it goes chips and then data and then models and then apps. And Snowflake is in the data management, and they traditionally have been a data warehouse and not an AI data modeling business either. So on the one hand, they've got this headwind where consumption has slowed down. Some of their big enterprise customers are saying, we've got to optimize our spend with Snowflake. But all of these customers, and we just did a survey, over 400 recent earnings reports, on average, 6 times in every one of those, whether it's a tech company or a non-tech company, they're mentioning AI 6 times in their Q2 earnings. Everybody's talking about it. It's the very early days. Clearly, NVIDIA is out ahead, but Snowflake is going to have a tailwind of a whole bunch of that business. Whether it shows up in this quarter or not, because the optimization means in a consumption model that you don't actually use, so you therefore can't recognize the revenues as quickly as you might have otherwise thought the company was going to do so. That's a headwind. That's going to take some time to work itself out. But the AI tailwind will build quarter after quarter going forward here. I think Snowflake will be a beneficiary of that. And look at that company with only being 15% up this year compared to the NASDAQ and a lot of the other tech stocks and metrics.
Well, those numbers are out. The stock, at least initially, moving down at the moment. Let's get to Kate Rooney with the numbers. Kate?
Beat here for Snowflake in Q2. Starting with EPS, this is the adjusted number, 22 cents on EPS, 12 cents better than expected. On revenue, also beat $674 million for the quarter. That was up 36% year over year. Stronger than expected there. Product revenue for the quarter, $640 million or so. That was up 37% year over year. And then product revenue guidance, this is a key area. It looks like it's in line here, 670 to 675 million. Street was looking for 675 million, so slightly lower in terms of the revenue guidance on products for Q3. Also, a quote here from Frank Slootman, talks about enterprises and institutions being increasingly aware that they can't have an AI strategy without a data strategy. And so mentioning AI there, but again, stock down here. Slight miss on that product revenue, though. John, back to you.
Yeah, the midpoint a bit below consensus, but the consumption trends here are going to be important. Kate, thank you. Let's see. We still have Bill and Matt are moving up.
US and Europe.
We still got Bill and Matt. Matt, I want to go to you on the reaction here because I know Phil's really excited about Friday in Jackson Hole. Software results. When it comes to what investors need to pay attention to on the Snowflake call, I'll be speaking with Frank Slootman actually after that call for even more detail. But the consumption trends, not just for the quarter, but longer term, and the remaining performance obligations. How should investors parse that as they try to understand what's happening here with the data and the demand?
I think the change in RPO, so calculated RPO, will be very important to see if people are signing up to spend later. My read on what we just heard on those numbers is this is a stabilization quarter. And there's probably some conservative guidance into Q3 of how much more of this optimization is going to happen, and they'd rather be able to have another beat in Q3. And I think the other question to ask Frank is, ask him for some specific AI use cases that are showing the way that Snowflake can be relevant in the very early days of data and data modeling of next generation generative AI.
Yeah, it looks like our remaining performance obligations for Snowflake coming in at $3.5 billion, which is about in line with expectations, 30% year over year growth. Phil, I won't leave you out though, because all of this is still setting us up for Jackson Hole at the end of the week, right? So once we get to know this tech stuff, we got to look more broadly. What would a surprise constitute for you, or particular detail that we need to listen for? A surprise would be, John, listen, they expect one more hike at the end in September and November. That's what they told us in June. A surprise would be that they increase that amount or explicitly point to the fact that they really need to get growth back to below trend to have any chance of controlling inflation. That's just not the case, John. Inflation is falling. It's working, right? We have a very good labor market. Things are okay. So that would be a surprise. And just real quick on kind of the macro theme from AI, listen, if it creates productivity over the next couple of years, which we expect it would, that's a really good U.S. story for some of these companies, or from a GDP perspective, where trend growth could be a little bit higher than what was originally expected, John. So I don't want to completely ignore what's happening over the next
said another way,
but for more, it's more of a structural story than a tactical story.
Said another way, and I tie it to Friday as well. The deflationary impact of innovation and AI-driven innovation, all these co-pilots, is going to be a big upside, and you can have deflationary impact as well as growth. We've done surveying, we've seen surveying of some of the early price points that the Microsofts and Salesforces and others are putting out there for their AI enhancements, like $30 per user per month. And people are saying we're getting a lot of value out of this. So there's both going to be deflationary effects and there's going to be revenue growth and upside for a lot of these companies that can deliver compelling Gen AI apps.
Let's see if those deflationary impacts and the interest rate impacts, trying to slow things, if those are working fast enough when it comes to inflation. Phil, Matt,
And
thank you.
John, the answer is the 60-40. You know it.
We talked about it before. I'm with you. Investors need to be aware. Even though they've forgotten those numbers over the past decade, apparently. Good to see you guys. Speaking of data, Splunk earnings are out. That stock is spiking. Burton Coombs has those numbers.
That's right, John. The company beating on both the top and the bottom line, reporting adjusted earnings of 71 cents a share. The street is looking for 45 cents on revenues of 911 million versus an estimate of 886 million. Gary Steele, the CEO, says second quarter represents a strong quarter of growth, execution, operating leverage. We generated 16% annual recurring revenue growth as we reduce our non-GAAP operating expenses by 3% year over year. They actually saw a doubling, 111% increase, or 111 increase in the number of customers that have annual recurring revenue of $1 million. They are boosting their third quarter guidance to 1.02 billion to 1.035 billion in revenue. The street had them at 981.2 billion. They are also boosting the numbers for full year. Their efficiency apparently paying off here.
All right, yeah, that stock spiking better than 7% after hours, which if it stays there would take it back to the levels at the beginning of August. Bertha, thanks. Let's bring in now senior markets commentator Michael Santoli to talk about NVIDIA, which we expect in just minutes. Mike?
Yeah, John, just to pan out a little bit, a lot of talk about how NVIDIA has replaced Tesla as kind of the favorite sort of secular growth mega cap plaything of some short-term speculators. Going back to the end of 2019, that basically takes you right before the COVID sort of digital acceleration, secular growth enthusiasm moment. You see that NVIDIA has really caught up. Not quite exactly, but on this bigger chart with those types of gains, it looks pretty close. Tesla's still slightly ahead. And you see the NASDAQ 100, it's gone up 10x more than the NASDAQ 100, which itself has beaten the market. So really a class of two. And right now, they're, Tesla no longer above $1 trillion, but we know that NVIDIA is around $1.1 trillion, 3% of the S&P 500, also with the charismatic CEO. A lot of the same attributes that Tesla had right around there. So we'll see if it can kind of last for a while. But on the valuation side, interestingly, Tesla screens out as more expensive on a 12-month forward PE basis. Why? Because NVIDIA earnings estimates have been racing higher over the last couple of quarters, especially in the last 3 months, whereas Tesla has had its earnings estimates cut pretty dramatically, actually, as they've been slicing into their sale prices and also some volume considerations. So it's still a 40-plus PE on NVIDIA right now based on 12 months forward. On next year's earnings, it's basically like 35-ish or 30, whereas you're up above 50 again for Tesla. And again, I throw the NASDAQ 100 in there at 24 times. So clearly a lot of eggs in these baskets for proving that it can have growth independent of what's happening in the rest of the market, the economy.
A lot of expensive eggs, Mike. Thanks. And yeah, the final countdown is on. We are expecting NVIDIA earnings to come out in just minutes. Team standing by to bring you the results and real-time analysis. We're going to pay some bills right now. Overtime's back in 2. eligible. Welcome back. The investing world is waiting with bated breath for those second quarter numbers from NVIDIA due out any moment now. Joining us now, Stacy Rasgon, first senior analyst who has an outperform rating on the stock, and James Demmer, Main Street Research CIO and an NVIDIA shareholder. Stacy, the guidance is what I'm focused on here. I mean, we assume they're going to meet or beat their number they expected for the quarter we just expect to see. But how strong is this going to be? The whisper number is like above $14.5 billion. Realistic?
Yeah, maybe, right? I think right now, like, they're going to sell everything that they can make. So in the near term, supply, I think, is going to be the big driver, especially on the data center side. Yeah, I do think the whisper numbers are probably 14 billion plus and probably 10 billion for the guide for data center. If the supply is there, they will be able to sell that. I think the demand is there, at least.
Okay, James, how much are investors going to care about the supply versus the demand?
I think they are going to care, but I think Stacy's right. I mean, this is a good problem to have. Demand is not a problem for what we call the superhero of AI, and sort of leading this technological sort of transformation that's probably got legs that's going to go on for years. So they've got demand for sure. The question is, are they getting parts and pieces from Taiwan Semi and so on? So I'm very interested to hear Jensen talk on the call about supply chain issues.
Stacy, it seems to me that this is one where you really do need to pay attention to the call versus just the initial numbers or even the initial guidance, because I wonder how durable is this demand? How piling is going on? Do you think NVIDIA has a true sense of that?
What's going on?
At least data centers gone longer lead times and more.
SMH is going.
They probably got visibility actually for a few quarters, but as we get into next year, clearly that is the question. Is this like a new baseline for growth, or is it, panic buying and pull forward, right? And we'll see what they have to say in terms of both the supply and demand as we get next year to get engaged with that.
I'll mention I'm starting to see those numbers cross. We'll bring them to you as soon as we've got them solid. For now, James, how important is it in this commentary to hear about the partnerships that NVIDIA continues to forge to try to build an ecosystem and a moat around the AI strategy as AMD, even Intel, some others are trying to break in? Hold on, got those numbers now. Christina Partsinevelos has them. Christina?
Wow, we're talking about revenues of $13.5 billion, beating the $11 billion estimated. Sorry, the reaction is quite enthusiastic. EPS of $2.70. The street was estimating $2.09. We're talking about Q3 guidance. This is where everyone wanted to see what was materializing for all of this AI hype. $16 billion. The street was anticipating $12 billion. So $16 billion. From the report, we're just also seeing data center revenue coming in too at $10.3 billion. Estimate was $8 billion. You can see the stock jumping 5%. John?
Yeah, I mean, wow is appropriate. This reminds me of a
I know, but I shouldn't show emotion, right?
That's a beautiful thing. That's a beautiful thing.
I remember a quarter from Apple about 10 years ago that was similar in that wow sense when people were first beginning to realize the full impact of the iPhone. James, the stock is up at least 5% so far on these numbers. 16 billion on the guide. That's the number that I can't stop looking at here. What do you want to know about that?
It's a superhero number. I mean, they have got the lead, and yes, there'll be room for AMD and everybody else later on, but they've got just such a lead, and we're excited to listen to the call and sort of see where that revenue is coming from. And I think Stacy had mentioned a couple of those sectors, which, again, that comes to our attention. But here again, this is a company that you got to own, in this new tech bull market is what we look at it as, and this is the leader.
I mean, Stacy, 13.5 billion, up 88% from Q1, a little more than doubling from a year ago. So, I mean, if you were just expecting them to meet the guide, you got upside surprise, not even getting to the guidance for the current quarter.
Yeah, so look, nobody was expecting to just meet the guidance, and so they blew that away. And look, people were hoping for at least 10 billion on data center on the guide. They did more than 10 billion in the quarter.
All right, folks. So NVIDIA earnings are out. They beat by a huge number. Holy shitski. That garners some curse words.
still with us. Anything else?
Yeah, I
from
was.
this? I mean, once the shock wears off, looking through the
I
numbers,
know
what else
my
do you see?
reaction right away. This is in real time, but the adjusted gross margins also stands out to me at 70%. When you compare that to Intel, with its latest
Wow.
adjusted gross margin,
Holy smackerels.
was at 40%.
Jeez.
70% versus 40%. And I'm 71. Okay, and then I'm seeing also here
509 now.
25 billion buyback also that is in store here. So I just got to go through that to get you more.
Wow. NVIDIA. What a beauty, NVIDIA.
Intel's hoping, Stacy, to get back to the 60% margin range. They've got fabs that are underutilized. That's an issue for them, as well as they're just behind in the technology.
Here we are.
We expect some announcements from them next month where they hope to make the case of catching up.
Wow.
Talking about Intel, even if you're talking about AMD, what position does this put the competition in? Intel, AMD, even Amazon and the hyperscalers.
That's pretty impressive.
That their AI capabilities from a value perspective are going to allow them to stand up against NVIDIA.
Well, I mean, clearly, nobody's having a problem paying the prices that NVIDIA is charging for these parts. Now, you could argue that the competition isn't there yet, but I mean, nobody's going to be playing this much.
Holy smokes. Wow, that's impressive.
I don't know what it means for the others. I mean, they're quite a bit farther behind. Now, you could argue that maybe the opportunity itself is large enough that even if they just get the dregs, it's big enough for the others. Maybe that's true. But even if the opportunity is that big, this is the one I'd want to own, I think, of all of them.
Christina, you got more?
Yeah, so 2 points.
Jeez.
The board of directors approved an additional $25 billion in share repurchases without expiration, and they plan to continue with these buybacks later this year. The other point too I wanted to make was gaming, contributing, about 24%, 25% of total revenue. Gaming came in at $2.49 billion. The street was anticipating 2.38. So that category, we can't discount it. I know it's all about AI, but it's still coming out strong.
Wow.
Despite some other players.
Yeah, kind of like the Mac.
Wow, wow, wow.
Line in Apple's report. I mean, the iPhone is driving it, but you remember that older core business as well. James, to what degree do those other businesses matter in this report, or is investor attention going to be really focused on data center, on AI, perhaps on hyperscaler buying patterns?
I think those are the businesses that matter to investors. I mean, that's really where the lead is. I mean, the others are important, but those are the businesses that are going to matter the most. And I think these numbers, these superhero numbers, are going to alleviate a lot of investors from the biggest problem they've had of buying the stock, which is valuation. I mean, it says, oh gosh, it's too expensive. Well, these numbers clearly show us, that kind of growth rate, that kind of demand, PE versus growth, it still makes sense to own the company here. And it is the leader, and it will be a while before anybody can take market share.
Wow, I'm so impressed.
Stacey, we just had someone on yesterday talking about it being unrealistic.
So impressed.
NVIDIA being uninvestable at the valuation levels where it is now.
Man, those people were wrong.
That in a way, as the stock keeps going higher over the years, NVIDIA keeps getting cheaper because you got to keep changing that denominator when you're calculating this out. So what kind of an argument do you think Jensen's going to make about this being, yes, a chip company, but also more than that? What kind of platform and partnership moves are becoming part of this story that perhaps investors would need to believe in and stay bullish?
I mean, so look, to stay bullish, you need to believe that the numbers are going up. But I told this story last time, but we launched on it in 2017, and it was 50 times earnings, and it wasn't. It was actually incredibly cheap because the E in the price before it was wrong, right? And it still looks like it's wrong. The stock is not nearly, it's not expensive, frankly, if you sort of extrapolate where these numbers are going to go. Jensen's going to have to give people some confidence that this is early and that this is the new sort of trajectory that we can be on. And we are early, right? And I can't imagine that anybody's going to walk off of this call thinking to themselves, boy, this AI opportunity is smaller than I thought it was going into it. We're not going to have that impression from Jensen like once he's done tonight.
Stacey, I just want to mention one thing. I mean, but think about the customer base that NVIDIA has. I mean, these are companies with tons of cash on their balance sheet, and it's a race to win the AI war, whether it's Google, Meta, whatever you want to look at. There's a tremendous amount of cash going towards the super.
Wow, just really impressive. Okay, I'm going to sign off here shortly. I just want to post a chart. NVIDIA.
I think NVIDIA was up 2-ish% already.
already. I'm looking at other AI names. Supermicro was up 7.5% during the regular session. It's now up 4.5% after hours, seemingly in sympathy with these NVIDIA numbers. AMD is up just a couple percent or so. It's up less. But it seems like there's a broader story even than NVIDIA here for this AI.
All right, folks. Congratulations if you took some longs on NVIDIA. Have a great evening. I'll see you in the morning. Ciao.